All right. Good morning, fellow traders, and thank you so much for joining us. My name is Greg Lewis. I'm the marketing manager for Metastock, coming at you from our satellite studio down in Southern Texas, and you are 1 minute and 50 seconds away from day 4 of our huge, magnificent, awesome Traders Conference, sponsored by Metastock, TechnoTrader, CMT and Associates, and Stocks and Commodities Magazine. Our first speaker today is Alex Cole, so don't miss that. We do encourage you to participate. Make sure to ask questions and engage and comment. Do whatever you want. We're pretty casual here, but just play nice, we ask. Don't forget to like and subscribe. If you do enjoy this presentation, do take a second to like and subscribe and hit that bell so that you'll be notified when we have live events like this, which we do actually quite often. And finally, if you're watching this in the recording, go ahead and just fast forward. I usually open like this and then I can edit it out, but on these longer formats, YouTube does not let me edit this out, so just fast forward by me because you don't have to listen to this, but we just do this little opener to give people a chance to get settled in before we start. Anyway, we've got 45 seconds left, and I've got nothing else I need to tell you. Oh, I do have one thing to tell you. If you want to be eligible for the door prizes that Jeff Gibby is giving away throughout the event, make sure you go to metastock.com/traders-conference, or just go to metastock.com. There's a big banner right at the top of the page. Click on that, register for this event, and then you'll be eligible to receive the door prizes we're giving away. You'll also be receiving emails with the recordings of this event. All right, I'm going to go ahead and stop talking, and thank you so much for for attending Successful Trading.
All right. Hey, everybody. It's Jeff Gibby over at Metastock. Hope you're doing well. It's good to see you today. Thanks for coming. If this is your first day at the Metastock conference, welcome. If it's your fourth day, welcome. If it's anywhere between that, welcome. It's so good to have you here. I hope you've been able to kind of watch the sessions that we've had before. I hope you've learned something. You know, a big goal that I've always had to kind of put these events together is to kind of provide just really, really good education. So regardless of where you're at on your investment journey with your investment knowledge and all that kind of stuff, I hope it's been helpful for you. So let me go ahead and kind of get started. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So, hope you enjoyed that. I did. All right, I want to say thank you real quick. Well, to you. Thanks for being here. It's good to have you. If you're watching us on YouTube, make sure to like and subscribe and say hi and chat and ask questions and all that kind of good stuff. It helps a good deal. Neil, it's good to see you. Thank you for saying hi. Also, if, and Greg's going to put it in the thing, if you are watching us on YouTube, we are going to be giving out prizes through the remainder of today and tomorrow. If you want to be eligible to win those prizes, there's a registration link. You can register to win, and then we'll pick you randomly, maybe, if you're random. All right, so there you go. First sponsor one, I think we got 3 sponsors that we're very, very grateful here for. Traders, Technical Analysis of Stocks and Commodities Magazine. You can find them at www.traders.com. I'm going to go ahead and type that in the chat for you. Great magazine. Been publishing since 1982. Been sponsoring our events since we started them 13 years ago. Great group of guys to work with. Absolutely love them. Great magazine. You know, because you just came and showed up early at an 8-hour investment conference. It's important to kind of keep moving forward in terms of your investment ideas, in terms of kind of the way that you trade. All of that kind of stuff is super important. If you get a magazine every month that has good ideas, it's going to be helpful. Traders.com. All right, cool. I also want to say thank you to CMT Association. CMT Association has been a sponsor of Metastock for a few years now. I've been very well aware of CMT. Everybody is. CMT Association is a nonprofit. Their goal is they work as an accreditation organization. We'll get there. Just give me a chance. All right, but they're very well respected. Tyler Wood is actually going to kind of come in just a minute. And yesterday he did a really good class, and he talked a little bit about how much a CMT association and designation can help you. If you have assets under management and you want more, if you're interested in working as a financial planner or a financial advisor or as a trader, there's a lot of things that CMT can really help with. And so if you want to find out about that, cmtassociation.org. And last, and certainly not least, TechnoTrader. Martha Stokes is a super good friend of mine. They run courses all the time about, how to trade. They've got several mini courses that are actually around. And I'm going to go ahead and put their link in the chat here. If you go ahead and kind of want to go get some free courses, kind of get an idea of how Martha speaks, spoiler, she does a great job. You can go right to that link. There's some free mini courses you can grab. And our thanks to TechnoTrader for sponsoring today's event. Big appreciation. So, okay, let me go here and here. All right, and of course we're Metastock. We'll be talking about Metastock. Don't worry. We've been talking about it all week. Has been rated 31 years in a row. We did some math yesterday. I was 19 when we started winning these awards. I didn't work here yet, but I was 19. So can help you test ideas. I love it for market scanning. I run market scans every day. The offer that we're doing, the special offer we're doing is if you buy a month, we'll give you a second and a third month for free. So all of the specials that we're talking about today, including that offer, including GoNoGo, which we're going to talk about in a second, can be found at metastock.com/conf promo. If you have any questions that I'll try and answer them, chat them. I'll be watching it. But you can also chat with us one-on-one, metastock.com/sales chat. You can give us a call, 800-882-3040. So without further ado, Tyler Wood, Alex Cole are going to be kind of talking. They have a very, very unique strategy that I think is really well designed. I think you could objectively argue it's well designed. But what it's looking to, it's called the GoNoGo strategy. I like kind of the spaceship terminology and kind of the ideas that they have. And we're going to go ahead and get the floor turned over to them. So how you guys doing?
Hey, Jeffrey.
There we are. Okay. And I understand that Tyler, I've already been told this, Tyler is sharing a screen. So let me go ahead and throw that over to you.
Awesome.
Make presenter. Okay, cool. Here it comes. I can see you guys. We did an audio check. Everything's working well. So
thank you, Jeff. And welcome, everybody. Thank you, Jeff, for having us back. What an awesome lineup. People like Martha Stokes, other CMT charter holders that have a rational and responsible way to help you understand technical analysis. That means they've dedicated a lot of years of their life studying textbooks like these to make sure that they have a refined, disciplined process. And that's actually what we're going to talk about today. Right, Alex?
That's absolutely right. Yeah, both of us are all about the routine and having that checklist that helps you make those intelligent decisions.
S&P 500 trading above 5,300. Dow broke 40, slightly back below again, but we're in a bull market. And doesn't that feel nice to be at an investment conference where opportunities abound all over the place? But that's not always the case, right? We have been through a raging bull market in 21. Perhaps you traded through 2022 and found things more challenging. Not everything that you buy goes up. So what we're going to talk about today is how to develop that analytical process, simplifying the tools that you use so that you don't face this uncertainty, this lack of objectivity that introduces all the emotions to the trading and investing process. That's what we want to steer clear from. So Alex, One of our favorite quotes, right, from Aristotle. We are what we always do. And if you are an investor or a trader who's new to the markets and you find that you swing wildly from one side to the other, feeling very bullish or feeling very bearish based on the data as it comes into you, hopefully this session will help you develop your own process. Alex, Dylan's driving right now. You've got a teenage son who's on the roads of the New York tri-state area. Talk to us a little bit about the routine that you forced into him as he was learning to drive.
So two things. One, he passed his test first time, so he was very pleased about that. He didn't want to be the kid in the friend group that that had to take the test again. And two, I might change this now going forward. We went fly fishing last week, and I was thinking to myself, man, you've got to have a process here, or you won't catch any fish. So we may change this to fly fishing. But yeah, absolutely. When he was learning, we wanted to make sure that you're as safe as possible. It's really, I mean, you'll get there, Tyler, but it's such a strangely scary thing when you put your child behind the wheel and then off they go. So you want to make it as safe as possible. Fasten your seatbelt every single time. No negotiations, right? Start the engine with your foot on the brake. Check your mirrors before you pull out into traffic. Make sure you signal so the car behind you knows what you're doing, right? And all of this before you finally then engage the gears and drive off. It helps you place the odds on your side and hopefully leads you to becoming a better and safer driver. And you can avoid anyway, God forbid, you can avoid some of the pitfalls of driving a car.
The same thing applies to technical analysis. And that checklist that Alex is talking about for his son learning to drive is something that you should have as a trader or investor as well, because it's going to surprise you. The market always comes up with some way to take everybody, catch people off guard. And so if you're prepared ahead of time with appropriate risk management, a way to identify and participate in trends, you're gonna have a safer journey with your portfolio. Now, the checklist or the tools that you can use to keep yourself on the right side of trends include all sorts of really brilliant ideas. We can go back to Charles Dow and look at confirmations between the indices or multiple time frames. We can draw trend lines and use some of Edwards and McGee's classical technical concepts. We could use more mechanical indicators, right? Looking at moving averages, and the list goes on and on. What we are trying to do as investors, though, is develop our own checklist and be able to see the weight of the evidence. So for the first part of today's presentation, Professor Cole, let's talk about all of these tools that we might use to identify a trend.
Yeah, and whether it's teaching new people to technical analysis when I was working in the city in institutional technicals, or working on prep courses for educational certifications like the CMT, this is where you start, right? You start with identifying trend, because that's arguably the most important skill. If you can find a trend in price action, then you can profit from the majority of the move. And we like to talk about how that's a simple concept, right? You talked about 2021, the bull market, but 2020 into 2021, buy the dip, buy everything, buy things that are going up. That was sort of everybody at home trading during the pandemic. And, it's the simple concept, buy things that are moving up. But it's not easy to do. It's not easy to put into practice. So what we want to do is find things that highlight the underlying trend, that tell us what's happening and reduce the noise. So if you were going to start to build a process like this, and this is how we often start with new people to technical analysis, you're going to create your own checklist that walks you through that process of trend identification. So the first thing you might do is just look at the chart, eyeball the chart, and sort of say, okay, we were moving down from left to right. Now we seem to have started to move up again. So at what point am I able to identify a change in technical environment? That's what we're looking for, right? A change in the trend so that we can then participate it as it progresses. But of course, that's very subjective and it's very visual, and we want to make these kind of things as concrete, as testable as possible. So the first thing you might do is turn to your toolbox of indicators, and you might put on something like the Donchian channels, which helps us automate the process of finding higher highs and higher lows, which is what we're really looking for when we're identifying trends. So in this chart, you can see the red and the green line moving down as price makes lower highs and lower lows. And then now on the right side of the chart, we've seen that red line pop higher in the first of the new higher highs, telling us perhaps something's changing. So Donchian channels are looking back at a period and just asking the question whether or not price is the highest it's been during that look back period. And if it is, that red line will move up higher, or the green line will move up based on the lows. So the Donchian channels, incredibly, if you want to look it up, very, very interesting, because they were the featured entry point for the turtle traders back in the 80s, that experiment with Richard Dennis, and he wanted to teach people how to trade. Donchian channels was one of the main criteria they used to identify trend. But you can move on from there, as we all do. We want to have a confluence of factors that help us make our decision. Simple moving averages are going to be on every chart we look at, really, around the world. Whenever we're meeting with clients, everybody has simple moving averages on our charts. We didn't even used to categorize them as power technical analysis when we were working and building product. It's just too prevalent. Everybody has a moving average, so you can't really identify somebody as a technical analyst anymore just because they use moving averages. That's how important they are. And if one moving average is good, multiple moving averages are better. We've seen people with whole ribbons of moving averages, whole waves of them, but most people will have at least two, where you're looking at the crosses, the interaction between those moving averages. Because if price has moved above an average, that's inherently bullish, because it's telling us that price is trading higher than the average of its past prices. And if that short-term average crosses above a long-term, that gives us an identifiable signal of prices trending in a new direction. So we're going to have probably moving averages on our chart. And if you move on from there, you could put an indicator such as Bollinger Bands on. The work done by John Bollinger, fantastic. It's always amazing to hear him speak at the CMT events that we go to. What a great mind. And hopefully what we're doing here is just trying to build on the things that have been done before by these great technicians. And Bollinger Bands, of course, one of the best. And what he did was he put bands around price based on standard deviations. So if price is trading within 2 standard deviations of the bands, that's fairly normal, right? We know that from our math classes, if we can think back eons ago, 2 standard deviations will encompass roughly 95% of any data set, of a normally distributed data set. So we know that's a vast amount of information that should be within those 2 standard deviations. Of course, financial information is not normally distributed, but if something is moving outside or to the edge of those bands, that's very significant information. So now you can see on the right there that price has jumped outside of the Bollinger Band as well. That's interesting, and that's important to note. If we move on from there, we might go back, like you mentioned, Charles Dow, a little earlier. We might go back and throw volume onto the chart, which is one of the first confirmatory indicators that we have that's not derived from price, but that gives us a sense of market participation, or we like to think of it as enthusiasm, right? If you see, like we did here again in that same sort of era, price jumping higher on heavy volume, that tells us that there's fairly healthy enthusiasm behind what we're seeing in price. So we want to make sure that the volume is not telling a different story from what we're seeing with the price chart. And then let's just do one more, because we're running out of room on the left side and we're already complicating the chart a little bit, but you could put an indicator in the lower panel, right? So we've put MACD on here, one of the more common indicators, and there's lots of ways to read MACD as well. But one that I like is to look at MACD and where it is relative to its 0 level, because if that tells us that we're in a bullish environment, because it's the difference between the 2 lines of MACD. MACD are moving averages, but they're exponential, so that means they respond a little quicker to price movements. But looking at where these lines are to 0 tells us, okay, we're moving higher. That spread between those 2 lines is a positive value, meaning in the shorter term, prices are rallying faster than in the longer term. Of course, there are other ways to use MACD, looking at the crosses between the MACD and the signal itself. Many, many ways to use all the indicators that are on this chart. But if we stop here and take a breath, take a pause, we can see that somewhere in this right side of the chart, we should be, after stepping through our checklist, fairly confident that we're recognizing a new trend in the upward direction. Now, the question is, where is it? Is it when price crossed above the moving average for the first time? Is it when the MACD crossed its signal? Is it when we wait for all of those to line up? Do we need everything to tell us that that's the change in trend? Do we then wait too long? Are we then a victim of analysis paralysis? Or do we become subjective? Do we change our rules? You know, all of these questions pop up. But this is what we're faced with. And then we have a fairly complicated chart. And just to put just last point, this is a simple process. This is 5 things, right? We both worked with clients and people in the industry that have a list that's 10, 12, 15 checks to give them a confidence that they're recognizing a change in trend.
And actually, that is the responsible way to do it, right? To look at the weight of the evidence, to have the full mosaic of all the information that's available to us to make reasonable and rational decisions. We want all of this information. Each one of these indicators is valuable. But as Alex is pointing out, emotions come into play, right? You've just lost how much on your Apple holding on that trade? How eager are you to get bullish again? And our dear friend Walter Deemer has a great quote. He says, "When the time comes to buy, you won't want to." And I think the reverse is the same, right? We've had a wonderful bull run. When things start to correct, well, that's just a correction. And so how do you determine objectively and quickly when to get out of trades and when to stick with them? As Alex was saying, the process can go much wider and deeper than this. And the institutional analysts that we work with definitely build a very complex and sophisticated mosaic. They also understand ways to simplify their process when communicating to clients, when delivering a trade decision or recommendation. So the challenge with technical analysis, and certainly it was my experience going through the CMT program, every new concept, tool, indicator that I came across was immensely powerful. These were really intelligent and innovative men and women on Wall Street and around the world, Bay Street, Dalal Street, who brought us these amazing tools. But the challenge with technical analysis is that as you add additional pieces to your checklist, you begin to obscure price action. And hopefully, if there's one thing you take away from our presentation today, it is that price is our most important indicator of all. That's how we get paid. It's where the price trades at and where we're buying and selling. All of the rest of the information is critical to making that analytical decision, but we can cause analysis paralysis. As Alex mentioned, do we wait for all of the checklists to be confirmed before we take an entry or take an exit? And so with GoNoGo charts, the idea was to collect that weight of the evidence, but to create a new data visualization that simplifies what we're looking at on the chart without losing any of the important information, but to help us make those timely trade decisions. So what we're looking at here, Alex, is a GoNoGo trend chart on Metastock. And Alex, talk to us a little bit about these 5 colors.
So this is just an example of the chart. And what we've done is by using 5 colors, we've kept it fairly simple, but we've included more calculations in the background than what we just walked through. There's also momentum analysis, there's volatility, there's a whole lot in here that we would go through before we come up with this chart. But what we wanted was a clearly identifiable trend in the up direction and a clearly identifiable trend in the down direction. And those are our go and no-go trends. In the go direction, we have 2 colors because we wanted to include an understanding of weakness, right? When the trend is weak versus when the trend is strong, because a weak trend, we want to pay attention, and perhaps there'll be something that will lead us to believe a trend change is coming. So if you see the middle portion of that chart, it's made up of strong blue colors and weaker aqua colors. And those are our 2 colors that express the strong and weak form of the go trend. In the no-go direction, we have pink and purple. Purple being the stronger color. When prices move fast in a down direction, we're going to see those purple colors. And when we see sometimes a weakness in the no-go trend, it could be some sort of price rally on some sort of relief rally that maybe will lead to something better, but maybe won't. We'll see pink bars. And then these amber bars are our go fish bars. And those are when all of the information in the background, we are not meeting enough criteria to identify a trend in either direction. So what we do is we paint the bars amber and we call those our go fish bars. So we've got go, no go, and go fish. And if you've seen us before, you know that comes from the quote of Jesse Livermore, who said, there's a time to go long a time to go short and a time to just go fishing. When you don't get what you want from the market, then there's no need to force yourself to do anything or to have even an opinion on direction, right? You can just say, hey, listen, right now we are neutral, or we are undecided, we are uncertain. And you'll often see those amber bars in transition periods between trends. You'll often see them in choppy markets. So those are our 5 colors, two colors for strong and weak of both sides, go and no go. And that'll help us identify what's happening from a trend perspective.
Now, just a few months ago, I was with John Bollinger in Dubai at the CMT Global Investment Summit. And in Dubai, he told everybody that the market will give you 2 gifts. One time in your career, you will be able to buy the absolute top. And one time in your career, you'll be able to buy the absolute bottom. And he said he hasn't retired yet because he's still waiting for the second one to come through. Now, with trend following, right, all of the principles of trend following is to participate in the meat of the move. We're not trying to buy the absolute bottom, and we're not trying to time the absolute top. What we're trying to do is collect the weight of the evidence to decide, to determine when the market is giving us those conditions of go trend. So we've been in a no-go trend here off the chart, and it stops going down and starts to recover. But this is still a counter trend a relief rally until determined otherwise. So you can see how it cycles through the colors. As it was in a downward sloping no-go trend, it weakened to pink bars, showed us a period of neutrality, and then entered the go trend. And I want to make that point. We're going to get to momentum analysis later on in the second half of this presentation. We talk about seeing those signs of exhaustion, having some earlier entry points or earlier exits. But when you think about owning a security and participating in the meat of the move, you don't need to buy the absolute bottom. Bottom fishing can be very dangerous to your portfolio health. And you don't have to get out at the absolute top. You just need a sensible way to determine when that trend has actually ended. So the person who said this best of all, I think, is Mark Abraham, who is a celebrated trend-following hedge fund manager. And this is why Alex and I are so passionate about technical analysis. And my MBA program was a strict fundamental diet. I spent years just trying to understand financial statement analysis, understand the macroeconomic picture. But Mark told us that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. Now, all of that fundamental information is reflected in the price. Everything that's known, everything that we don't even know that we are missing from our analysis as fundamental investors will show up in the price of the security. So for Alex and I, as trend followers, understanding when the market is giving us that signal for a trend is critically important to our methodology. Now, here's the good news. We're really proud of the work of building this algorithm and then taking it not just from a black box, but spitting it back into a form of data visualization so that each individual trader can use that according to their own risk tolerance, their own time horizon across all securities. And we're so proud of that work, we just give it away for free. So if you are a Metastock user, you can find the GoNoGo trend indicator right in your templates. You can apply that to your chart and have a go. See how it works for you. And the only thing we would ask in return is to let us know how it's working out for you. What time period do you trade? What securities do you favor? Are you an equities person, a Forex trader? Shoot us an email, info@gonogocharts.com. Happy to answer any questions, but also we love hearing from the community about how these tools might help simplify some of those trade decisions. So let's go through a few more of these, right? Looking at the S&P 500, we can see that a tool like GoNoGo Charts is going to remove the analysis paralysis. And like all of the rest of you, I too get seduced by relief rallies, right? So when we were in a no-go trend back here in 2022, this was sharp. It was volatile to the upside. It inspired a lot of hope for a lot of investors that perhaps the end was already in. And that is the trap. So when we look at a chart like this on a weekly time frame, it's a longer term view than perhaps everybody on this call uses, we can look to see how to avoid some of those relief rallies or avoid selling out too early from a trend that still has energy in it. right? We want to stick with these trends through a mild correction. And it's terrifying to do so. When the market pulls back 5, 6, 10%, you may feel the need to get out. And there's certainly plenty of negative news to inspire fear in all of us every time of every day. So the idea with GoNoGo charts is that you can trade a little less, stick with trends through the full length of their move, and avoid the risk and uncertainty of downtrends. We also know from our good friend Charles H. Dow, over 130 years ago, this gentleman with no computers, no access to rigorous data sets, there was no AI in Charles Dow's time. The OG technical analyst just looked at ticker tape. And he was an accomplished nautical sailor, and he recognized that markets move across multiple time frames. So in this next portion of the presentation, what I want to encourage everybody on the line to think about is, when you are doing your analysis, what time frames are you looking at? And then when you're doing your execution, what time frames are you looking at? They should be different, and you should use multiple time frames to your advantage. So what Charles Dow observed was that in markets, there is a primary trend, and he compared that to the tides of the ocean. So this longer term time horizon is going to be driven by the fundamentals, by expanding GDP, a bullish economy, and that's going to be the underlying drift of what the markets are doing. That primary trend being like the tides of the ocean, unflappable. He also noticed that there was a secondary period, like the waves on the surface of the ocean. And that comes down to a little more of the interpretation by the investor community of that fundamental data that they have access to. Now, you'll notice when price is moving, it can go well below or well above the primary trend. Picture this as like a very long-term moving average of price action. It has a subtle drift up and to the right. Our secondary period, and this is where a lot of technical analysts started to really make hay, was the idea that you can anticipate some of this investor psychology. So we are depressing price below its primary trend or well above its primary trend. Picture waves hitting the beach at low tide versus high tide. It's gonna look and feel different. And then Charles Dow also identified the minor period, or the tertiary trend of markets. And that's the intraday or day-to-day fluctuations of price action that are very speculative, that are highly driven by human emotion. And there are many technical analysts that have made great fortunes off of these very short time frames. And you can see that price moves above and below that secondary period. So when you hear the phrase that markets are fractal, what they're trying to tell you is that the technical toolkit can be used in the exact same way across all time frames. And that is the case for GoNoGo charts as well. So we don't have to just use this on a weekly basis. Let's take a look at that S&P chart on the daily. Alex, walk us through this one.
Yeah, so as you said, multi-time frame analysis is so important. And if we're looking at this now, we've stepped down from the weekly, we're looking at the daily, we're in a strong go trend, right? And we know we just hit all-time highs, and we know that we are now trending higher. But to your point from earlier, it's a little scary sometimes to buy all-time highs, right? Mm-hmm. And so when the time comes to buy, you won't want to. That's what you said. And when we were talking about this a couple of weeks ago, we're in a no-go correction. We're seeing a lot of uncertainty. We saw consecutive amber bars, and then we saw the go trend close to all-time highs. People expecting resistance at that level maybe, and so it was a bit of a scary time. But the weight of the evidence said that the trend condition had returned to go. So the go condition has been in now for a couple of weeks, and it's strengthened to the stronger blue bars. Now, we don't know what happens on the right side of the chart, but just to illustrate that a new trend can happen at any point, whether you're at all-time highs or not.
And this is I was toggling back and forth from the weekly chart. So when you think about your risk tolerance and your time horizon, this little counter trend correction, this little pullback on the weekly chart, if you're executing on a daily time frame, you would have been out. You get out of no-go trends, but you come back in when the bull market resumes and we're back into go trend conditions. If your execution time frame is on the weekly, you might look to monthly or quarterly charts to get that context and that history, as many institutional portfolio managers do. Now, it goes further than this. The daily time frame might be your primary trend, and you might be executing at a even lower time frame. Alex, talk to us about what this intraday 30-minute chart looks like here at all time.
Yeah, and also depending on your role in the financial markets too, right? You might be a trader working for a PM. And so you might have been told that, okay, now the trend is back in place. I want you to, to pick up a position, whatever it might be. And you might step down to get sensible entries, or you might just be an individual investor who wants to trade in the direction of the trend. So your market perspective is we're in a go trend. Your daily is now back in a go trend. So we step down to the 30 perhaps to take those trades. And you could say that perhaps then you'd only take go trends because you wouldn't want to trade against the trend. So when you're talking about the weekly being in a go trend, the daily being in a go trend, you might not want to be thinking, let me look for no-go opportunities, right? Because we're trading against the trend then. So you step down to something like a 30-minute and you can trade around the larger trend.
Mm-hmm. Folks like Alexander Elder. Dr. Elder has done a great job of using multiple time frames to his advantage to find those buyable dip opportunities. And I encourage you to check out some of his books. Now, Alex, this can't be just an equity-only solution. When you go through the CMT program, you learn a lot about intermarket analysis or cross-asset relationships and the correlations between those data sets. The legendary John Murphy, also a CMT charter holder, gave the world a much better understanding about how interest rates and the fixed income market can affect equities, how currencies give us a sense of global trading, and certainly the trends in commodities have a play on all of our investments. Now, whether you trade equities only or you're comfortable in these other asset classes, I encourage you in your analytical process to definitely pay attention to what's happening across the board, even if your investing universe is limited to just equities. And many of the institutional portfolio managers we work with have a very strict mandate, not even just to equities, but even the style of equities they're allowed to invest in. So, Alex, let's do a little round robin, do a little quick multi-chart layout. Where are we from a cross-asset perspective? What's the context of the market that we're investing in?
Yeah, of course. And you can get a quick sense just visually by doing something like this. You can create multi-chart layouts, of course. We've just pulled individual charts into this PowerPoint slide, but equities are a go, right? We talked about it. We've just talked about it at length. Equities are a go. Treasury bond prices have re-entered a go trend. So that's important because if we know how bond prices and rates work, they work inversely. And so Treasury rates are cooling off now, which could continue to help equity markets move higher, perhaps. Crude oil on the right there, you can see crude oil is a weak no-go. We had a nice little run in oil, but that has rolled over, and now we're in a no-go trend. We're threatening to make lower lows, so we'll keep an eye on that. And then if we move to the bottom left, we've got Bitcoin. Bitcoin, great run early in the year. We've seen it move sideways and lower. That we saw that no-go correction. We've seen some amber bars of uncertainty and now re-entered a go trend close to challenging these prior highs. So we're starting to feel bullish about Bitcoin again. The trend has changed back to a go. Strong blue bars. We'll look to see if Bitcoin can set new highs in the coming weeks. Gold on the right. From Bitcoin, gold has been incredibly fast moving for the last 3 months. We saw a strong correction. If you see that continuously painting weaker aqua bars there in April and into the beginning of May, but then it returned to strength, and we've seen strong blue bars now for a couple of weeks, and that's taken us to slightly higher highs. So gold still doing what it's been doing, and if you know the context of gold, the 12, 13-year pattern that we've been looking at with the cup and handle, gold well and truly has broken out of that level. So anything we're doing at these sort of levels is bullish for gold, and we can see that we've just made a new higher high. We move to the right. We're looking at the dollar, and we can see that the dollar, this is actually the DXY, I think, Tyler. This is the dollar index. I need to change that ticker, but the dollar index has been moving higher, setting some higher highs and higher lows, but has now entered a period of weakness when we're looking at the dollar index relative to a basket of its peer currencies.
Absolutely. Now, for us at GoNoGo Charts, data visualization is sort of the lifeblood of what we appreciate about technical analysis, and it doesn't really stop here. So a multi-chart layout is very helpful You can just get a sense of the trend conditions. When we're seeing the price action, we can do very simple things like spotting areas of potential resistance as we're approaching these prior highs. But what we've also done with our institutional clients is to take just the trend model and develop some heat maps, right? So we can look at those same 6 charts, that cross-asset layout, and just get a sense over time on how things have rotated, what has been leading or lagging in the market. And we can see that we've come out of that no-go in equities. It's the same 6 charts that we just looked at, but seeing it in this view just really helps us take in a ton of information very quickly to get a sense of that environment that we are going to be trading in. Now, if macroeconomics, if cross-asset correlations aren't your cup of tea, or it's not something that you're very familiar with, we do publish weekly subscription research for all of our institutional clients, and we'd be happy to have you give a free trial of that as well. We publish every morning something called Flight Path. It's a longer narrative form, just looking at where we have come from the last week and spotting that top-down approach. So starting from the asset classes, getting into the sector groups, and then looking at individual securities. As well as Saturdays, we like to practice what we preach. Step away from your trading routine and just get a sense of longer time frames, look across global assets and global equities to get a sense of where the opportunities lie. So those 2 pieces come out each week, and if it'd be nice to have us over your shoulder or in your inbox, we encourage you to check that out as well. GoNoGoCharts.com is our site, and there's a whole bunch of historical research up there. You can check out what we've been writing for the past 4 years. Let's move on, Alex, and congratulations to all of you. You're past the 50-yard line. We're going to cruise through these next several slides just to illustrate this idea that the analytical approach is very important, but so is your trading discipline. And hopefully that's coming through already in the talk. Alex, what are we trying to do as trend followers?
Yeah, so as we move forward and we build out the complete chart, including all the components of technical analysis that we think is valuable to give you that overall picture of what's happening, we're trying to participate in trends. We're not ever trying to predict. We like to say we don't know what happens on the right side of the chart. We're trying to take what the market gives us and react responsibly to that. And if we can do that, then it removes the doubt and the confusion and the uncertainty to some extent, because we are putting our faith in a well-defined, well thought out, logical process. If we do that, we can remain objective. We can then stick to our rules because we know that they're based on something real and something sensible, and we can then act responsibly and hopefully with a little less emotion, as we know that can really get the better of us when we're trading.
Now, yesterday, for those of you who checked out the session from CMT Association, I talked about some of the rigorous research that has come out of the behavioral finance community. And we talked about how challenging it can be to stay profitable over the long term as a trader. Those results from a lot of research from Terence Odian and his research team showed that directional bets were correct, but position sizes were wrong, meaning the trading discipline wasn't present. Even though they had a high enough win rate on their process, they were picking directional bets, those traders suffered losses because they did not let winners run, they did not cut losers short. And that comes down to the behavior. That comes down to the analysis paralysis. So in yesterday's presentation, I showed this expectancy formula, and all we're doing is we're taking the percentage of winning trades multiplied by the profit ratio, wins versus losses. And what's encouraging to me is that we don't always have to be right. And let's just pick on this dot real quick. This is a 50% win rate, meaning if your entire analytical discipline, you didn't even use charts, you simply flipped a coin to decide whether to buy something and put it in your portfolio or not. So 50-50 chance that you own something. You could still be profitable, provided you have the right kind of risk management tools in place. Do you let the things that are trending continue to trend and add value to your portfolio? Do you immediately recognize when that trend has ended and get out? And so some of the greatest hedge fund managers on the planet are living somewhere up here, where they have widely diversified funds. People like David Harding at Winton Capital in the UK. He's going to be holding thousands of securities at once, small positions, but he can take a lot of bets and know that he's going to cut losses short on many of those trades. as long as when he can identify a winner, when he can identify that the trend has taken shape, he can add to that position, really lean into the things that are working and find those outsized gains that will cover all of the losses. Now, I'm moving quickly and simplifying the trend following sort of tenets of this discipline, but that's what it comes down to. It's very simple to say, it's very difficult to execute. So as we look at the complete chart from GoNoGo charts, we're going to show you ways that you can lean into those things that are working, ways that you can objectively identify viable dips. And Alex, let's go through this complete solution from GoNoGo charts.
Yep. So we've looked at trend. We've talked about the importance of having that trend identification checklist. The first place people are going to go to after that is momentum analysis, right? Because it tells us so much about the strength of the trend. So we're going to talk about the GoNoGo oscillator, which is our indicator that takes the same approach, blending the foundational principles of momentum analysis into one indicator that allows us to get the information that we need. We're going to talk about GoNoGo icons. These are data visualization icons that bring us back to the price chart, but those are based on the interaction between the study of momentum and the study of trend. And then the GoNoGo squeeze, which looks at volatility. Volatility is that last piece of the puzzle where we want to identify those breakouts, those surging market enthusiastic moments. And so we'll look at ways to do that with volatility, basing our indicator on the works of Bollinger and others that did a lot of volatility squeeze analysis. And then, of course, just to mention in that last ribbon along the bottom, we also have volume incorporated. So we'll talk about that a little bit as well.
All right. So you got the idea. We want the weight of the evidence. We want to blend many, many indicators to our advantage when we're thinking about trend. We applied that same principle to momentum analysis. And for those of you who are kind of new to technical analysis, the idea of trend following is using lagging indicators. By definition, we're looking in history to see if price is trending higher. Momentum indicators are leading indicators, which means we are looking at areas of exhaustion in those trends. And there are many. We're not going to build the whole process for you because we don't have time for all of that today. But think about rate of change, stochastics, the MACD, RSI from Wells Wilder. If I haven't named your favorite, I apologize. But they're all in Metastock, and they're really powerful tools. When we're looking at momentum, we're looking for areas of trend resurgence or trend exhaustion. That's the very nature of these tools. Now, for the GoNoGo chart and the GoNoGo oscillator, we're combining many, many forms of momentum analysis into a single oscillator. And if we had time, we'd show you all of the differences between these different indicators. What I'll point out here is that the GoNoGo oscillator is range bound, just moving from -6 to +6. And we have this objective zero line, this area of neutrality. And so for Alex, why don't we talk through a little bit of the GoNoGo oscillator and that volume component that we've embedded?
Absolutely. So when we talk about the oscillator, we want to get the information from traditional momentum analysis just as much as we do from using it in a sort of a new way that we're going to talk about on the next couple of slides. But we still want to identify areas of overbought and oversold. If you think about something like the RSI, when it goes above 70, that's overbought. And we want to find that information so that we can put it into our analysis, and maybe we start to think that price is overextended at those levels. Maybe we start to think that momentum might wane as it comes back into neutral territory. So we want to understand where those extremes are, because it tells us a lot about the strength of the price move. And we also want to identify divergence. Divergence is an incredibly powerful concept across technical analysis. We want to look for areas where momentum is not doing what we think it should, given the movements in price. So you can see there where we're highlighting this higher highs in price, but lower highs in the momentum oscillator. And so you can still use our GoNoGo oscillator in the same ways that you would use any good traditional oscillator. Our oscillator is bounded in a range between -6 and +6. So it's quite easy to take in the values, but we're looking for that traditional information. And like I said on the slide before, we're also incorporating volume, because when that ribbon goes to a dark blue, that's how it's implemented in Metastock, that tells us volume has increased. So just looking at the very right side of this chart, the most recent technical change, we can walk through the process very, very clearly. We've been in a go trend. We've been making higher highs and higher lows. We see some divergence from the oscillator as we make our last high. Then we see weakness in the indicator as it's painted a couple of aqua bars. Then we see an amber goldfish bar as we break below the zero line. We're going to talk about the importance of that zero line coming up here in a minute. And then volume also is very heavy on that move lower. So you can see volume increasing there, market participating, buying into the new no-go trend on strong purple no-go bars. So you can see that whole thing has changed completely, right? So if this is the beginning, if this was the S&P 500 in 2008, this was the beginning of the financial meltdown. You've had 1, 2, 3, 4, 5 reasons to no longer be holding equities in the stock market, right? You've been told, okay, now we're seeing weakness in the go trend. Okay, now we're seeing momentum waning. We're seeing a break below zero on the oscillator. We're seeing a neutral bar on the go-no-go trend. We're seeing volume pick up. We're seeing a no-go bar, right? It makes me remember a very not funny story from when I was on the bus going to the city back in, I think it was, it must have been mid-2009. And a gentleman who worked in finance was sitting next to me saying he wrote an article in February or whenever it was of 2008 saying the markets were unhealthy. And I said, wow, that's amazing. He said, yep, didn't do anything about it though. Didn't take any of my money out of any of my portfolios. And so that's crazy. If you can see all those signs, and that's what we're trying to do, is just save the pain of some of these no-go trends that turn into really destructive technical environments.
Absolutely. What an anecdote, right? To do all the analysis and then not take action.
Yeah.
15 years ago, when I first got to the CMT Association, Alex, I met a gentleman named Ralph Akampora, and he has been like a grandfather to me and quite the mentor. And of course, my personality was to try to impress him. So we were sitting in the library at the CMT Association, and we had all of his hand-drawn charts from his Prudential days of over a decade of the Dow, charted in pencil on graph paper. And they had also calculated and applied indicators to the chart all by hand. So I said, "Oh, hey Ralph, that's where RSI got overbought. That's the sell signal." And he said, "Oh, Tyler, you don't sell when it hits overbought." And he sat me down and he talked to me about momentum. And he said, momentum, an overbought signal is inherently bullish. It's when it leaves overbought that you can see there's a period of perhaps exhaustion or weakness ahead. And he said, picture a beach ball if you're in a pool, and you plunge that under the water, so it goes all the way to oversold. He said, now imagine you release that ball, right? You don't just buy an oversold condition. Imagine you release that ball and the beach ball stays underwater. First, you're going to ask yourself, where the hell did I get this beach ball? But also, something's really wrong, right? When things stay overbought, it's really bullish. When things stay oversold, something's really wrong. Now, from the original work of George Lane in the 1950s with stochastics, or Wells Wilder in the 1970s with RSI, these indicators were created at a time when markets were mean reverting, where everybody in the business was trying to figure out how to sell at the top of the channel, buy at the bottom of the channel, wash, rinse, repeat, right? They wanted to capture a mean reverting strategy. However, folks like Connie Brown and Andrew Cardwell have developed they've written extensively about how we can use these same tools in a trending environment. So bear with me here. As Ralph was teaching me momentum, he said, picture a baseball in your glove. He said, momentum is when you throw that ball up in the air. The fastest it's going to move is right when it leaves your hand. That's going to be the thrust. And you're going to throw that ball, it's going to reach the apex, the highest point that it can go. And then what's it going to do? It's going to fall back to earth and hopefully back into your glove, and the game of catch can continue. Now, if we're looking at a GoNoGo chart, we're looking at the oscillator. We've thrown the ball out of our glove and it surges to overbought. We're in a go trend. It comes back down to Tyler's glove and he doesn't fumble the ball. Imagine that. It finds support at the zero line. And what does it do again? It surges again in the direction of the underlying trend. And what we are looking for, the interplay between trend and momentum, is exactly this. When we're in a go trend, we should see momentum stay positive, stay on the top side of that zero line, ranging between 0 and +6. And these are ways to identify objectively, scientifically, viable dips, opportunities to scale up our positions or to enter trends that have already begun. Maybe we didn't take that very first go signal. Where's a logical entry point into a trend? Now, Connie Brown and Andrew Cardwell did a lot of this work thinking about how you develop the range for what is neutral, what is overbought, and what is oversold. We wanted to take all of the subjectivity out of this and be very objective. Unlike the TikTok traders that say just BTFD, right? Anytime it pulls back, just buy more. That's irresponsible. And I hope everybody on this line didn't fall prey to some of those irrational ideas. But what we're doing with the zero line here is objectively identifying this area of support for momentum where Tyler catches the baseball in the glove and the game of catch can continue. Now, over here on the right side of the chart, Fumble Fingers McGee drops the ball. It falls below the zero line, and that is a major threat to the upward go trend. Alex, let's talk about the visualization that goes along with these touch points of the zero line.
So what we wanted to do, being big fans of data visualization, I mean, we've always talked about how technical analysts are the data visualization experts in the financial industry, but we wanted to bring it back to the price chart. So we're trying to do something that gives a complete overview of technical analysis, but keeps the chart simple and easy to understand. But even then, once we've done that, we want to bring our eyes back to price. Price is so important. And so what we've done is create two icons that are based on the interaction between the oscillator panel and the price panel. And the first of these icons are our continuation icons. So what these will do, now how important it is that Tyler doesn't drop the ball when he's playing baseball, right? So we know the importance of the zero line. If the zero line holds as support when a go trend is in place, you're going to see those green trend continuation icons. That tells us it's okay, the game can continue. We've in a go trend, momentum is cooled, but it's found support. We catch the ball, we throw it back up in the air. If this is a downtrend, if this is a no-go trend, we will still see those trend continuation icons, but they will be red. So remember, this is an understanding of technical analysis that applies to upward moving markets as well as downward moving markets. The second type of icon that's on this chart are our counter trend correction icons. And that is using the GoNoGo oscillator in the traditional sense of momentum analysis. So show me those overbought levels and tell me where we've come back into neutral territory. Like you mentioned, going overbought is not a sell signal. It could stay overbought. But if we go overbought and we come back, that's maybe some sort of mean reversion idea, some sort of waning of enthusiasm. And you can often see short-term highs line up with these counter trend corrections. So perhaps a sensible place to take some profit if you need to. Certainly not trend change, but perhaps an area where price may struggle to go further in the direction of the underlying trend in the short term.
There are a lot of really incredible portfolio managers out there who will trade around positions. So they're going to stick with it through the whole trend, but they may add to the position and trim the position. Add to the position, trim the position. Depends on your tolerance and how actively you want to be trading each of the securities. But the idea behind GoNoGo charts is not to dictate one style of trading to all, but rather to give you the complete view of technical analysis so that you can use it in whatever way works best for you. Alex, I know we're coming up on time here. Let's talk about the last and also very important component of a complete GoNoGo chart, and that is the idea of volatility, compression, and the squeeze. Go right ahead.
Yeah, let me just do this in a couple of minutes. I'm going to talk about some of the MetaStock features to end it. If we have time for an example or two, maybe we could do that. But basically, the last piece of the puzzle was volatility, right? For me, trying to create something that would allow me to talk to anybody in the industry to give them a complete overview of the technical analysis. I wanted a sense of volatility as well. And a lot of people are scared of volatility, and I don't think that's the right approach. I think what we want to do is look for areas of reduced volatility so that we can then find those explosive moments where we can participate in either new trends or in strong trend continuation situations. So knowing the importance of the zero line, we've talked about that. Knowing how important it is also then really significant information if the zero line is where the oscillator gets stuck for an extended period of time, because there's no overbuying criteria being met, there's no overselling, there's just this very little directional pull. nobody's winning the tug of war between buyers and sellers. Now, there may be volume being traded there, but there's not a lot of movement in terms of market pull. And you can see how the price action typically gets smaller, the trading ranges get smaller as these areas of low volatility happen. What we then want to look for is a way to visually identify that, and we've done that by creating the GoNoGo squeeze indicator, which is that climbing grid that climbs for every bar that the oscillator remains at the zero line. So we see that grid climb, and we say, okay, we're in a GoNoGo squeeze when that grid is in process of climbing. When it hits a max and stays there, we're in a max GoNoGo squeeze. That's an extended period of reduced volatility. So it becomes very then important to watch in which direction that squeeze is broken. In this case, we were in a go trend. We stayed in the go trend. We never got out of the go trend. But then when we see that squeeze broken to the upside, we know that there's probable trend continuation, and it might be explosive. After periods of reduced volatility often come periods of higher volatility. And so that's what we're looking for. Now, if this was a no-go trend, and then we saw a max squeeze breakout, that could be a precursor to trend change when we see the volatility break in a different direction. So we can see that either in situations of trend continuation or of trend reversal.
And we've said it a couple times in the presentation today. For those of you who are long only, meaning you're only trading to the upside, that's a lot of the examples that we've shared. We work with a lot of hedge funds that are selling short. Long short equity PMs are using these tools in both directions. And so when we talk about these icons, they work the exact same way in no-go trends, just in reverse. And there we would be looking for that oscillator to be stuck in negative momentum, maybe riding the zero line from below. And as Alex pointed out, a volatility squeeze can happen in two ways. We can see it in this example of a trend continuation, right? We're moving along, maybe we've hit an area of resistance, or we've hit an all-time high, and buyers and sellers can't decide if it should go higher. There's a tug of war. And when that's resolved, what we're seeing right here is that buyers have taken control. And think about what happens in markets. Buyers are back in control. Everybody covers their shorts. Everybody leans into the same side of the trade. It becomes a crowded trade and it takes off. That's the concept that we're trying to visualize, is that investor behavior, that tug of war that's happening. Can also resolve in the other direction. So imagine this being a topping pattern. We've reached these penultimate highs. We sort of stagnate. And let's say the buyers take control. Well, now all of a sudden, everybody who's long begins to sell out of their positions. You've only got sellers in the market. Price plummets. There's no takers in that market, and we see high velocity moves to the downside. So either trend continuation or trend reversal. Volatility squeezes are very important, and we're always watching for the direction of the breakout. All right, here's the lightning round, and perhaps the most fun of all these presentations. There are only 3 things to consider on a GoNoGo chart. Right? We're talking about analysis paralysis. If you can answer 3 questions, you can make a sensible, responsible, rational trade decision. 1, what is happening with the trend? What color are we in? Where is it at? 2, what's happening with the oscillator? What's our value, negative or positive? And 3, is there anything important happening at the zero line? Alex, let's run through a couple of these together. Let's talk about NVIDIA, everybody's favorite.
Yeah. So this has been a hot topic, of course, this last few weeks, and you can see, you can shout it out at home. Nobody could hear you. We're on a video call, but where are we? We're in a strong go trend. You can see that it's a bright blue. If you want to put some traditional technical analysis on there, it's very easy to see that we're testing prior highs. That's the kind of thing you can do because there's nothing else cluttering up the price chart. Where's the oscillator? The oscillator's at a value of 3. So we're in positive territory, not overbought. That confirms the underlying go trend that we see in price. And if you want to talk about the zero line, recently, a couple of weeks ago, that break of that max GoNoGo squeeze predicted, or not predicted, but perhaps led the trend change in the price panel above. So all of that information there for you on the daily chart of NVIDIA.
Absolutely. Now, there are a couple of things that are really unique to Metastock. And I got to thank Jeff Gibby and the entire team of coders and the folks who implemented these tools on Metastock did such a fantastic job. Alex, talk to us about expert commentary. Right on I
love expert commentary because basically it's the slide from two slides ago on your chart every single bar and every time you look at a security. It answers the questions for you. What's the trend? Where's the oscillator? Are there any icons on the current bar? Is there anything happening with the squeeze? So those take care of the zero line, the icons and the squeeze. And of course, it talks a little bit more about GoNoGo charts and the concepts and methodology in a bit more detail as well. But you can pull up any price bar on any security at any time and get our interpretation of what the technical analysis is at that moment. So at this historical point for Apple, it's a strong go. Oscillators in positive territory, not yet overbought. Volume is light, no icons, no squeeze. So really, really quickly, you get everything that we could tell you in the expert commentary. And then the next thing that's so great, of course, Jeff mentioned at the beginning when he was welcoming people onto the call, is the importance of scans on Metastock. And we've created some explorations. And forgive me, this is actually a little outdated. We created a bunch more explorations with Jeff and the team. So I think there's now 7 of them, where we can search through all of the GoNoGo component criteria to return a list of securities that meets those criteria. So maybe you want to look for all the new Go indications on the S&P 500. Maybe you want to look for those icons, trend continuations. Maybe you want to look for max GoNoGo squeezes so you can follow them and wait for the break. All of that can be done through Metastock's exploration. So fantastic implementation of scanning there as well.
Now, I know we are basically at time. We do a weekly show on the GoNoGo Charts YouTube channel. If you want to hear some current market commentary, see us rip through a bunch of charts. Hopefully, we'll pick up your ticker symbols and favorites as well. Check that out at YouTube on the GoNoGo Charts channel. Jeff, really appreciate the time and having us back on this conference. It's always a pleasure to do some teaching with you.
Great. Thanks a bunch, guys. Good to have you. Always a lot of fun. Thanks for coming in this morning.
Absolutely.
Thank you, Jeff.
All right.
Let
me do this. I'm going to tell these guys about a special offer. But before I do, thank you for coming in, spending an hour with us. You guys look great. Thanks for coming.
Thank you.
Thank you, Jeff. See you soon.
All right, cool. Do this. All right. Let me do this. All right. Let me do this. Make presenter. All right. Show my screen. Okay. I think everything's going well. And Greg will tell me if it's not. Oh. I'm in the wrong spot of my slides. Hold on just a second. Let me start this from the beginning, I hope. Nope. Okay. Let me go all the way to the top here. I was just going through the slides, making sure everything looks good today so I don't have any moments. And there we go. I love the way that this is organized. The question that we had in the chat, does this do scanning? It absolutely does. And I just kind of like the visual view of it. It works great in Metastock 18. If you haven't gotten 19, it works really good there too. You should get 19. That's a huge upgrade. But I love kind of the combination of the trend, the oscillator, the icons, the squeeze, how they come together to kind of give you just a great view of kind of the chart. Should I be trading? Should I be going? Should I not be going? Should I be going fishing? All that kind of stuff is stuff that is very well put together. So for GoNoGo, it's actually pretty easy to get started with it. It's $149 per month. That's how you pay. It's a subscription. What we're doing as part of the conference promo is if you pay for a month, we'll give you a second and a third month to try it. That means you pay $50 a month to try it for 3 months to see if you like it. So very, very popular methodology. People really like it. Go to metastock.com/conf promo. Go to metastock.com/sales chat, or give us a call at 800-882-3040. So, and any of those ways will be a good way to kind of get started. So, do you want to say thank you quickly to Stocks and Commodities Magazine for sponsoring the event? I just talked about how awesome they are. They're still awesome. You should still subscribe. Go to www.traders.com and they can help you get a subscription going. So, our next guest, we're going to go straight into our next guest, Fausto Pugliese, a good friend of Metastock, a good friend of mine. I have some funny stories, but I think I'm just going to say this about him. You know, instead of doing the funny stories, he's one of the prominent experts on level 2, level 3 data. He's the only person out there that really that I've heard that does a really good overview of here's what this is and here's how you can use it to identify where to buy. And I'll try not to hit my microphone. Sorry, Greg. I know. Well, let's go ahead and get you started, Fausto. Fausto, how are you doing?
I'm doing good, Jeff. Good to see you. Thanks for kind of having me back on your event. That's awesome.
You're welcome. Sorry I didn't share one of your stories.
Well, I love when you share the stories. It's not the same if you don't share one of them. I mean, there's so many stories.
All right, I can do one. Fausto is so dedicated. He is the only presenter we've ever had in the Metastock room that has come in, given a lesson, and then went and saw his baby got born right after. So there you go.
I'm like, don't worry, I'll be right back, Jeff. Don't worry. My wife she's not too far.
Yeah.
So,
And I've met her. She's really nice. I don't know if I could get away with that, but you got there.
It was my firstborn or my second. I think it was my second, actually. So she was like, all right, let's do that for the first one. But no, I know. Well, I was very well. Listen, hope that I don't get any angry moms out there and stuff. But no, I'm very committed to Metastock. You guys have been great. We had such great times over the years and stuff like that. And just love being here every time talking about the level 4 with you.
Yeah, all yours, Fausto. Thanks for coming. And the floor is yours.
Thanks a lot, Jeff. All right, guys. So like Jeff told you, I've been doing this for over 30 years, one of the original day traders that started this industry. I'm going to talk a little about how to use momentum for entries and exits. Now, before we get started, I mean, like anything else, we got to do a quick disclaimer, everyone. I'm not going to make any guarantees and promises it works for everybody. Everybody's going to understand it. It definitely varies student to student who we trained, but you should be very, very smart before you do your trade because you can lose a lot of money in trading. There's a very high risk in it. So please be very smart before you actually go out there and place some trades out there and get yourself educated. Now, what I like to do is I like to go through the real markets really quick. I want to get deep right into it. And before I do that, I don't know if anyone here is subscribed to our YouTube channel. And I've been posting a lot on Instagram and TikTok and stuff. And we have one video that went viral yesterday. I want to share it with all of you. And then we're going to go into the market. I'm going to show you what happens. And this is obviously what everyone's talking about. So let me just bring up this page right here really quick. Hope everybody could see it. So this is our YouTube page. And these are just the shorts. So if anybody here wants to access those shorts, let me just put that in there for you. Okay. I also want to play this video really quick. It was the last one I just did right here, and it's just short. Now, we got a lot of them. You got long videos, short squeeze polls, and everything else. But I just want to play this 60-second short really quick right here. So watch this right here.
The video just came out earnings, and it made a big announcement. Let's go see what happened. Earnings came out, news broke out, and then all of a sudden, it started to break over $1,000. Big green bulls means that there was a ton of buying going on. And it just took this big seller and that big seller, and that big seller was $1,000. But there was more than just the earnings that made that stock run. The video made a big announcement on a big stock split, 10 for 1. So is that going to continue to run till tomorrow morning? We're just going to have to check.
All right, so there was your 60-second. 60 seconds was actually 30 seconds and so on. But let's go back into that NVIDIA trade and let's see what's going on regarding about NVIDIA. Okay, so NVIDIA is right here. So here, let me blow this intraday chart here so you can see what's going on. So here's the 1,000 share order that we are looking at right here. Okay, so if you see right here, here's that big slingshot, and then right here, even going all the way past around 5:30, 6 o'clock, it finally started breaking it. Now we call this down here, it's called a Fausto flag. I don't know if anyone ever heard of it, but we've been teaching it for a while. It's basically a lot of consolidation. Some people like to call it a bull flag, but there's a reason why one's a bulls and one's a Fausto flags. We'll go into that when we teach in our class. But the thing is, you can see how the stock finally broke 1,000, and then the stock really broke out, and you could see where it is today. Now it's at 150. Now I'm going to show you why and what is the reason. Did the stock go to 140 and 150? When we get a little bit more into the advanced part of this class, talking about it probably next 30 minutes. So I got a bunch of stuff I got to cover, but I'm going to show you exactly what my style is, what I was trained, and why we do it the way we do it today. So let me just minimize this and let me tell you what we're going to be covering. I'm going to teach you how to follow the big money, the important tools to use, best times to trade, how to be an overall, round trader, because you need to know how to use these tools. You can also apply them towards swing trading. You can apply them towards options trading. I'm going to also give everyone here who comes to, who registers, I'm going to give you my book for free. I'm going to give you access to our trading room, everything, because, and this is why I've been doing this for so long for MetaStock, is that we have that relationship because we feel that if we could train the public better, that helps all of us. Okay. Now, and that's where it comes down to it. Now, I've been a speaker at some of the biggest financial institutions in the world. One of them being on NASDAQ. And I got a bunch of short videos on NASDAQ too that you'll see, and long-term ones. And the reason why we're there is because NASDAQ knows that if we could teach the public how to trade, you'll be a client theirs forever. Because listen, if you don't trade, they don't make any money. None of these brokerage firms make money. So that's where that comes in. So when it comes to trading, ladies and gentlemen, those are things that we're going to cover. Now, like I said, I've been doing this for over 30 years. I love what I do. I love training people, changing their lives. And what you'll see is that when you learn how to trade, these are things that are going to help all of you how to succeed in today's markets. Now, getting back to that NVIDIA trade, we know what the news is. We know what happened with NVIDIA. And the question is like, okay, is it too late to jump in? Listen, there are so many stocks like NVIDIA. What you have to learn from the NVIDIA trade is that it trains you exactly how to trade other stocks and what makes other ones move. Because believe me, there was a lot more other stocks than NVIDIA, but I'd like to talk about it because that's obviously in the big news today. You know, about the stock split, the earnings, AI, all that good stuff. Now, the thing is, why did Wall Street buy NVIDIA? Okay, what's next with NVIDIA? The big thing that you need to understand is that as a trader, I really don't know nothing. Not in a bad way. It's just that I did not go out there and try to sell 20, 50, 100,000 shares, buy 150, 200,000 shares. There are companies like Goldman Sachs, BlackRock, all these big brokerage firms are out there. They know better than anyone where they want to put their money, where they think it's going, and, you know, and where their portfolio goes. So you got to know how to follow these orders. And it kind of, you could apply towards any type of trading. I don't want to change anyone's style, you know, but just think about it. How do things go up and go down? Supply and demand. And think about how much smarter and better trading decisions you would make if you were able to follow the big buyers and sellers out there. So while everyone else was preparing with NVIDIA, let me show you what was really moving. Did you see what happened with ASTS trade this week? I don't know if did anybody trade this stock or watch what's going on? I don't know if anyone saw this stock. Look at this stock, what it did in one day, right? Stock went from $3 to $4, okay, in 3 days, up 150%. Now, NVIDIA go up 150%. And not only that, but I think everyone could afford this stock. And not only that, but look at that. Went from $4 to $5. I mean, the thing just kept going up and up and up. Even over the course of the day, it did it. So the thing is, why did it go up? And how did it get there so fast? Well, the answer is the buyers and sellers. It's those two things. And I think we all could agree here, the way things go up and go down is buying and selling. So, like I said, if you want to know a little bit more about some of these little quick videos, I know I'm short with time here, and I'm going to invite all of you guys to come in there, but, you know, please subscribe to our channel, like us, friend us, ring that bell, because we post up 2-3 times a day of all these little tricks and things that are happening. Some of the stocks you're probably in there today too. Now, let's talk about the rules of traders. First of all, rule number 1, you don't turn day trades into overnights. Now, what is a day trade? A day trade is you're in and out the same day. But people are like, ooh, you know, I heard day traders lose money. No, you know who lose money? People who swing trade, people who try to day trade and then you convert it into a overnighter and then so on. And once you do that, and it's not done to design, that's the people that fail. And you know, everybody here, you know what I'm talking about because you probably probably guilty of it yourself. So for example, let's go talk about the GameStop. All right. Now I did a couple of really cool videos on GameStop. Actually, it went viral, our video that we just did on GameStop. And like I said, you could watch it. That one was pretty popular, no matter what your favorite platform or social media is. But let's talk about the GameStop trade. Now, let me explain something to you. We were trading GameStop before anyone even knew about it. And I'm not sounding like, oh, you're a genius. Now, let me explain to you what happened. Do you see right here on the bottom, let me get my crayons because this thing has got crayons here. I want to draw this for you guys. Okay. See, it's right here. All right. So now this is what we call a Fausto flag right there. Okay. So back on this day, right around May. It was May 3rd, I think it was. You could see how the stock was hovering around $10. And then ran from 10, it ran all the way to about $17. Now, that's a pretty big move, up about 70%. Of course, it's going to be on our watch list. Absolutely be on our watch list. Okay. So what happened was it was kind of hovering here for a while. And then we started getting what's called consolidation. It never backed off. And that's when the bells started ringing. And then you could see, let me clear this out so you can see a little bit better. Erase. Okay. So you see this right here. Finally, it started breaking. And then the weekend came. And that's when that news came out regarding, Mr. Kitty out there made that announcement and did a tweet on it. And then all of a sudden we had this big pop. And then all of a sudden, that's where the news came out right here. And then the stock, everybody's like, oh, maybe this is GameStop going back to $1,000. Yeah, right. And it went to 65 and everybody's jumping in. And where is it today? Boom. It's all the way down here again. Now, why did it go up and why did it go down? Well, that one video that he posted on that day got 22 million views. Okay. Now, so why did it go up? It went up due to the answer we told you previously. Supply and demand. The buyers and sellers start to jump in. And that's what ends up happening. So let me just clear this out. And let me go to the next page and show what we got going on here. So AMC, same thing. A little bit cheaper, a little bit more trendier, but look at $3 up to 12, right? So take a look at CTNT on the chart. Same thing. $2 to 14, right back down to $1.30. So there are, you have to understand, last week's flavor is not this week's flavor. It changes every day. And, some people are still stuck in, GameStop and like, is Mr. Kitty going to come out and do another post? I need to make my money back. I mean, I know people that own the stock at $45. Okay. And they're like, because they thought it was going up and then now they're down. They lost everything. They're out of business. Why is that? Because they were never taught the right way how to trade. They were not following the money. They didn't understand the word short squeeze. All right. For example, there's a short squeeze going on right now on a stock. Okay. Let me show you a short squeeze. This is short squeeze that's going on right now. Did anybody ever see the stock SWIN? Back in March, this stock ran from $10 and it shot up all the way to 65. And then it came all the way back down to a lovely $5. And then in April, hell of a big move, right? Went to 5, went to 10, went to 15, went to 20, went to $40. Today, this is just today. The stock went from 42. Let me bring the chart here. And look at it. It just keeps going lower. Now, I personally tried to short it today. Unfortunately, my brokerage firm won't let me short it because some stocks are not on a short list. But I hell wish I did. I had to short and they would have gave it to me. But look at that stock, 28. Look where it's down to $10. Now, I might be a buy. I might be a buyer at $5, $6. Feel bad for the people who own at 20. But do you notice what the stock, do you notice what's going on with the stock right now? Look at the stock right now. Look over here down at the bottom. It says $9. Look at the time in sales. It says 11:12. See the time right now? 11:21. This stock has been getting halted, overhauled, and overhauled all the way up since it's $40 a share. Okay. It just keeps getting halted. Now it's probably going to open up in about 30 seconds. We'll stick around. We'll see what happens. I don't know if did anyone ever see a stock get halted and open up. I did a couple of cool videos on that too for a guy. But you know what? You'll be witnessing one right now. Let's see if it opens. Usually they do a 5-minute hold and a 10-minute. This looks like it's been a 10-minute hold because we're at 21 and it got halted at 11:12:07. So we got about less than 30 seconds. So see what happens, what it does. So right now, you'll notice that on the NASDAQ exchange on here on level 2, the quotes right now are at $9. So it happened, the exchanges and brokerage firms have to update their quote. The stock goes down too fast, and they put these circuit breakers in, and they shut down the stock. But that's where it is. Now, I do have the stock on level 3 and level 4. We'll show you that too a little bit later. Swin. Oh, there it is. It's open. There we go. And look what's going to happen. It's going to get halted again. It's at 8. You see where it's all green, the time in sales on the right-hand side? Everybody see this right here? That means it's going to get halted. Again, watch what happens. Give me a couple of seconds. Halted. There you go. Boom. Now look at the quote. The quote now is at $6.50. You literally had about 3 or 4 seconds to get out of that stock. Could you imagine people crapping in their pants right now? Have any of you ever seen a stock like that got halted before? And now all of a sudden seen a real lifetime market, how that actually happens and how you get stuck in it? This is the power of direct access. This is the power of supply and demand, and this is the power of, you got to learn how to play the game. So let's go back and talk about some of the trading tools that we use at Supertrend University. We don't really use a lot of scanners, okay? We use something called Level 3. We use a simple chart, and we use a scanner. We don't go crazy on what we need. And also, obviously, I'm going to invite all of you here. And this is our professional trading room. And I'm going to invite all of you guys in here. This is our professional trading room. Here's all our traders on the left-hand side. You can see all our traders that are signed in. And you can see, right now they're trading Mara. They're looking at the Mara stock. But I'm going to invite all of you guys to come in there. But we don't really use a lot of tools. Metastock is obviously one of the preferred platforms that we use. And, that's, there are things on there that some of you probably are not using that you should. For example, big percentage gainers or losers. When we trade the market, you know what? That stock that we looked at, it's right here. It's the big percentage loser on the market. See that right there? SWIN on that column, biggest percentage loser right there. Stock traded only 2 million shares. So you're not going to find the most active. So that's basically what we're looking at right there. Now, this is how we find them. This is how we find them because, and first of all, I don't know what this company, well, I know what the company does. It's a Hong Kong brokerage firm. Okay. Does that mean anything to you? Oh, China, Hong Kong, government take over. Listen, it's irrelevant. You didn't worry about when it went from 5 to 30, 40, 60 it went to. So the thing is, you just got to know exactly where to find them. But the big thing you have to understand, what we teach our students at Supertrend University, and this is what I was taught as being a market maker, there's a lot of stocks out there that are moving. How do you find the right one? How do you know that you will pick the first one or the 5th one and not the 3rd one or the 8th one or the 15th one? There's something that we teach at Supertrend University. It's called the 3 T's. Tradable, trend, and trap. Tradable means could you get in and out of it? It's got a good volatility, good spread. The second T is what's the trend of the stock on the chart? And the third T is where is the money? Where are the buyers? So we'll cover that, in our class, in our trading room, and we'll go over all that stuff, okay? And you're all going to be invited. And listen, we're live. We do audio broadcasting. We practice what we preach. You'll see everything that we do. But most importantly, you'll see the other traders in the room and see how they think for themselves. Because that's what you have to learn. You have to understand that as a trader, I can't tell you what to buy and sell. First, it's illegal unless I'm registered. Even if it was, you got to know how to get into it. You got to hit the button at the end of the day. Okay? And it's not about making money. Do you know how you become successful as a trader? It's not about winning. It's about controlling losers. Do you see that one stock that we showed you just now? Do you see the stock SWIN? If you took a loss at 25 and you owned it at 40, you'd be really, really, really upset. And you'd be like, oh, it's got to come back. The Fibonacci said it's going to go up, and the MACD and the WIC and everything, the VWAP, everything. Doesn't look like what the buyer's showing up. And I'll tell you one thing, you're probably better off taking a loss at 25, owning here at 8, and now you got quotes that are stuck in there that's going to open up at 6. And you probably wish you sold it at 10 when we saw it when we first started, because now you just dropped another $3. $3 on 1,000 shares, $3,000. I don't know, was that $750,000 at the end of the year if you do it every day? Listen, things add up. They add up. But finding them is really not the problem. You all have access to it. You all could see it. Now, the next thing that you have to understand to be a successful trader is how do you know who's buying and selling it? Now, does anyone here have something called level 2 quotes? Just give me in the chat right here. I think I have it up here, but running. Oh, yeah, there we go. Under questions, everybody in questions, just write questions. Do you have level 2? Do you not have level 2? Just give me yes or no, just out of curiosity. I also want to see if you guys are paying attention. All right. Because part of me talking here is asking questions. All right. So some of you do and some of you don't. All right. Let me explain to you what it is. And then you're going to see that it's kind of been obsolete for the past, 20 years. So let me get my crayons out here. So right here, you got the buyers, and these are the sellers. That's the bid, and that's the ask. So you got 3 columns, 1, 2, 3. The first column is a 4-letter abbreviation of a brokerage firm or an exchange, like the NASDAQ, the New York, the Chicago, Goldman Sachs. These are all brokerage firms and exchanges. Second column is telling you what the stock is trading at that exchange. And the third column is telling you how many shares. Everything there is multiplied by 100. Now, whoever wants to buy for the most amount of money is up on top. Whoever wants to buy for less money is down at the bottom. So it's a negotiated market. It's pretty cool because it's real time. I'll bring up the live data here for you. Hold on. You can see what it looks like in the real market conditions. Oh, there we go. Okay. So let me get back to here. Here's our level 2. And we'll look at everyone's favorite stock. Look at NVIDIA. Okay. So you can see right here, you're seeing real-time quotes of what the stock is trading at and how it's moving and how it's going up and how it's going down. The problem with this is that it's only showing you the best buyer and the best seller at an exchange. It's not showing you all the buyers out there, all the orders. So you kind of like, okay, it's cool. You get to see real-time data, but it's not really telling you, okay, well, who's really buying it there? And there's really 200 shares. You told me there are 10,000 shares, 100,000 shares orders. It's not showing me here exactly. So that's where I want to go into Book Viewer. Okay. Now, does anyone here have Book Viewer from NASDAQ, the exchange? This is not Fausto's platform. It's not Metastock. You can't get this directly through the exchange. I don't know if anyone here, just give me a yes or no. Now, let me explain to you. When I started trading, I had to pay over $1,000 a month for this data. Okay. At 22 years old, I'm 52. You're talking 30 years ago. Imagine today it only costs $15. Now, I'm going to show you. This is going to illustrate where 50% of the buyers and sellers are. And now listen to me carefully. You are about to see where 50% of every buyer and seller are in a stock. How much smarter and better trading decisions would you make if you knew where those 50% of those buyers are? All right? 50%, not 2%, not 0.5%, not 100 shares that maybe, you, Stephanie, or Mike, or B might trade. 50%. So let me go out there and show you what we got. Let me show you how it works. Everybody looks at the chart backwards, okay? Everybody looks at what's happened in the past. You got to know how to look what's going on in the future. The future is where are the buyers? What I mean by everybody's looking at backwards, you're looking for support. I don't look for support. I look for buyers because without those buyers, you technically don't have support. So here you have a stock right here. And you can see hold on. I'm trying to move my crayons over here. Let me move them a little bit closer so I can grab them. All right. So right here, you have support. Everybody see that right here? That support are these buyers that make up the 177,000 shares. Now, there are buyers at every single price level. When you're looking at level 2, you're only seeing this 400 shares. You're not seeing this 177,000. And guess what? When that stock hit that price right there, and it hovered there for about several hours, boom. Stock ran from $4 up to $6 in a matter of, 30 minutes? If you bought 1,000 shares of that stock, I don't know about you, but if you just made $1, that's $1,000. It's a $250,000 salary. Who doesn't want that job, right? So simple enough, right? Did I lose anybody, by the way? I always like to make sure everybody's following along. Everybody following along? Good. Steven has a good question here. It says, isn't it relative, level 2 fairly irrelative since most volume takes place in the dark pools? Steven, first of all, I don't know who taught you dark pools, but dark pools only about 5% of the volume. Okay. I do teach dark pools. Okay. I was basically guilty of being a dark pooler. That's what I used to do as a market maker. But trust me, it's irrelevant right now. That's the least of your problems. All right. And another thing I want to point out to you, Steve, and this goes for everybody else. A lot of people look at this and like, this sounds pretty scammy. Like, why could we not see this? Like, why can you not do that? Like, oh, how do you know that's a real order? And how do you know this guy's telling the truth? Listen, what are you doing in this business in the first place then? If you really think that you're dealing with liars and cheaters, then why you trade the market? You know why you trade the market. You know what the problem is? You just don't know how to play the game. And that's what it comes down to it. That's why I love teaching people like you to show you stuff like this, because this is how market makers trade. You got to understand something. I live here in New York. This is the financial capital of the world. People, some people in my country club are the biggest traders in the world. Okay. You're not going to beat them. You're not going to beat them, but it's okay. You could follow them. Listen, you don't want to be the smartest person in the room. Okay. You just want to know where the smart people are. Okay. You don't want to learn from the dumbest person in the room. All right. So this is basically how I was taught. I can't compete with these people, but they taught, because listen, they got buying power that you couldn't even imagine. But if you just know how to play the game, it'll give you a fighting chance, at least know how to get out. Like, let's look at this resistance levels. Look at this stock right here, Lyft, how it went from like 1730 up to 1840 and came back down to 1770. Why did it stop at 1840? Why not 18? Why not 19? Why 1840? Well, when you look at the sell side, I don't think the 500 share seller is scaring anybody. And I don't think the 4,000 shares selling and scaring anybody. It could, but I can tell you what will scare someone: the 119,000 share seller at 1840. And that's the reason why it went down. That's the reason why it went down. Let's go back to GameStop. Okay. GameStop, big push, right? And a good example. What ended up happening? Started hovering, started building up a support level, and then all of a sudden that support level was built on that 87,000 share buyer out there. And you could see right here on the right-hand side, look at all the buys: 300, 1,000, 600, 3,000, 400, 87,000 at $15.25. What happened? Look what happened in the chart. It hit it from 11, 11:30, 12, 1 o'clock. Eventually, he wasn't going anywhere. And then at 1 o'clock, it shot from that $15.25 up to the $17. By the way, this was on the 3rd, okay, before news even came out on the stock. All right, let's go over another example. CLSK, another popular stock that traders look at. Been pretty volatile. Even today, it was pretty fun trading. Stock is trending down. Now, let me ask everybody a question. After what we've learned so far being here, and by owning a stock that's going down, how much lower can this stock go? Well, the answer, number one, is it can go to 0. But we know that's not going to happen. Could it? Yeah. But what is going to stop it to get there before it gets to 0? What do we need? Could everyone answer that question? Anybody know the answer? Buyers. Very good. If you wrote buyers, you're absolutely right. Now, the problem is you don't see buyers on a chart. You're not going to see buyers on an indicator. You're not going to see buyers anywhere else. But when you look over here on the NASDAQ book view, where you look at the exchange, you got 194,000 shares looking to be bought at $15.25. Now, think about this for a second. How much smarter and better trading decisions would you make on your MetaStock platform and every stock that you trade in the platform, okay, knowing if you knew where those orders were, all right? So going out there and understand how to use these indicators, you want to know how they trickle into everything else? It all affects a lot of just following the orders. So what do you think happens when you got to that price? Hit it at 10:30, shot up to $16. Could have made yourself a nice 60, 70 cent profit on 1,000 shares, $700, $700, $100,000 salary at the end of the year. Then you wonder why people like this market. Listen, you don't got to make the millions. All right. Don't be fooled by those people. You just want to make a day's pay. But you know what? To make a day's pay, you got to make sure you don't make a mistake. And the mistake is, when I went out there and I bought the stock, was this street out there? Was the big buyers out there? That's what trading is all about. So understand, buyers equal support, sellers equal resistance. Let's look at Revlon, another popular stock. I'm not a fan of the car, by the way. I think it's ugly. It reminds me of Mater from Cars, the cartoon Cars, but it doesn't mean I'm not going to trade it. You know, I mean, the stock was moving, had a nice little rally, nice little push here from 1050 to about 1190. Nice little trend up. But the game plan is, when do we get out? Well, where's the street? And the street is here. Between $11.99 and $12, you got 90,000 and another 23,000. Over 100,000 shares looking to be sold right around that number. Okay? So, what do you think happens? It hits it, and it goes all the way back down to 11.10. And if you didn't know it before it got there, you could have been suckered into it and caught holding the bag. Who here hates holding the bag? Right? How many times everyone say, "Oh, damn, I should have got out of that stock. What made me hold it?" This is the reason why. Did you see the big order out there? Did you? Well, that's what trading's all about. Now let's talk about another example. AMC, okay? Getting back to some of these popular stocks from last week. Big push, nice trend, everything else, right? All of a sudden, around $13, that's right, 13. Where is it today? Where's AMC today? Let's go look. I'm just curious what AMC is today. The video's getting to that, close to that 15. You're gonna love the second part where I'm gonna show you. AMC. Oh, we're at 450. That kind of sucks, right? How did it go to 450? And you got a slideshow showing that it was at $13. Oh, maybe because big sellers start showing up, 250,000 shares. All right. Look at all these sellers over here. 30,000 at 12, 50,000 at 1250. You know, I don't see 200,000 share buyers out there. All right. You guys see any big buyers out here? Right? I see all big sellers here. Look, this guy right here. Let me change my color. I don't like this color. I like red. Okay. There we go. 30,000, 50,000, and you got a whopping 250,000 right there. And not only that, we're talking about 132 people that make up that. All right. So what do we got going on? Hits 13. Now it's down to 11. All right. And this is all in pre-market. This is not even during the market hours. So that means that number is going to probably grow 5-10 times bigger. And look where it ended up going. 13, market opens up, all right? Right there was the high, right there. And then here she comes down to 7 in one day. It took literally several days to get to that number, and it lost it all in one day. That's what trading is all about. Now, who here would like to get the book viewer platform? Okay. And guess what? It costs $15, right? I don't make any money. I don't work for them. I'm not here to promote them. I just listen as a trader. The reason why Jeff has us here at the Metastock event is because he knows if you use his platform, okay, which has been around forever, all right, and has been one of the most high recommended, most prestigious platforms out there. There are tools that you still need to be successful at. Just by having the platform doesn't make you a good trader. Just by going out there, and you can't buy yourself out to succeed, okay? You need to be trained into that to succeed. And basically, this is all you got to do. Just send me an email. Here's my email address, faustop@ctucorp.com. Did I spell it right? No, I spelled it wrong. That finger, CTU corp.com. There we go. So that's my email on the chat. Just copy me. Just send me an email to Fausto. Send me the book viewer. Listen, I can tell you where to get it. It's right there on the NASDAQ website. But why go there? Because you'll probably end up doing more damage than good. I got a couple of really good videos. How to set it up. Their templates are terrible. We got templates for you. Everything else. Listen. Let's talk about the the Metastock platform. And isn't it, how many of you would like to get a really cool platform? Not just having a platform, but having a good template. Everyone here has a different template, the way you look at it. And some of them might make sense to you. Other one, they're like, but that's not what kind of trader I am, and I'm a little confused. So templates do have a lot to do with it. But just take down my email address. I'll be happy to tell you where to get it. I got a really couple of quick little videos on it before you go out there and get yourself in trouble. All right. Is that the same as NASDAQ full book? Yes, it depends, Barbara. It depends what brokerage firm you're talking about. They might call it different, but it's actually called the book viewer on the exchange. Some brokerage firm called the NASDAQ the full book, whatever it is. And by the way, there are more books. There's the New York Stock Exchange has their own book. Archipelago has their own book. EGGX has their own book. But NASDAQ does about 50% of the total volume of every stock out there. So 50%, and maybe the other one does 10%. I mean, so for a start, it's not that bad. All right. So you thought level 3 was pretty cool. Wait till you see level 4. Okay. So I want to blow your mind on this one. Now, I want to go to NVIDIA. All right. Now, what you're about to see on this, and by the way, I'm going to show you this live in my trade room, how it works. Now, do you remember the number I told you about NVIDIA when we started? The number we need to look for? Does everybody remember? Let's see if you people were listening closely. How many here were paying attention? What was the number we were a little concerned about when we first got into NVIDIA? We were talking about it. 150, right? Okay. I want to show you here. This is called level 4. Okay. Now, when I zoom out of here, I want to show you this. There has been this seller since 9:30 this morning, right here at 150. And you could see right there, right here on the right-hand side. Everybody see this right here? This is a level 3 right here. See that number right there? Everybody know what that is? So 182,000 share seller out there. Okay. So you could see here from 10:30, it hit it. And what happened? It went down, right? It hit it. More orders showed up and it went down, right? Now it's doing it again. It's hitting him, right? So basically what you're doing is you're getting the orders, but now you're seeing it more on a heat map. And not only that, but you can see how long he's been out there for. All right. So let me zoom in over here a little bit better. You can see what we're looking at. Oh, let me clear this out. And let me change this up. So let me bring this up here. You can see this a little bit better. So look at this order out there so you guys could see it. Look how red that line is. Let's see how it keeps going up, up, up. It hit it. It came back down. It hit it. It came back down. It hit it. It came back down. Why is it having a tough time getting past 150? 1,050 is because, I don't know, maybe because 182,000 shares looking to be sold out there. All right. And there's a lot of stocks out there. Let's talk about the swim trade. The one that's getting crushed right now, just opened up. Look at the seller out there. 69,000 share sellers were at $9. Did you know that was a big seller still out there? You're still stuck at 25. Okay. What else that we trade was pretty good? This one was pretty good right here. We trade this stock, FFIE. Anyone saw this stock? Stock had a nice run, went from $1 up to $1.50, came back down. Reason why? I don't know, about maybe close to about $1.5 million looking to be bought right around $1. I mean, there are so many stocks out there that we trade that are moving. Here's another really cool one, ONMD. I don't know if you guys saw this one. This one had a really nice pop earlier. And look at this order that showed up right here. 600,000 looking to be bought right here at $1.05. It's almost there. Almost there. So how much smarter and better trading decisions would you make if you knew where these orders are? Right? Now, I'm going to ask anyone have a stock out there? Anybody have a stock? Give me the stock. I'm going to bring one up. Anyone wants to see, like, you're in a position right now. And you know what? How about, give me a loser. Anyone, I forgot the stupid winners. Okay. What about the losers? Anybody stuck in a position want to say, Fausto, could you just analyze the stock for me and tell me what you see what's out there? Because I've been holding it for a while and I don't know where to get out. I subscribe to this newsletter. And this guy made me buy it and speaking so heavily. And now next thing you know, it's going down and he doesn't even know where it's going. Anybody have a stock? One stock. DT? Never heard that one. I'll look it up. Let me look them up. So you said DT. DT's really not trading that much volume. It's a light volume. Doesn't look like it's going anywhere. That one's not really a good one. Tim, you sick over what? The stock IOVA? All right. This one, 1,000,003 shares. I'll look at this one for you. Okay. I'll tell you what I see on this stock. Because I could see how you could be sick over it. Just to look at it, you look like you're pretty safe right now. And I even look at level 4 because I'm seeing there is some support right around 10. What is it? IOVA. Let me look it up for you. Let me help my boy out over here, my fellow trader. Okay. Like I said, you're looking good. you're looking okay. Let me show you what we got going on over here. All right. Hold on. Let me help you out. All right. So I got to load up more data here. So you see this little red ball right there? That was a big seller. That's not a good sign. Okay. People selling it, but it never went past 10, which is good because sellers were out there. Someone sold it and didn't get out of it. You could see that this seller's been out there for a while. So you got a little what's called what we call a 4-layer cake here at Cybertrend University. You got orders defaulted at 980, 960, and 940. Now, if you notice up here up on top, you're not really seeing any sellers out there. You're starting to see big buyers, and that 10 is a really big support. So I really wouldn't, I'm not a big fan of this, but I don't know how bad you are, but it'd probably be good to, this is where people think like, should I average down my cost? Well, if you wrote it down this heavily, this far down, you know, from the look of it, from 14 and down to 10, you're at a big support level, okay? But I'm just telling you this right now. If it gets past this, it looks like it's going to probably go all the way down to 9. I mean, the real big buyers are down here to 8. And from the look of it, I'm not seeing anybody out there at 8, but I am getting a good stack right around here. So you're pretty much safe. Now, did everyone get that? Was that hard to analyze that? Did I lose anybody? All right, that was pretty simple enough. All right. These are the things that we teach at Cybertrend University. These are things that you're going to learn and why I've been doing this for 30 years. Okay. I have it for different levels. Some still in the money in one account and one account. Well, Tim, another thing I want to mention to you also as being a trader, you don't put all your eggs in one basket. All right. You do not do that. Okay. You can get rich and you can get poor pretty quickly. And 9 out of 10 times you have more chance of going poor than rich. Okay. So listen, the people that you see do very, very well and brag, they got lucky on certain trades. And if they can't tell you they were lucky because they were just in the right place at the right time, then they're lying to you. All right. So these are the big things that you have to look at. Here's that example that I was showing you on that NVIDIA trade, how it broke 1,000 and orders just kept getting filled and filled and filled over and over and over again. All right. So that's what we were looking at over there. By the way, getting back to that NVIDIA trade, look what happened. The seller showed up and now he wants to sell more shares. It's been stuck there since 11:30. He does not want to move. All right. That's the difference between knowing where the orders are and not knowing where the orders are. All right. So I'm almost out of time here because I got to jump on to another webinar at 12 o'clock that we have to do. So let me get everybody registered and give everybody some time. Cybertrend University, just to let everybody know, we've been sponsored and endorsed by more brokerage firms than any school in the industry. I mean, Thinkorswim, TradeStation, Tastyworks, MetaStock, NASDAQ, Benzinga, Schwab, Tastytrade. Not only that, but we also have a 5-star rating on Google, which is almost unheard of for doing it for 30 years. That really had absolutely no complaints over those years. So our reputation has a lot to do with it. And the reason why is this. We care about our traders. We want to make sure they're successful at it. We tell you the truth. We don't give you any fluff. And, being around that long and being the oldest and most longest running school in the industry should speak for itself. Now, what I'm looking to do is this. I want all of you guys to see what I showed you in the past 45 minutes to come and do a trial. Okay. I want to invite you all to come into my trading room. Now, this trading room, all it's going to cost you is $9. Okay. Now, all you need to do right now is just take your phone. You could scan that little QR code on the bottom. Or let me just give you the link right here. www.ctu.co/trial. Did I spell it right? I got fat fingers. There you go. Trial. There it is. Now, the reason why we charge $9 and not $900 or $9,000, but is the most important thing. We don't want free people. Okay. I know some of you here want something for free. You're here for free. But the thing is this, I'd rather pay $9 go to a concert than go to a free concert. So you want to take us seriously? We'll take you seriously. This just basically is an application fee to let us know that you're a real person or not. We don't know who you are, where you came from, what your name is. Like I said, we don't know if you're a heckler, a protester. We don't know. So this is a way how we and you want to be around people that are serious. So for $9, this is what you're going to get. All right. You're going to get live commentary. We do in the morning and the afternoon from 9 a.m. to 4 o'clock. You're going to get full access to our trading room and our message board. This is all live. We do live trading every day in the trading room. We have guest speakers that come all the time. Some of the biggest and most famous ones in the industry, some great gurus. We do in-depth analysts with our traders. We're going to give you some workshops. Not only that, but we're going to give you other hundreds of hours of workshops. This is all for $9. Okay. Now, some questions that do come across. Franklin, thank you very much. I appreciate the vote of confidence. Frank saying, Fausto, you're a great guy. Thank you so much. I appreciate it. Couple of questions that people always ask me is this: how much money do I need to get started? That is the easiest question. $9. That's all you really need, because the thing is, don't worry about your brokerage account size. Do I need a brokerage firm? That's what people always ask me. Listen, you're here. You want to learn how to play the game first. Don't go out there and do a trade, learn the hard way, and be like, oh, I got stuck in a position and, what do I do? Well, listen, it's not. Learn how to play the game first before you go out there and start wondering how much money do I need? What brokerage firm I got? How do I get level 3, level 4? Listen, you can get this all in the trading room, so don't even worry about it. Now, if you're a swing trader, some people say, well, I don't really day trade, I swing trade. Listen, what happens over the course of the day turns into a swing trade. So I want you all know that. That's how it trickles into it. Like stocks, we do a lot of swing trades. I mean, I'm a big fan of all the weight loss drugs. They're doing great. I don't know if you guys saw Nuvo and Lilly. I own both these positions. But how do they trickle into that? Because they turn into a day trade. You start seeing stocks that turn to day trades, that turn to swing trades. Carvana, another one. Stock was $6. We were day trading for 2 or 3 weeks. And everybody's like, you know what? This thing keeps going up. Maybe I'll trade an option on it. Maybe I'll do a swing trade on it. Where is it now? 100? So these are the big things that we do. So we do trade options. We do swing trade. But to understand how to be good at these, it all starts on the course of the day. All right. So there you go, ladies and gentlemen. Scan the QR code, 1 week access in the trading room. We're not going to charge you a single penny after a week. We don't do any of these stupid residuals like other people do. We don't do any of that. I'm also going to give you my book. You can go to Amazon, bestseller. You could pay me $47 on it. I don't know why people buy it. I just give it to you for free here for $9, So I'll give you my book for free. You'll get it immediately when you register. It's color. It's a fast read. Metastock endorsed it. Everybody's in it. And all this stuff. I'm going to throw one more bonus in there too. One more bonus. Okay. If you do register right now, I will personally give you a coaching class. That's right. You could talk to me, because you know what? The reason I'm looking to recruit traders, I can get you in my trading room. Okay. So I want to make sure that you know what you're getting yourself involved in. I want to answer you questions. I know people are not a big fan of chatting. They don't want other people to see what they're looking at. Maybe feel a little uncomfortable. Sometimes they always say, talk to your doctor. Well, talk to your mentor. So I do that for everyone for the $9 trial, because if we're going to make you part of our team, I want to make sure you're the right fit. If you're not, I might rub you the wrong way. And I'm going to tell you point blank, you're wasting your time. Maybe you should go work at McDonald's. They give you $20 an hour, and because you'll end up blowing up your account. There are people I've trained over the years that have been doing this, that started out training and like, oh, I've been doing this for a year. I haven't been making any money. And just get into the room for a day. Listen, you only need 1 hour in the room, and you'll see that there's so much you have not seen that you've been trading blind. This trading room that you guys are going to get in is the original trading room that I started. There's trading rooms all over the place. I started the first one. I started the first school, and you're going to have access to it. Listen, I love what I do, and I love teaching people, but I hate seeing people lose money, because you got to learn before you could earn. So I got to go, fellow traders. I'd like to thank you all for being here. I appreciate the vote of confidence. Jeff, you ran a fabulous job. There's the link right there. Oh, there's the book too. There we go. Just scan it or type in that trial, and we'll get you in there. And then, like I said, if you have any questions, feel free to reach out. But everyone, before I let everybody go, just one last thing I like to say. I like to thank our veterans for keeping us safe, and everyone enjoy your Memorial Day. I hate holidays because I lose 2 days of trading. It started today, yet tomorrow, and then ends up on Tuesday because everyone makes a long weekend. But I do appreciate all of you guys done. So thank you, veterans, for you keeping us safe. Jeff, stage back to you.
I just want to second what Franklin said. You're a great guy.
What's that?
I want to second what Franklin said. You're a great guy. Thanks for coming.
Thank you very much. I appreciate it.
Very cool. And thanks for that. The links are in the chat, both YouTube and GoToWebinar. So Good to have you, Fausto. Thanks again for coming. Let me go ahead and do this. We're going to move immediately on. So let me go ahead and make me the presenter real quick. I'm going to go ahead and show my screen. Go do all the good things. All right. Very quickly, before we go to our next guest, a couple things. CMT Association. I want to say thank you to CMT Association. They've been a sponsor of Metastock and the conferences that we do for a couple of years now. CMT Association is such a great nonprofit, and kind of the work that they do, in case you're interested, if you have money that's under management and you want to have more money that's under management, you can do, or if you want to work for a bank, or if you want to just get a CMT credential, go to www.cmtassociation.org. Yesterday, well, earlier today, Tyler was in here talking, but yesterday, Tyler came in and he talked a little bit about the CMT Association, and it was eye-opening to me. It always is kind of how helpful having a CMT designation can be if you trade for a living, if you want to trade as a professional, if you want to trade other people's money. And I actually think it would be kind of cool to just add CMT to the end of my name. So if that sounds like something you want to do, cmtassociation.org. You can also call them at 646-652-3300. Both those are in the chat. So, and Greg, if you'll put those in the YouTube chat for me, I would appreciate that greatly. So one of the things that I would like to do right now, before we kind of transition into Marina, who's going to talk next, she does a really, really good job, is I need a prize. So as you know, I appreciate the fact that you're here. If you're watching us on YouTube or GoToWebinar, we've got hundreds of people watching us right now on the 4th day of our conference, and I appreciate that. I do want to give away a prize, and one of the things that is extremely helpful, especially if you're on YouTube, is if you have questions or if you comment or if anything like that, it shows more interaction and kind of helps us with the thing. So I encourage you, if you have questions, ask them. If you have comments, within reason, ask them. But one of the things that I'm going to do is I'm actually going to kind of give away a prize right now. So let me go ahead and go to the very top of the chats here. And what I'm going to do is I'm going to kind of randomly scroll down and pick a chat. So I want to make sure I've got them all showing. And I'm going to give away a prize. I say a lot, in my job at Metastock, that I'm very, very happy to work with some of the best trading minds in the world. Fausto is certainly one of them. Marina is certainly one of them. Everybody here that we invite to be part of the conference is one of them. And the gift that I'm going to give you here is a book that was created by one of the people that probably had the most profound impact on the trading that I do. The book that I'm going to give away is a book called High Profit Candlestick Patterns. It was written by Steve Bigelow. And let's just go ahead and find a winner for it. Steve was a great technician. Absolutely love the guy. I trade with the patterns that he kind of taught me as we were coding them, and just such let's give away a book. Anyway, so let me go ahead and look this way. I'm just going to scroll a little bit. And,
Jeff, I thought you were waiting for me.
What's that?
I'm sorry. I thought didn't you ask me to help you out? Sorry, I was breaking in.
Oh, no, this was audience. Did you want to pick somebody randomly out of the chat?
Well, I mean, I'm here and I've got my app, but, it's up to you.
Oh, okay. Yeah, no. We'll do that in a little bit. This one is for, I like to do audience participation prizes.
I'm back.
B won this one.
You got it. I'll get out of your way.
B, this is a great book. You're going to love it. B-E-E space C. I'm sure that's not exactly. If you're still in the chat, if you're still watching this, let us know you're still here, but you just want a book just for asking a question. The question that you asked is that 149 for 3 months. So there you go. But you've been kind of participating quite a bit today. So really appreciate that. It does help. And what will happen, I just put your email address on my clipboard before. And what I'm going to do is I'm going to reach out to you next week. Make sure that we have a good address for you. Send you a copy of this book. I'd encourage you to read it. Great book. We are, of course, Metastock. I've been working Metastock here for 20-something years now. It's been rated #1 31 years in a row. I love to go in and be able to scan markets, test trading ideas. Well, I love to just scan the markets. If there's one thing in Metastock that I wouldn't be able to trade as successfully with it, it'd be scanning. I go in there, I test. I go in there every day, run a scan, see what's moving, focus on what's moving, and it allows me to trade much more effectively, much more fast. And, you know, there's 6,500 options out there, 6,500 optionable stocks, I should say. And so being able to kind of weed through all the noise and focus on what works is one of the tools that I think has helped us be rated the #1 software price category. Of course, we can also, for 31 years too, we can also help you test trading ideas. We've got that forecaster. Scott talked about that yesterday. Hope you saw it. We have real-time alerts, commentary, signals, and it all starts at about $69 a month. And the special that we're doing for it is if you buy a month, we'll give you the second and the third month for free. If you do our end of day version and you're here in the US, it'll be $69 for that. That means you'll be running it until August 23rd, almost until September, for about $23 a month. You'll pay $69 and that's how much. You'll just won't have to worry about paying it again. If you do that, we're going to help train you. We'll have somebody give you a phone call. They'll actually kind of sit down with you and spend a couple hours with you. They'll walk you through the parts of the program that you have questions on. We'll give you training. We'll give you unlimited access to our support team, which we've talked about. I love them. They do such a great job. So metastock.com/conf promo, 800-882-3040. I'm just going to type this out, and I can't type and talk at this. Oh, I even got it wrong, and I even sent it to B. All right. Anyway, I'll get this in the chat in just a second. I would encourage you to try it out. I absolutely wouldn't trade. I wouldn't be able to trade without Metastock. It's been such a valuable tool. One of the things that we're extremely grateful for is all of those customers that have been with us for 5 years, 2 years, 10 years, decades. A lot of our customers, like our employees, have been with us just for forever. And I think the reason that they do that is because it's helpful. And that's the reason that every year they vote in the Reader's Choice Awards as having us with the software. So that's it for me right now. Let's go ahead and move on. The next guest is going to talk about day trading and kind of how to get started with day trading. And she always does a really good job. And that's why we always bring her back. We love having Marina on here. So Marina, it's your turn. Let's go ahead and get you on. How are you?
Hello. I'm good, and thank you for the nice welcome. I love being back here as well.
I always, yeah. You guys are in for a treat. Again, if you guys have questions, you might win a book later, but just feel free to kind of chat in. I just turned over the presentation so then I can see your screen. I'm going to get out of your way. It's your turn. Go.
Yeah, hang on a second. I can't see my, hold on just a sec.
You're cool.
Oh, can I have access to the questions by any chance?
Yes. We ran with these events. Yeah, it should populate right now.
Can you hear me?
Yeah, I can hear you.
Okay. All right.
I just made you the presenters or the organizer, so you should be able to see the questions.
Yeah, I just got it. Perfect.
Yeah.
Thank
We
you
run
so
out
much.
of presenter spots, so then we make them. Yeah. Anyway, it's technical. You should see everything. Remember that when you're done, we will eject you just because it gives you the option to close down the room, and we don't want to do that. So
Absolutely. Don't worry about that. Oh, so am I still sharing my screen?
correct. I can see you
Okay.
the screen.
Okay, wonderful. All right. Well, thank you. Hello, everybody. Okay, thanks so much, Jeffrey, for having me again. I think this is like my 5th or 6th one, and I am absolutely excited to be here. I enjoy these so much. And I have a little confession to make. This is going to be my last live presentation for 4 months. I am off to the Camino Santiago. I don't know if any of you guys have ever heard of the Camino Santiago. There's a really cool movie called The Way. It is an 800-kilometer pilgrimage walk, and I start on next week. So this is my last big thing that I am doing, other than just going to be working with some of my students that I work with. So I'm excited. This is my last presentation until September. So I want to be full on with you guys. You guys are here that I am here to help you, even though I'm going to give you a presentation. And like Jeff said, my main specialty is getting down to the basics, because a lot of times day trading and financial markets just are so overly complicated for no reason. And I like to show everybody that there is a very simple way of doing it Because it's one thing, you know, when you're sitting on all these different chat rooms and listening to all these different traders and whatnot, and they're showing you what they're doing. But if you don't understand how and why, the reasoning of what they're doing, we're never going to be able to do it ourselves, right? It's kind of the analogy I like to give is, for instance, in the United States, when you learn how to drive a car, if you're taking driver's ed, the majority of the driving the cars, they have, so you're, you know, in the driver's seat trying to learn how to drive, but the teacher is in the passenger seat and they have both pedals. I don't know if you guys ever realized that, but they have the accelerator and a brake pedal so that they can protect you, right? So even though you are learning how to drive the car, you're not really learning how to drive the car until you are able to fully do it, right? And what I want to do is be able to give you that opportunity. So when you are sitting in these different chat rooms or you're getting alerts, instead of just kind of following what people are saying and not understanding, going blindly with it, that you'll understand and you'll actually be in control of what is happening. Because from my own personal experience, I used to sit in a bunch of trade rooms and go and take all these different academies and all this, but I was never explained how and why, the reasoning behind it. And I kind of just like followed along until I ended up losing almost everything, simply because you will end up losing everything if you don't know why you are doing what the others are doing, right? Because it's easy to show you, oh, look at all these positions I took and all these positions I got out. Great. But, you know, it's kind of like watching Tom Hanks be an actor. Well, we know he's an actor, but why and how? What is the methodology that goes behind it, right? So you want to be able to understand what he does so that you could do what he does, right? Obviously, I'm talking about Tom Hanks as an actor because we all know who he is, but that works the same for day trading, right? Just because somebody is doing successfully does not mean that you will, because you won't understand what is happening, right? So my goal today is for you to be able to fully understand and drive your own car and be able to fully take those trades and understand. And the coolest thing of all is that you could do it simply. And that's really what I want to talk to you guys about. So today I want to be talking the 4 steps to simplify your day trading and to be able to dominate the market under any condition. All right. Any condition, especially in the ones that we are most fearful of. I want to show you how you can dominate that as well, because we can totally do that. So this is me. I am Marina, the trader chick, and I am actually an expat living in Barcelona, Spain. However, I have been an expat for over 20 years. At first, I lived, when me and my husband got married, we moved to Costa Rica. Then from there, we moved to Guatemala, where we were living for 14 years. And about a year and a half ago, we moved here to Barcelona, Spain. And we were all the time. Like, travel to us is not a luxury, it's a necessity. And about a year ago, we traveled to the northern Spain, to Santiago de Compostela, which is where the whole Santiago Camino comes to an end, and that's kind of where I got the inspiration to do it. So I'm going to be doing it for the next 2 months. So that's kind of the way that whole thing came about. And the coolest thing is, by the way, I'm going to be trading as I do it. Interestingly enough, that's the reason why trading is so incredible. While I'm going to be walking, I'm going to be coming in around 2-3 p.m. right when the US markets open. Boom, I'll be able to hang out and trade as well. And the other thing that I want to bring up is, before I was a day trader, I was a fitness instructor and a travel writer. So I'm still a travel writer. That's kind of my other passion, but I was a day trader and I was a fitness instructor. And the reason why I talk about that is because so many people are under this misconception that you need to have an economic background, that you need to have like engineering background, math background, financial background. None of that is true at all. You can literally come from any walk of life and be a successful day trader, but you have to commit to it, right? And the other thing is, why I bring up that I'm trilingual, is because of how I started to look at the market. So I was born in the Soviet Union. I speak Russian. That was my mother tongue. We arrived to the United States when I was quite little. So I learned English at a tiny age. So I didn't really learn English. I just kind of became fluent in English. However, I learned Spanish when I was in my late 20s, right? So anybody who learned a second or third language in their later years, it's a whole process, right? It's a whole process. You have to first figure out how to speak to people. You have to translate everything. There's this commitment, discipline, all of that, right? Until one day, after you've really given it your all, you wake up and you just speak it, right? I mean, you don't have to go through the translation part of it and whatnot. So as you go through the learning process, it is a learning process, right? Learning how to speak another language. And after I've been struggling for several years when I began trading, because again, like I mentioned, I was in all these trading rooms. I never really understood what was going on. When I was looking at the charts, I didn't fully grasp it. I was constantly in this, trying to predict what the market is going to do or try to beat the market, all of these completely ludicrous things, because the market will always humble you. Until one day, I said to myself, you know what? I'm going to flip that. I'm going to flip that switch, and I'm going to look at learning the markets as a language. I'm going to see it as a language, because the market, it is a language. And when I started to focus on that, I started to realize that it actually talks to us. It allows us to see what it is going to be doing. And instead of us predicting and, all this other nonsense, I started to work with the market. And that is literally what I will be showing you guys today. And funny enough, I used to do a lot of in-person presentations like the Money Show, Traders Expo, and so many more. And whenever I started talking about that, I always had people come to me and say, you know what? I'm going to be doing just that. Look at it as if they're learning a new language. And that's exactly what they started to do, and wrote me telling me that they started, and that worked. So that's hopefully going to work for you guys. And the coolest thing, like I said, I am going to be trading on the Camino, literally, at all the hotels and everything, because we can do this from anywhere in the world. And as I mentioned earlier, I did quite a lot of in-person shows, especially before COVID. I have to admit, after COVID, I kind of love just doing the online ones. There's just so much more benefit to it for you guys and for me, because first of all, you can come from anywhere in the world, and you also get replays. And so it's much easier. And on top of that, I am able to give you guys completely for free my entire presentation that you could follow along. And I know that Jeff has always done replays, so you could use that presentation, the free worksheet, and go with a presentation to really understand at your own time and to follow along right now. So go to makingofadaytrader.com, makingofadaytrader.com, so you can get that right now completely free and follow along. All right, so as I mentioned earlier, it's all about the basics, right? So basically, let's think of it like this. When you guys are putting in trades, imagine you are putting in windows into a wall that you want to build. But when you don't have any wall, no bricks, no foundation, what happens to the windows? They keep on crashing, right? So that is exactly what basics are. It's that foundation. So that when you have the foundation, you could be putting in any kind of windows you want, because you have that foundation, that structure to hold them up. And that's what we're going to do. We're going to give you that structure. So next time you are sitting in some other people's chat rooms or this, that, you understand where it's coming from, and you are going to be making your decisions rather than just following the herd, which the majority of the time people just follow the herd. And you don't want to do that, because that's why 95% of the people fail. Right? They just follow the herd without truly understanding. So when you're in that 5%, it's because you have that foundation. So first and foremost, you have to understand what is going on, right? You have to have the proper format. And MetaStocks is the best platform out there. And the coolest thing about it, they have indicators that you could use completely for free, included in their platforms, right? So that you do not have to spend extra on all these other gadgets and gadgets. The cool thing about MetaStock platforms is exactly that they offer all of that. It's actually one of the best platforms out there for sure. So let's begin. And the coolest thing about it is that you could use any instrument. And how Jeffrey was saying, there's so many different instruments, and MetaStock actually supports all of them. So it doesn't matter what you are trying to trade or trying to understand, you could access and learn, but you need the platform in front of you, you need to see what is going on. And now it's about to understand how to read what is going on. All right. The first and foremost is market movements and understanding the breakdown of a trend. Look, we all know that there are 3 trends out there, right? There are 3 trends. We've got the upward trend, we've got the downward trend, and we have the sideways trend, correct? We all know this, and logistically, we get it, but this is the big but. I want you guys to go and look into your journals, your trading journals, and see where is it that you are losing the most amount of money. And I can guarantee 100% it's in the sideways trends. So what is the sideways trend? It's the chop. It's the exhaustion pattern. It's the channel. It's the transitioning market. It's the consolidation area. It's the indecision zone. I don't care what you call it. It is that flat zone. It is that dead zone, right? It is where the market isn't doing anything. And I'm going to explain to you why this is. I call it the trader's worst enemy area. All right. So the thing is that when we do have trending markets, it's hard for us to believe that it's going to go flat, right? Because sometimes we could have strong downward, strong upward, and then when it goes flat, we start to play head games in our minds. And I'm going to show you how to avoid that altogether. All right. But to understand the trends really well, first and foremost, what is an upward trend? I know this is pretty basic, but the reality is it's literally each pivot is higher than the next one. That's it, right? It's pretty simple. It's the market going up. It's the market trending up. It's a bull market. This is when you are going long. This is when you are buying. What does that mean? Super simple. Enter low, exit high, take the profit in between. Don't overthink it, nothing more to it, but it's called going long or buying, right? And a lot of times when people don't even know this basic terminology, how are you able to make money, right? It's kind of like getting into a car and not knowing the difference between park, drive, and reverse. Okay, so you're going long. This is when you are buying, entering low, exiting high. This is the upward trend. Downward trend, the exact opposite. Each pivot is lower than the next. Again, super simple, but this is where you are shorting the market. This is where you are selling, right? And again, you don't want to overthink it. You don't want to go into be like, well, if I am shorting the market, that means somebody's losing. We don't care who that somebody is because they don't care who we are, and we don't even know who they are. And maybe it's not even anyone. The reality is when your charts are telling you that the technical analysis is pointing in a short, where you enter a short, which is enter high, exit low, and take the profit in between. That's it. And here's another little thing that everybody should know. The majority of pro traders make more money on the short, on selling, than they do when they go long. Just a little, secret that you guys have to know, because a lot of people avoid shorting the market, but that's really where a lot of the money is made. All right. It's when you're high, exit low, take the money in between. It's the bear market. It's the market trending down. That is not a bad thing. For trading, it's not a bad thing. We are not in it for the long haul. For trading, we are looking what's happening right there, and that's what we want to act upon. Okay, so let's talk about the trader's worst enemy. And this is those consolidation areas. This is those transition areas. Okay, this is when it's flat. All right, it's like a flat line. This is an area where we have no idea what's going on. Think of like somebody that is in the hospital and they just flatlined, and you don't know, like the doctors, they're all there, the nurses are trying to revive that person. A lot of times we don't know what's going to happen, but gratefully, if they come to life for sure. But in the meantime, it's a flat line. And a lot of times people don't understand, but that's exactly what is happening with the market when it is channeling, when it is in that transition zone, when it is just the exhaustion pattern, because the market doesn't know what it's going to do. So why is it that this is where traders or people in general lose the majority of their money? Here's the reason. Day trading is a very emotional activity. right? It's very emotional. It's very high, tense anxiety because of the stuff that goes on in our heads. And the majority of the times, it's even more so because people don't have a strategy. They don't have those bricks that are built into place because they just go in. There's zero barrier to entry, right? So just throwing, where I say donating money to the market and don't really have a strategy, that's going to completely freak you out, right? So what happens when we are looking at this kind of a market? We start to create misconception or myths or lies in our heads, right? So we're looking at the market, and the market's been going up, and this is what a lot of people say. Well, the market's been going up. It's going to continue going up. I'm going for it that long. I am putting in a buy, right? That's usually the trend is your friend kind of a trader. Then you have another type of person looking at it, and they're like, you know what? The market's going up. It's got to correct. I'm going to short it. Again, that's the contrarian kind of a trader. And to be honest with you, neither of those people win. They lose. Why? Because they are trying to predict what the market is doing. They're trying to predict, or even better, they're trying to beat the market by saying what it's going to do. Here's the reality. The market is literally talking to you right there. And it's saying, you know what? I'm not really sure what I want to do. Just sit out and wait until I tell you what I'm going to do. Because as a pro trader, an individual trader, as a retail trader, we only have 3 things that we do in our day-to-day job with the markets. Those 3 things are, 1, know when to get in. Right? We need to know when to get in. We can't just go blindly. Oh my goodness, it looks good. It looks good. I'm going to go here. No, that's not how it works. We need to know exactly why we are entering where we are entering. Number 2 is we need to know when to get out. You always need to have risk management in place. Like that's not even, it's a non-negotiable, right? You cannot have a mental stop put in, right? A mental stop is literally as if you're getting into the car with your baby and you're putting in a mental seatbelt and hoping that if you get into an accident, you'll be able to save your baby. It's ludicrous. A mental stop is just as ludicrous, right? So we need to know when to get out. So first we need to have the stop in place, and we need to learn how to manage it correctly by knowing when to get out if we see the market already working against us. And the third, and I believe it's the most important job of the trader, and that is knowing when to stay out entirely. Okay, that means sitting on your hands. And the thing is, there's this misconception that we need to be in and out of trades all the time, right? Like that's just like this really weird concept that people have. The traders have to be in and out all the time. Reality is, the most amount of action you will be taking is knowing when to not take action, if that makes sense. Okay, so you need to understand when not to enter the markets, because you have to read what the market is telling you. And once you do recognize that, not only are you going to be sitting out of bad trades, you're going to be entering the really good ones, because you're going to be reading what the market is telling you. So when we have these trends and all of a sudden we have these flat areas, we know when to sit out entirely. And that's the most important thing of all, is knowing when to sit out. Okay, sometimes these consolidations could be small, sometimes they could be large. For me, the small ones are really important. I am a scalper, right? So for me, I take really quick trades within between 30 seconds to 3 minutes. And sometimes a small consolidation can stop me out if I'm in it. So I like to sit out entirely, because once they pass, that's when I could get in and get my profits. And then on top of that, I also am not losing just for the sake of losing. And that's what happens. So you need to understand these areas, and really, really importantly, you need to sit out, because sideways markets, they take all your money. All right. And the most important thing of all is to understand when these areas are happening, because the market respects these areas. And we, as the traders, have to respect it with the market, okay? So what are these areas? They are the support and the resistance areas, right? Why do we need to respect them? So let me explain to you in another metaphor, another analogy here. We've all heard of Formula One racing, right? Actually, it's coming here right now. Barcelona, I think, is going to be here in 2 weeks. It's a big deal, but we all know it. I don't care if you've ever seen it or not, but we've heard of it. And we all know car racing on a whole is a pretty dangerous sport, correct? So with that knowledge, the drivers during racing season also know that 25% of them will either be in an accident or have a fatality, right? It's a horrible fact, but they all know it and they are all prepared. So when they get into their car on racing day, are they just going to get in and go 220 kilometers an hour? No, never. You first see them put on their helmet. They have their fireproof uniform on. They get in, they clip in like 2 or 3 different seatbelts, right? 25%, that's their chance of getting hurt. Meanwhile, trading, 95% fail, yet they put on no seatbelts. Your support and resistance areas, those are your seatbelts. That is your safety gear. So what exactly is this? Let's discuss this. All right. Support and resistance areas. Resistance area, it is the ceiling of the market. So the market is going up, it's trending up, and all of a sudden starts to hit an area over and over and over again. What does that mean? Boom, that is the ceiling. That is an area that the market is respecting. We need to draw this in. And again, you do not want to just draw it. You don't want to just have a mental resistance or support area. It's literally the same thing as a mental seatbelt or as a mental stop. Why? Because when you are in that live market with your real money on the line, your adrenaline is pumping the same as it probably would in a Formula One race. Okay? And what do we do? What do we do when we are in the live market? We look to the left. We look to the chart to the left of us, right? To see, why did we just decide to enter that market? Why did we just put our hard-earned money into the market? That is because we have a strategy. We want to see that the resistance area was drawn in, the support area is drawn in. Do we have confirmation? If you don't have these drawn in, you're screwed. And guess what? You could do it for free, right? The MetaStock platform, they have drawing tools. It's free. So it doesn't cost you anything to draw them in other than preparation. Okay? And you need to be prepared. You need to understand the resistance area. It is the ceiling and it does revisit over and over again. So when you draw that area in, you need to understand that the market can hit that area again, and you want to avoid entering that area until it has confirmed either into a breakout through that area or completely a new trend. Okay, so we need to understand these areas. What is the support area? It is literally the floor of the market. It's the floor of the market. Again, it's when it's going down, you have a downtrend, boom, boom, boom. It keeps on hitting the floor of the market. So we need to draw these areas in. We need to understand when that market is respecting that area and stay out. And once you have that seatbelt in, you are able to take a lot more valid trades, and you could take way more higher probability trades as well. All right. Now, when you have a channeling market, you have the resistance and support area confirming it. I know this looks like a channel, even if you think if I remove those resistance support areas. However, when you're in the live market, your blood is pumping, your adrenals are pumping, you're not going to see it as vividly as you are looking at it right now. So draw those areas in, guys. Look at this. This is a channel. Look how ugly this area is, right? I mean, this is ugly. There's absolutely no movement here. Why would you want to put your money into this? Yet people do. They put it in over and over again, thinking that the market is going to do something they want it to do. But the market never does what you want it to do. The market is going to do what it's going to do. So the only thing we could do is work with that market, sit and understand exactly what is happening. Like right here, look at this. It is bouncing in between these two areas. This is ugly. Even though it is a wide channel, look at that. It has absolutely no real understanding of where it's going. We need to understand these areas. Now, a lot of times is, how do you recognize these areas forming in the very beginning? It's understandable if you take one trade in the beginning and you lose, but it's when you're taking it over and over again, you don't become a trader anymore. You become an emotional trader, which is just horrible, because that's when you go into revenge trading, and that's when you end up losing your entire account. Okay, so you need to understand when are these areas happening so that you could avoid continuing losing money if you've already put that money in, right? It's understandable. One time you took a valid trade, it didn't work out, then we investigate why did it not work out. And that is when we start to use these areas, this right here, reversal areas and divergences. To me, this is the holy grail. And the coolest thing of all, it's free on every chart. Any market you're going to use, once you start to understand how this works, you'll be able to apply it. And I cannot even tell you the amount of aha moments you are going to have. And it is going to save you so much hassle and getting into bad trades and allowing you to enter the really good high probability trades. Reversal areas and divergences. What are they? Double bottoms, triple bottoms, double tops, triple tops, head and shoulders. Okay, this is reversal patterns. So are reversal patterns like 100% indications that it's going to reverse? No. But it is an incredibly powerful potential indicator showing you the market is doing two things. One, completely slowing down, total weakness. Two, it is about to reverse. So now we are sitting and waiting to see what that next movement is. But in the meantime, our money is sitting in our hand, waiting to take those high potential trades. All right. Reversal patterns, double tops, triple tops. It is showing us that the market is completely slowing down, and there is a very high chance that it is going to reverse. So when it does finally reverse, we could also recognize that it was a reversal pattern, and it is a much higher probability it's going to continue in the opposite direction. Now, when you have reversal patterns coupled with divergences, that is probably the most powerful thing you could see. So what is a divergence? A lot of times people ask me that. I don't understand. What is a divergence? So right here, you can see I have a perfect double bottom with my price action, correct? Now, if you look down, I personally use the MACDs. That's the red dotted indicator that you are looking at. And you can see that the price action is flat, yet the MACDs are now going higher, right? They're going in the opposite direction. That is what divergence is all about, right? It's when your price action is doing one thing and your MACDs, or you could use the RSI or whatever other indicator where you could see the divergence or the, where it is divergent and see it. What does that mean when you're seeing divergence? Again, number one, the market is totally slowing down and is becoming weak. Do you want to enter a market that is slowing down? No, I don't know if it's going to continue. That's not for me to decide. But what I am seeing right now is that there is divergence, and I don't want to have anything to do with it. All right. And on top of that, when I have my reversal patterns, I know for a fact that something massive is about to happen with the market, and I want to be prepared and have money to actually take advantage of that to happen. So that's when you sit out. Okay. So let's put all of this together. Again, go to makingofadaytrader.com. Right there, makingofadaytrader.com, so you can get this entire presentation that you'll be able to go through it. It has a lot of really cool cheat sheets as well on top of that. And it's literally what I use for my own trading. All right, guys, let's talk about breaking out of the areas and spotting the valid breakout trades. Because here's the thing. Breakout trades are without a doubt the most powerful trades there are. But if you are not prepared, if you are not ready to see what the market is doing, you're not going to be able to understand when it happens. Okay, so the most important thing of all is to see when these happen. All right, so what exactly is a breakout trade? What is happening with the breakout? So I'm going to give it to you in layman's terms. Imagine you live all the way at the very bottom of this chart, and your best friend lives all the way at the very top of that chart, right? At the very chart. And they call you up and they're like, hey, I'm having an impromptu barbecue. Come on over. You hop in your car, you start to go north and you've been on this highway 1,000 times to your friend's house. You are raring to go, but all of a sudden there's a massive construction zone, right, on the highway, and they shut the highway down. And they're like, all right, detour, you got to get off this construction area right here. And all of a sudden you're in an area that you've never been to before. Google Maps has not caught up to this detour. You have no idea where you're going. All of a sudden, this is what happens to me. I really start to stress. Where am I? What if they don't continue with the detour signs? Google is constantly taking me back to the highway. I have absolutely no idea where I am. All these things are happening in your mind, right? Do you want to be putting money in that position and knowing what you're going to do? No, because you're uncertain. You are in a complete doubt, right? That is literally what is happening in a channeling market. But all of a sudden, the construction worker removes the sign and he says, all right, construction is over. You guys can get back on that highway. You get back on the highway and boom, you are zooming to your friend's house again. That is confidence. That is the breakout trade, going in the same direction after you had that flat line. This is how it works. But how are you going to recognize this if you do not have your areas drawn in and understand what is going on? Once you have those areas and once they break through, you are almost guaranteed to be getting those breakout trades. That is the beauty of it all. Okay, so this is how I literally take my breakout trades, and there's a lot of them, right? So the coolest thing of all is to be able to recognize when they happen so you could jump on all of them. So I use my MACDs, like I mentioned earlier, religiously. They are my holy grail. So look here, this is a perfect example. We have a massive resistance area. Look at my MACDs. You could tell the dash line, that is where it is zero. It is flat. It is just, there's no strength in the market. But all of a sudden, boom, they break through and I have massive movement in the MACDs and in the breakout. Boom, that is where I'm entering that trade. All right, now I have another really cool bonus trade setup for you guys because it is just as powerful to enter a new trend. And I call this one the initial reaction trade setup. Why is that? So again, you have to have your areas drawn in. You have to understand what is going on. So the new trend is really powerful because this is where the entire market, once it decides where it's going, really puts in all that energy. It's kind of like, for instance, imagine you guys want to go running, right? I want to go running. I am all hyped up and raring to go. I put out my jogging clothes, I put on my running shoes, and I'm out the door. I am full of energy. So if I was going to bet on myself, it would be in the beginning of that run, right? Right when I'm out the door. Chances of me going 2-3 miles is really high versus 3 miles down the road where I'm not really sure. Am I tired? Do I want to really continue? What if my calf hurts? All these other things could come along, right? So it's the same thing with a new trend, okay? It's the exact same thing with the new trend. You get in as early as possible, and you're only able to do that when you recognize what is happening in the market in front of you. All right, guys, once more, I said makingofadaytrader.com. All of what I just went through is there, so you can go over it again in replay mode. So here's the thing. We have absolutely everything we need to take action, right? We have everything we need to take action. We have these amazing summits. We have YouTubers. We have all these different gurus, podcasts, books, you name it. But at the end of the day, how do you know that you are doing it right? How do you know that you're doing it right? Just because you're watching someone here or watching somebody there, how do you know that you're doing it right? Because all of this is great. But at the end of the day, the real question is, how do I truly, truly get started? And this isn't from beginners only. I get this question a lot of times from seasoned traders, people who have been in the market for ages and are still not consistent. And they ask, how do I turn this around? How do I become consistent and profitable all the time? Because we want to make this our livelihood. And honestly, usually it is as simple as the fact that they are lacking understanding of the basics. Once you have the basics, you can do anything and everything you want because the foundation is built. Okay, that is the coolest thing of all, is lacking the understanding of the basics. It's literally like when you get into the car. Okay, today, I'm sure the majority of us are, older than 17 years old. So we've been driving for quite some time, right? But me and my husband have had the benefit of teaching our oldest son how to drive a car. He just recently learned how to drive a car. And when he first got he's been in the passenger seat all his life. But when he got into the driver's seat, my husband's like, okay, buckle up. Make sure that your gear stick is in neutral. Put your foot on the clutch, put your foot on the brake, release that slowly as you're putting in first gear. He's like, wait, gear, clutch, what are you talking about? Because nobody taught him that, right? Just because we think people know the basics, they don't. We are not born with this information. Now, I want you guys to really, really do a really good, creative imagination and think of it like this. Imagine you're driving and somebody got in the car who has never been in a car before, right? They've never been in a car. They don't know anything about the car. And you are like, all right, buckle up, put on your seatbelt because it's going to save your life. And they're like, buckle up, seatbelt. What is that? You never showed it to them. You said it to them, but you never showed it to them. Right? Just because somebody in the chat room is telling you that you have to enter here, but no one explained to you why or how or what, it's not going to happen, right? Until you show the basics, right? Once you show this person where the seatbelt is, all of a sudden they have a life-saving mechanism, okay? So this was truly my own sad truth. And I spent over $20,000 on my own trainings. And yet I was struggling for years because I was in all these different chat rooms and alert rooms and all this stuff. And every time I was asking questions, please explain what exactly is this area? Why do you recommend this? I was either ignored entirely or treated like I was born with this information. And I struggled for years because nobody taught that. And what happened was, after several years, I ended up losing almost $4,000 in 5 minutes. And honestly, I was just defeated. I felt completely defeated, like a total loser. I was, and I couldn't manage it anymore. I couldn't handle it anymore. It was just too much for me. And you know what I did? I quit. I literally quit. I walked away. I could not do it anymore. It was just too much. I felt like just constantly losing my family's money. It was just too hard. But the thing is here, guys, and I know that everybody in the room is the same, that we are all bit by the trading bug, right? We're all bit by this trading bug and it never truly stops itching. And do you know why? Because deep down inside, we know that we got this. We know we can do this, right? We're watching other people do it. Why is it that they can and I can't? And that was literally what's going in my head. I'm like, if they can do it, I can do it as well. So I came back to my charts. And at that point, I had 3 monitors. No joke. I had 3 monitors. I took 2 of those monitors and donated them. Well, I didn't donate them. I put them outside for my garbage men. I'm sure they took it. And I also had 10 indicators. And I removed all those indicators and I decided to go back to the basics. I was looking at just the bare naked charts and understanding what was going on. And that's when I finally slowly started to put in my indicators, because getting back to the basics was literally the secret to it all. And funny enough, a couple of years ago, one of my students goes to me, he's like, Marina, your teaching philosophy and way you're doing it is exactly like Coach John Wooden. Well, not exactly what he did, but your philosophy is very similar. And I did not know who Coach John Wooden was. So of course I looked him up, and this man was literally one of, I think to this day, is one of the top coaches of basketball ever. Like, this guy is legendary, right? And his entire philosophy, his entire way of training and teaching and everything, coaching, was, when in doubt, get back to the basics. And I mean, this guy won 88 national championships, 10 NCAAs. I mean, his accolades are just insane. He also trained A-list basketball stars, right? Yet, every time they began their training season, regardless of whatever trophies they've already accumulated, he would start from the basics. How to tie your shoe, how to roll up your socks, how to dribble the ball. Why? Because it doesn't matter all that you've accomplished, because your ego is going to override it. And guess what? You're on the court, you forgot to tie up your shoelace, boom, you sprain your ankle, and guess what? You're on the bench the rest of the season. So it doesn't matter if you have 88 national championships, you know, because you're on that bench because you overlooked the basics. So when you have the basics, you can do it all. And that is what I want to talk to you guys about today. I have a very special offer for only the participants that are here right now today. I have my introductory course, Bootcamp for Day Trading. You could do it on any apparatus, on laptop, desktop, tablets, phones, you name it. You could do it on any. And all of this for one-time price. There will never be a recurring price, one-time price of $97. Now, I want you guys to stop what you're doing. There's a lot of people in the room. You guys are here because you want to participate. I want you to stop what you're doing and go to your navigator and put in bootcampfordaytrading.com. Put in bootcampfordaytrading.com. Put it in right now. If you guys are having a hard time going in there, it has to be HTTP, no S, okay? Bootcampfordaytrading.com, so you can follow along and see exactly what is in this price. First of all, what can you get for $97 today that has the same return on investment? Do you guys like to play golf? So me and my husband were really into golf when we lived in Guatemala. When we first moved to Guatemala, it was like $27 per person. Today, it was $100. Before we moved about a year and a half ago, it was $119 per person to go golf, to go on a golf course, and that's in Guatemala. I don't even know what it's like in other parts of the world, right? It's that expensive. How about going out to lunch with your friends or family? I don't know. When me and my husband go out to eat here in Barcelona with just a glass of wine, and my husband likes these beers, they're called claras, it's already almost like $80-90 for the both of us. All right, $97. So let me break it down what you guys could get here. A lot more. The return on investment is 10x. Let me break this down for you. You're going to be getting the simplifying day trading package. And the most important thing is a 30-minute pro platform setup, right? Even though MetaStocks is such an easy platform to work with, a lot of times you want to just get past it. I help you guys through that easy setup so that we can go right into the trading, right? So you don't have to worry about that. And then we go into the market anatomy process, right? Really understanding the entire market, dissecting it, upward trend, sideways trend, downward trend, the reversal areas, the divergences, like really get into it and truly understand what is going on. Okay, it's super important. And we go through this, so it's easy for you to follow. There is no question. And when you guys see the reversal patterns, I can guarantee you the aha moments will be outstanding, and this will truly revolutionize your trading. Then we really break it down into those defense zones, right? The reversal patterns, the support and resistance areas, divergences. We really understand what is going on, because divergences, to me, the holy grail. And once you spot them, I cannot even tell you how amazing they are. And with all that, we are going to be able to master the breakout trades, right? Understanding where the breakout is, avoiding the fake out breakouts because they are real, avoiding those fake out breakouts, okay? And you'll have unlimited access to the curriculum. All of this is valued at $1,600. All right, you get all of this for $1,600. And here's what some of my students have to say. And like I said earlier, trading can be done anywhere in the world, and my students live all over the world. Michelle, best money I ever spent. I just finished the boot camp. Derek, you are the only mentor that truly checks the work, and it has been amazing. Thank you for all that you do. Adrian, I am enjoying your boot camp, learning every day. But again, I want to go to something super important. Do you remember when I asked you guys, how do you know that you are doing it right? Do you remember that? How do you know that you are doing it right? So I've included in that one-time $97 price, one entire month of one-on-one mentorship with me. One-on-one mentorship with me, meaning you could ask me unlimited questions, working with me one-on-one. We go through your chart. So you never have to wonder, am I doing it right? How do I know if I'm doing it right? Because we work together, we get it through, and you're able to see truly what's going on. Okay, because having a mentor can take you and will take you to that next level, and that is for sure. Okay, and for best for last is that all of this is worth $2,600, but like I said, $97. So please go here right now, bootcampfordaytrading.com. bootcampfordaytrading.com. You could go here right now, and here's everything we will get. You'll get everything in the course, one-on-one mentorship with me, bootcampfordaytrading.com. And here's the reality, guys. I want to be really honest here, and I think we all truly understand what is going on is when we put in a trade a day, our trades are usually between $200 to $400, right? That's the average trade. So this is worth less than one trade and will give you 10x your return on your investment. All right. Education is key. And then working with me for 1 month, this is going to get you 100 of these dinners, if not more, right? So just go for it. The education is incredible. But here's the important thing. We are right now, this is a full room. I know there's a lot of people that are sitting right here on the summit right now. And I'm only able to sell 25 spots because of my one-on-one mentorship, right? So I want to really give you my full attention. So 25 spots are only available. And usually I sell out pretty fast. So I really, really recommend that you get on it now. So let's do this right now. We're going to go in, put in bootcampfordaytrading.com. All right. And this is what it's going to take you to, bootcampfordaytrading.com. Put it in right here into your browser, and then you can follow along, and you can see one-time payment of $97. If by any chance you really want to do a payment plan, I do have for 2 times $59, but you get access automatically to absolutely everything, and we can start working immediately. Or because summer is coming up, you could have access to this offer right now and start mentorship when you are ready. That is completely up to you. Okay, so go here, bootcampfordaytrading.com. And thank you so much for having me here. And any questions you guys have, this is the time. I know that there's usually some people from YouTube, right, Jeffrey? I don't know if there's anyone asking anything from the YouTube part of it.
Hey, Marina, it's actually Kelly. Jeff stepped away for a few minutes for an
hi.
appointment. So, hi. Yeah, I actually do have one question over here on the YouTube side that was coming in, and really what your thoughts are around AI and trading and how that's kind of going to affect things moving forward.
Right. So AI is still it's in its infancy, and we really cannot personally control much of what is happening. I always want to be the driver behind the driver's seat, right? So obviously there's that whole thing that's coming out with self-driving cars, but at the end of the day, we still want to be able to drive our own car. I'm still a big believer, and even if AI comes out, I don't want to just put, like, even if it's a self-driving car, I still want to know what is happening, right? The mechanism. So for me, it's always going to be, I need to know what I'm doing and what is happening. So if AI does come, I can work with it rather than just give it my everything to it and pretend that it's going to do something for me. It's kind of like, like people that are just waiting to be saved. And I don't truly believe in that. I think you still need to know what is going on before you could give it all over to AI. So that's been my own personal experience with pretty much anything that is around AI today. Because I'm also I also am a travel writer, and it's so easy to just put it all in Chat GPT, but so much is missing from it. So you could use it as a resource, but at the end of the day, I still go over everything. I still look through it and fix it because it still needs that humanness to it. So hopefully that makes sense.
Yeah, it actually does. And we were actually talking about it here in the office the other day. And, a lot of what AI uses is still a lot of the classic indicators that you need to understand what they're doing. So it's actually exactly what we were talking about in the office. I agree with that.
Thanks. Are there any other questions?
I'm just seeing if there's any other questions. No, I don't see anything else right now. So great presentation as always. Thank you so much for joining us. Let me just kind of take the presenter from you here.
Thanks, everybody. Have a great rest of your day.
All right. Thank you so much. And let me go ahead and show my screen. Go ahead and do this, and this. All right. Give me just a second here. Okay. All right. Well, thank you to Marina again. We did put her links inside the chat window there. So if you wanted to take advantage of that offer, you can just go ahead and click on the link either in YouTube or on GoToWebinar. That chat is in both. That link is in both chats. Let me go ahead and take a moment to thank our sponsors. We always have great sponsors for these events, and this event is no different than what we've seen in the past. One of our newest sponsors here is TechnoTrader. You've seen Martha speak a couple of times during the conference. If you haven't, there'll be great videos to go back and enjoy. TechnoTrader is a great thing. We had GoNoGo here this morning. Tyler Wood, one of the CMT members, and talked a lot about Martha and her credentials as a CMT. So if you're not familiar with CMT, definitely check them out at cmtassociation.org. And TechnoTrader has been a great long-term partner of Metastock. They've been providing education using Metastock and teaching people about a lot of different aspects of the market, dark pools, which is one of the big concepts that TechnoTrader focuses on. And if you're not familiar with dark pools and how they affect the markets, these would be great courses for you over at TechnoTrader. So you can see some of their information here. Greg just posted both of those links into the YouTube chat. I'll post them into the GoToWebinar chat so you can check them out here in just a moment. So TechnoTrader, thank you for your sponsorship and making this event possible. Also, our other sponsor here is Metastock. We are Metastock. We're the hosts of this conference and one of the sponsors. What we do here at Metastock is we offer amazing technical analysis software to help you in your day-to-day trading. We help you scan the markets, look for opportunities. That's one of the biggest things about Metastock is finding opportunities. The scanning tool, as you've heard from presenters throughout the conference over and over and over again, Metastock, the scanning is just absolutely incredible, and that's where people come in and focus. The other thing that we do here is we do testing, back testing, analyzing the market and help you know if your trades work before you spend your first trading dollar, and doing that hypothetical performance reports. Forecasting, if you saw Scott Brown talk yesterday, real-time alerts, commentary, signals. Our expert advisor is another key feature of Metastock to help you know when to buy, when to sell, when to get out based off of the criteria that you're trading. And you can do all that starting at $59 a month. To get a trial of Metastock, go to metastock.com/conf-promo. Go to metastock.com/sales chat, or give us a call at 800-882-3040. We've got a great staff of people to help us out. Now, let's go ahead and talk about our next presenter. Kevin Nelson has been a longtime educator of Metastock and actually teaching people how to use Metastock. He runs a company called learnmetastock.com. He was actually an employee here at Metastock quite a few years ago. He was actually my boss when I first started here at Metastock and helped me get started with Metastock. And every employee that starts at Metastock goes through Kevin's training because it's so good. So if you're looking to get the most out of Metastock, you're going to want to take advantage of some of the things that Kevin is doing. But today, he's here to talk to us about an indicator called the Supertrend indicator. Kevin, you there?
I am. Thank you, Kelly. That's a great introduction. Appreciate it.
Yeah, well, you're a great guy, so we got to give you a great introduction.
I'm glad it's taped anyway.
Hey, let me go ahead and make you the presenter here, Kevin. You should be
Okay.
seeing that pop up right now.
There we go. Tell me when you can see my screen.
I see it.
Okay, perfect.
All right. I will go ahead and get out of your way, Kevin. And it's over to you.
Okay, thanks again, Kelly. Appreciate it. Yeah, as Kelly said, I originally started with Metastock back in the early 90s. And in 2008, I left Metastock and I started this training company here called LearnMetastock.com. And the only thing we do at Learn Metastock is really kind of help you with your program and just about anything that you can pretty much imagine with it. So what I'm going to do at the end of today's presentation, I'll give you a brief overview of our website at the end. But what I want to do at this point is I just want to jump straight into the presentation, what I'm going to be showing you here today. So what I'm going to be talking about today is an indicator, which is called the Supertrend indicator. Now, one of the things that I do is I will take trading strategies, for example, and show you how to duplicate them inside of Metastock and also create the formulas and give you the formulas and so forth. So this is actually a really good example of one of the training classes that we do. This particular training class was brought to me by a customer who told me, said, hey, you need to go out and take a look at this particular indicator. And I think it's actually a good one. And so that's exactly what I did. So I went out to the internet. I took a look at all the different YouTube videos and the training available and so forth. And it was basically perfect for a class. So this indicator called the Supertrend indicator is a trend following indicator. So if you are a trend following type of trader, this is definitely something you want to take a look at. It does a really nice job when there is a trend in place of identifying and basically keeping you in on the right side of that trend. Now, the thing to always keep in mind about trend following types of indicators, they work really well when there's trends. And obviously, when there's not a trend, this is where their weakness is, right? If you get in a sideways type of price channel, for example, where the prices are just kind of bouncing around between support and resistance, you know, and trying to use a trend indicator and something like that, obviously doesn't work as well. But when things tend to trend, this thing actually works really well. And I'll show you what I mean by it. One of my favorite things about this indicator is it's really easy to interpret. I'm going to show you the indicator. I'll plot on the chart. And, you know, within a couple of minutes, you're going to be up to speed of exactly how to use this thing. It is really, really simple, to say the least. And one of the things that another thing that I like about it as well is one of the indicators that it uses in the formula is what's called an average true range. And an average true range, or an ATR, adjusts for volatility automatically based on how much the prices are moving around. So this thing will adjust based on, again, kind of what's happening with that security and or the market. And the other thing is it's also very customizable. You know, just like with all the other types of trend following indicators, if you want to speed it up, slow it down, whatever the case may be, you can do just about anything you want. And you can also combine it with other indicators as well. And the other thing that obviously that you'll find as well is that if you want to go out and do some searches on the internet and looking for other training based off this trading strategy, there's a lot of videos out there available for you. So, you know, make sure and take a look at it. So what I did in preparation for this particular subject is I created a number of different tools for our users. And I created an indicator, an expert advisor, 2 system tests, and also an exploration. And this is the kind of thing that we do at Learn Metastock is, again, we take these trading strategies, we show you how to duplicate them, we create these formulas, and then we make the formulas downloadable for the user themselves. Now, what I'm going to be doing as a special offer here today as well is that if you're interested in these formulas, I'm going to go ahead and just give them to you. All you have to do is just send me an email at the end of today's presentation, and I'll be happy to just send the formula directly to you. So I'll show you the formulas as we're going through it, so you don't have to worry about trying to copy everything down as we're going through it. Again, if you want it, just let me know, and I'll be happy to send it to you. So just our way of kind of saying thanks for coming to the webinar here today. All right. So to get started, let's go ahead and just open up a chart. And one of the charts that I find myself just kind of going to over and over again is just an ETF of the S&P 500, which is the SPY. And the reason why I like to use the SPY a lot of times, my thought process is that if you create some type of trading strategy on a index, for example, or an ETF of the index, for example, if that strategy actually tends to work well on that, we know that the vast majority of the securities follow the overall indexes. And for that reason, hopefully a lot of this will then carry over to the individual securities as well. So again, that's why I kind of start off with a SPY a lot of times. Now, to plot the indicator up here in our quick list up here, what we have to do is we can do a search now in version 19. Really nice feature that they added. Like if you're looking for a formula, you can just start typing, for example, like Supertrend, for example. And what you'll find, for example, after you install the formulas directly into your program, you'll find an indicator called the LMS-Supertrend indicator. Now, whenever I create a formula, a system test, exploration, whatever the case is, I always put LMS at the very beginning of it to keep all my stuff together. And LMS is an abbreviation for Learn Metastock. So I'll go ahead and drag that indicator directly on top of our price bars. I'll go ahead and let go. And what it's going to ask you, it's going to ask you for two different inputs. The first input is the number of periods that you want to use for the average true range. And the second thing is the multiplier of the ATR. Now, as you can see, the default is just 7 and 3, and I'm going to keep that here for just the default. But this is, of course, where you can modify it. So we'll click on OK. And then what it's going to do, it's going to ask you how to plot, or basically how to scale the indicator. When you drag it directly on top of the prices, what's extremely important is that you merge it with your price scale of the security. So in this case, I've got my price scale over here on the right-hand side. So I want to definitely tell it to merge it with the scale on the right. We'll click on OK, and this will plot our indicator. Now, this indicator is it. This is a Supertrend indicator. And the way that you interpret this indicator is you are looking at the closing price of the security in relation to this line. So very quickly, if the closing price is above the line, you're looking for bullish types of trades. If the security closes below the lower line, what you'll notice is that that line will flip to the upside, and then you're looking for bearish types of opportunities. That's it. That's all you really have to know about this indicator. That's what I was saying. This is crazy, crazy simple as far as the indicator goes, to say the least. And as you can see here, this is a trend following indicator. So when the security tends to trend over a period of time, this indicator does really well. It's like a moving average almost. Basically, it'll keep you in on the right side of the trend. What's kind of neat about that, though, is in the calculation of it, since it's using the average true range, this line is adjusting based on volatility. And then what happens is, as the prices actually start to reverse, that's, of course, where it's going to identify a possible shift in the direction of the prices. So as we kind of scroll back here, let's go back here to a little section. Like, let's say, for example, as I was saying, like with a trend following indicator, I'll kind of zoom in just kind of like on this section right here, for example. Like if you get caught in a trading range, you know, where the prices are basically bouncing between support and resistance, this is where trend following indicators don't do well, right? Because there's not really a trend in place. So, I mean, it's a very short trend on either side. And so whenever you're trying to use a trendy type of indicator in that situation, of course, that's where it actually struggles a little bit. But the beautiful thing is that if you have your stop set correctly, and you get in the wrong type of range, you can get out of a move like that very quickly and then wait for the prices to move in the direction or basically start to trend after that point. The point being is that we don't know when the next trend is going to be. Nobody has a crystal ball. Nobody knows exactly what's going to happen. So what we have to do is we have to make the best decisions that we can at that time with the information that we have at that point in time. And again, this is an indicator that you might want to take a look at. Now, to adjust this indicator, what you can do, let's say, for example, like as you saw, I just chose the defaults of 7 and 3. 7 meaning the length and 3 being the multiplier. But that's not necessarily maybe the best length and type of indicator to use on this, or I'm sorry, the parameters to use on this chart. So then the question is, well, what can you do? One thing you can do, of course, is you can just double click directly on the indicator, and this will bring up your properties dialog here, where then you can modify these fields. Like, for example, you can change the length, you can change the multiplier, and you can just see how that fits, for example, on the chart, and just kind of eyeball it and just see, overall, does that seem to help? Does it hurt? Whatever the case may be. But to help you out, I've actually created a couple different system tests that I think will be pretty helpful. So to open up the system tester, just click on this green dollar sign up here at the very top. And this is, of course, going to open up our Power Console, and we'll then have access to the system tester where we can back test trading ideas. Now, the system tester, I don't know the group here. I know we've got, seasoned Metastock, people that have been using Metastocks for years and years and years. We have people that, are new to Metastock, and we have probably people in here that don't even have Metastock. So just very quickly, what this system tester allows you to do is it allows you to back test a trading idea on a historical set of data to determine, how well or poorly that trading idea did at that point in time. So this is actually a really powerful tool to help you kind of decide whether you want to take a closer look at a trading strategy or not. So when you download our formulas from Learn Metastock, and one of the formulas that you'll get with the Supertrend system is you'll get a system test. So up here in the search dialog, for example, if you just start typing like super, that'll actually jump you down to the two different system tests that I created. And there's two different ones. There's one that's just called the Supertrend system test, and there's another one, a second one, which is called the Supertrend system test with OPT. And OPT is an abbreviation for optimization. Now, what is optimization? Optimization allows us to test an indicator, for example, but let's say that we don't know what length that we want to use. And let's just say hypothetically just a moving average. We want to use a moving average, but we don't know if we should use a 50, 100, whatever the case may be. What optimization allows us to do is say, hey, I want you to test a whole range of numbers, and then let me go back and sort through that information to figure out which one I want to use. So this is actually a really powerful feature that you can use in the system tester. And so I've created a system test to help you do exactly that. So I'm going to go ahead and open up this system test. And inside the system test here, what you'll do is underneath the buy order here, you'll see that the formula is already filled out. And underneath the buy order is where you put the criteria of where you would, theoretically buy this security. Like, what is the actual condition where you'd go long, for example. And when you place a long position historically, then of course you have to tell it where you're going to get out. And that formula or that criteria is then underneath the sell order. Now, if you're a more advanced trader, you've been trading for a while, whatever the case may be, and you also want to test it going short, you can also do that as well. And you'll see we've already got the formulas filled in there for you as well. All right. But so when you run an optimization, what you'll find is over on the far right-hand side here, there's going to be another tab here called optimizations. And this is where you can put in the range of indicators that you want to test. You'll see that we've got two different ones set up. We have an ATR multiplier and we have an ATR length. So the multiplier is going to test the different multipliers that we're going to use for this indicator. And I'll go ahead and double click on it. And you'll see that this is going to start off at a multiplier of 1, and it's going to test up to a multiplier of 10 in steps of 10. So it's going to test a 1, 2, 3, all the way up to 10. So I'll click on OK. And then the second thing it's going to do, it's going to test, for example, a bunch of different lengths of the ATR indicator itself. And it's going to test, for example, anywhere from 2 to 40 in steps of 2. So it's going to test at 2, 4, 6, all the way up again, all the way to 40. Now, in running all those different combinations, you'll see down here, it's going to run through 200 different combinations. So again, this is really very, very powerful, to say the least, to say, hey, I don't know what length I should use. I want you to go through and test all these different ones and let me figure out which one I want to use after that. So that's exactly what we're going to do here. So we'll click on OK. And then to run it, you first of all, put in the symbol of security that you want to run. So I'm going to go ahead and put in the symbol of the SPY. I'm going to try to keep it pretty straightforward here today. And we're going to test just going long only, for example. We'll tell it to go back and test the last 1,250 records. And if I'm using end-of-day data, that, by the way, is equivalent to about 5 years of data. Underneath that, we're going to choose or test it on daily data. And then for the trade options here, let me just show you what my settings are very quickly. I'm going to go to the account tab here, and you'll see that what I'm going to run is what's called a points only test. And what a points only test does is it just tests or basically returns a raw number of points that were gained or lost for each trade. So let's say hypothetically you bought a security at 12, you sold it at 15. A points only test is going to come back with a result of 3. So 3 points were gained on that trade. Now, the reason why I use that or use a points only is that you can also test dollar figures, for example, as well. But when I'm initially testing a trading idea, I generally use a points only test. And the reason being is I find it really simple to compare the results against each other. So if I run, 10 different stocks and I'm just looking at raw number of points that were gained or lost, I can very quickly just kind of go through those and kind of figure out which ones I like or which ones I don't. If you use a dollar figure when you're testing, the other thing that will come into play is that you can also have a test, for example, like interest rates you'll receive and whether or not you want to trade on margin and all this. And this is the kind of stuff, in my opinion, can kind of muddy the results a little bit, makes it a little bit harder to compare the results against each other. So again, just my opinion, I run a points only test initially, but when I kind of zero in on a system test that I like, a lot of times I will go back and then enter in a dollar figure to see, how much money, for example, something like that is worth. So yeah. All right. So then over here on the right-hand side, I've got 0 set up for my commissions. And then for the trade execution here, you'll also notice that I've got everything to be traded at the opening with a 1-period delay. And what that means is that if I get a buy signal on a daily chart and the buy signal was on Wednesday, this is going to simulate that I got in at the opening on Thursday. And then vice versa, if I get an exit on Friday, this again is going to simulate that I got out at the opening on Monday. All right. And then down here at the very bottom, you'll see that the most system test results that this will actually keep track of is 100. So if you remember a second ago, I'll go ahead and get this started here, by the way, and we'll talk about that here in just a sec. But since this is going to run through 200 different combinations, we're going to just kind of let this go here for just a second. So this is going to run through 200 combinations, but the system tester and the optimization will keep 100 of the most profitable. So keep that in mind when we're also taking a look at the results there as well, because I know that can be a little confusing when we're looking at the results of these different things. Now, the other thing I want to point out too is that if you have any types of questions during today's, webinar here, make sure and let me know. Just send me a message in the chat window. And Kelly, if you want to interrupt me because, there's a particular question with something that I'm doing right at that point, feel free to interject, to say the least. But otherwise, if you want to hold your questions to the end, I'll be happy to help you out at that time as well. All right. So it looks like down here at the bottom, you can see exactly where we are inside the system test here. So we'll go ahead and let that finish here. All right. Now, when it's finished, we'll click on View Report. And when you run that system test with those same settings that I just showed you here, this is what it's going to look like here. And you'll again notice that everything is in the green. And so these are all profitable systems. So the question is like, well, hold it. You mean that every combination that we ran on that system test was profitable? We ran through 200 different versions, right? But the answer is, remember that this is only keeping 100 of the most profitable. So there's a very good chance that there was a number of unprofitable system tests, but these are the 100 of the most profitable. Now, when looking at the report like this, we can, of course, sort on any of these columns. So for example, like I'll click on net profit. This is the one that most people want to zero in on, of course, and they want the one that's generated the most. And as you can see, this one that generated the most generated over 237 points. It took, or basically traded 8 times during that system test. And out of those 8 trades, 6 of them were winning trades and 2 of them were losing trades. And then the average profit to average loss was 2.55. Now, what that means that for every point that I lost on a losing trade, I made over 2.5 points on a winning trade. And in my opinion, this is one of the most, if not the most important thing to really look at when looking at these different system tests. I know everybody wants to, have a system test that generates 80, 90% winners and so forth. We don't want to be wrong by any stretch, but the fact of the matter is that if you've ever traded before, you are going to be wrong. I can promise you that you are not going to have 100% winning trades. So the question is like, well, if you have, if you have losing trades, the question is, well, how do you manage that? What do you do? One of the things that you can do in preparation is that when you're working on these different trading strategies, is that you're working in preparation where your average winner is substantially larger than your average loser. Okay, so we'll talk more about that here in just a minute. But then to figure out what that used or what combination that was, you can see that if I open this up here a little bit, you'll see OPT number 1, which is the multiplier, use a number of 5. And then for the length of the ATR, the length was 38. Now, if we want to take a closer look at it, we can, of course, double click on it, and this will open up our system test results. And we can, of course, then go through these different fields here to kind of figure this out. So to figure out really, is this good, bad, whatever the case is, there's a lot of information inside this page that I would highly recommend that you try to go through as many of these different fields as you can. And what you'll find is that inside of Metastock, the help inside here is actually really well done. So if you click on the help anywhere, what you'll find is that these different fields will be explained to you. And a lot of times what you'll find is that you'll find some fields that are going to be really, really interesting to you. And other ones you'll be like, I'm not so worried about that one. But that's the kind of thing that you'll need to kind of figure out which ones are important to you or not. But in this case, for example, one thing that a lot of people look at here is they look at this profit at 237, and then they immediately take a look at this field right here, which is the buy and hold. And they're saying that the buy and hold is 247. So this system test, for example, generated 237 points, but the buy and hold was 247. What that means is that if I would have bought this security on the very first bar of that chart and literally just held on to it for that entire period of time and not done anything, I'd be up 247 points, right? That's great, right? But if I chose to trade it using this system, I would be up 237 points. So then the question is, well, I didn't even beat the buy and hold. Why would I do that? Well, before you can really answer that question, though, is that you need to go through a lot of these fields to really kind of familiarize yourself with this, because once you do, you'll find that a lot of times, even though the profit might be substantially less than the buy and hold, it might be a really good system for you to possibly trade. So in this case, for example, it traded 8 times. It had 6 winning trades and 2 losing trades. The average profit was over 45.5 points, and the average loss was over 17.8 points. So that's that ratio right there. That's that 2.5 to 1 ratio, meaning that your average profit was over 2.5 times the size of your average loss. And in my opinion, that's extremely important. You can also go through, we've done a training video up on the Learn Metastock website. It's called The Risk of Ruin. If you haven't seen that video before, I'd highly recommend that you take a look at it. It's a concept that was created by a gentleman by the name of Brent Penfold. And he did a really good job of explaining, for example, like average size of winners versus average size of losers and how it works out. The point being is that if your average winning trade is close to the size of your average losing trade or even less, statistically, if you trade a strategy like that long enough, it will wipe out your account. No questions asked, right? Because we don't know when the next winner is. We don't know when the next loser is. We don't know how big they're going to be and so forth. So again, statistically, if you do that and go through your homework, you'll see exactly what I mean. But go up and take a look at that video if you haven't seen that before. Anyway, so we'll kind of scroll down here a little bit. Another thing that I look at that a lot of people tend to overlook is this number right here, this out of market timing. This is saying how much we are out of the market. So in order to generate, for example, our profits, we're out of the market over 400 bars. So what does that mean? Well, remember, there's typically about 250 trading days in a year. So if we're out of the market 400 bars, that's a little over a year and a half, right? So that means you generated 237 points in about 3.5 years of being exposed to the market. And in order to generate 247 points, you were fully exposed for the entire 5-year period. So this is one of those numbers that can really change things quite a bit. And that can be a really dramatic turning point for a lot of people right there. But as you can see, a lot of different fields to take a look at. But I'm not going to go into these, of course, today. But another thing I like to look at is I like to look at the equity curve. And this just tells us where we started off and where we ended up. And what we're looking for is we're looking for as smooth of a line as possible. You know, we're trying to avoid these spots here where we get like these jagged drops in the account or the equity. And that's just telling us that we've got some pretty big drawdowns at that point, meaning we're on the wrong side of the trade during the market there. So the other thing I really want to do too is I also want to go down here and click on this plot on chart button, because this is really the telling point right here to make sure that everything else is working correctly. So when you do that, this is going to plot your equity curve up here at the top. And since we've already seen that, I'll go ahead and close down this indicator. And then I'm going to zoom in here, and we're just going to take just a quick look here at a couple trades here just to see if this thing is buying and selling where it should. Now, the system test results that we're looking at here were generated using a combination of 5 and 38. So if you want your indicator to match, just double click on it, go in, and then just change it to whatever that, whatever numbers you want to use. So I'll go ahead and change the length to 38, and I'll change the multiplier to 5, click on OK. And then what you'll notice now is our indicator has changed quite a bit. So the way that we interpret this is that if the prices are moving up, for example, and they close above this line, what that's going to do is that's going to shift the line underneath the price bars, and then you're going to be long at that point. And then according to our system test, we simulated that we got into the trade 1 bar later, which of course would be this bar right here. Now to check it, what you can do is you can hover over that number, and this will tell you that position number or trade number 8, for example, traded 1 share, and the entry price was 525.83. So to check it, if you hover over that price bar and look at the opening field, you'll see the opening field is 525.83. So that's perfect. And then, of course, then if we'll go back over here to an exit, you'll see that right here, you'll see that this bar traded below that line. The indicator switched to the upper side, and this is then indicating that you got out at this point, meaning you got out trade number 7 at a price of 501.98. And to check that, hover over that price bar, and you can see the price is 501.98. So that's perfect. That's exactly what we're looking for. So then, of course, you can, of course, kind of zoom out and get more of a bird's eye view of how those settings actually played out on this security, for example. So that's the one thing that I really like to do, of course, is go through, try some different parameters on the securities that are of interest to you, and just see how they play out. Apply them to your chart and make sure that the signals and the indicators and everything else match up exactly how you want them to match up. And if they don't, that's of course where you need to stop, regroup, try to figure out exactly what the problem is before you go any further. Now, another thing I'll do is that when I'm testing different types of trading strategies is a lot of times I'll test like a group of securities rather than just one security at a time. Now, the reason why I want to do that is because what I find sometimes is by creating a strategy that works on a group of securities, in my opinion, I think I'm going about it pretty objectively. And if I make some small tweaks to the system and it helps the group overall, I might be onto something. But vice versa, if I make some tweaks and it goes against it, then I know, yeah, probably not going in the right direction. And then, of course, then you can zero in on individual securities after that point. But let me just show you how I would do something like that with this system. So I'm going to go back to our system tester, for example. And let's say, for example, that I want to run this system test, but I want to use just a fixed set of numbers. What I would recommend that you do is I'd run the system test using this one right here, which is just called the Supertrend system test. This is the one that you can modify. I would highly recommend do not modify this system test, but modify this one instead. And then the other thing I always recommend is that if you want to make any changes to original formulas, I recommend that you make a copy of it and then make changes to that copied version. So to do that, just right click directly on the system, click on copy, And now you'll see that now we've got a copy of that system. That's what I want to make my changes to. So I'll go ahead and open that up, and I'll go to the buy order. And let's just say that I want to use those same parameters at 538, but I want to test it on a group of securities. So to do that, I'd change my multiplier. For example, I'll change that to 5. I'll change my length of it to 38. So that's for my buy order. And if I'm doing that for the buy order, I also want to go to my sell order and do the same thing there as well. So I'll change my multiplier to 5, and I'll change the length here to 38. All right. Now we'll click on OK. And now I want to run this system test, this one that's called copy. So I'm going to select that, and I'm going to run that on the NASDAQ 100. And we'll go ahead and just click on the start system test. Now you'll notice when I clicked on that, I didn't change any of the system settings, because once I actually, create the system and basically set my settings the way that I want it, when I'm testing it against other securities, it's important that you don't change things as you're going through this, because this is that whole point about trying to compare different system tests against each other. And if you go through and you're making just small tweaks to your system tests and trying to compare them, that's really going to throw you off quite a bit. So just keep that in mind when you're running these different system tests. All right. Now, when this is finished, down here at the bottom here, what I'll do is I'll go ahead and click on this View Report button, and we're right back into the system test results here. And let's go ahead and make this a little bit bigger so we can see this. And one more time, I'll go ahead and sort on the net profit. So what I did now is I ran that setting of 538, and I ran it on the NASDAQ 100 securities here. And what we're looking at here are the individual securities and how they did with those settings. So for example, you can see that Broadcom was the most profitable, or generated the most number of points, I should say. Not necessarily most profitable, but the most points. It generated 903 points. It had 6 trades, 4 winners, 2 losers. And the average winner to average loss was over 4 times the size. The average winner was over 4 times the size of the average loss. That's a really nice ratio. So go ahead and open that up. And you can see the buy and hold for that same system was 1153. So it didn't beat the buy and hold, but you only traded 6 times, and out of those 4, so that's a nice ratio. And then your average profit was substantially larger than your average loss, and that's a really nice ratio right there. And then the other thing I'll look at again is this out of market timing. I was out of the market over 419 bars. So again, I was in this market for 3.5 years, and I generated 900 points. And if I wanted to generate 1,100 points, according to this one, I'd have had to have been involved, or basically in the market, for the whole 5 years. So, comparing things to the buy and hold is tricky. And one of the things about comparing to the buy and hold, for example, is that the only way that you're going to generate those profits is when you literally hang on to something for that entire period of time. And that's the whole idea about using technical analysis, is hopefully finding different, finding the sweet spots of these moves. And that's exactly what this is really kind of after. So we'll go back here, and of course, then you can just kind of go down and take a look at some of these results here. So the next one down, this one actually beat the buy, or I'm sorry, came very close to buy and hold, 763 as opposed to 771. It had 9 trades, 6 of them were winning trades and 3 losers. The average profit was 149. The average loss was 44. Scroll down, and as you can see, we're out of the market. This case, almost 2 years there. So this again makes this number actually look quite a bit better. So that's what we can do, is we can go back and we can look at the individual securities like this, and we can take a look at them one at a time. Or what I like to do, as I was explaining earlier, is I like to look at the entire group, or the entire results of that entire group of securities that I tested. So what you can do is, when you're looking at a system test like this, is that you can right click inside the report, click on copy to clipboard. And then, for example, like if you use Excel, let me jump over here to Excel here. You can open up a spreadsheet and you can literally paste in those results. And what's nice now is now you can do all types of analysis on these results when you're looking at something like this. Now, one of the hitches is that when you run a points only test and you paste the results into Excel, you'll notice that underneath this column here, It'll tell us the number of points that were gained, for example, in this case, but it also has an abbreviation of PTS at the end for points. So now this is a mixed character cell. So what we have to do, if we want to just use the numbers, because I want to average them, see what the totals are and so forth, I have to get rid of this abbreviation. So here's a quick way to do this. If you've got an Excel spreadsheet like this, all you have to do is go up here to the Find and Select, choose Replace. Again, that's Find, Select, Replace, right? And then inside this dialog, you can tell it what you want to replace. So I want to get rid of the abbreviation of PTS, and I want to replace it just with a blank, for example. So I'll click on Replace All, and that'll get rid of everything. And by doing that, now I've got some numbers these are actual numbers that I can work with. And the real advantage is now I can like highlight, for example, like all the winning systems. For example, I'll go all the way down here to where they turn to 0, like that one right down here. If you look down here at the bottom, I don't know if you can all see this, but the average is 149. There were 70 securities that tested profitably and so forth. So that'll tell us out of those 101, 70 of them were profitable. That means that 30 of them were unprofitable. So I'll select those. And here you can see that the average loss per security was 23. So again, that's some pretty good information if you want to test something as a group there. And that's something that actually makes it really nice if you want to test an entire group and then test it or basically compare it against another group. Now, another thing I want to show you how to do here inside of this system that I'm showing you here is that when I was studying, for example, or trying to figure out how to present this strategy and looking at all these different trading strategies that are out there, one of the things that I kept seeing over and over again was combining this indicator with other indicators as well. And one of the indicators that I saw, probably the most common example that I saw, was combining this indicator, for example, with a moving average and saying, hey, we only want to trade or basically take this long position if it's above its moving average. And the moving average that I saw over and over again was a 200 period exponential moving average. So let's just go ahead and let me show you how you can use this in combination with something else. So first of all, let's go ahead and plot a moving average here in our chart. I'll just go ahead and sort of type moving average. I'll find the moving average. I'll drag it directly on top of our price bars. We'll change the length of it to 200 and the method to exponential, and make sure that it's based off the closing price of the security and click on OK. So this will plot our moving average. And I'll go ahead and just change the color of this here too, just so we can really see, you know, which one is which. So I'll go ahead and make that yellow, for example. All right, so this is our 200 period exponential moving average. And what I want to test here is I want to say, hey, I only want to trade this security, for example, if the security is over its 200 period moving average, and then I get a buy signal. If the security happens to be under the 200 period moving average and I get a buy signal, I want to ignore that type of signal. So the way that you can do that is we'll go back into our system tester, we'll open it up. And so this is the area where, depending on your level with Metastock and formula language, this is where it can get maybe, I don't know, a little tougher, I guess is kind of my point. And that is the one real beautiful thing about Metastock is the ability that you can ask just about any type of what if question you can dream up. And in order to really take advantage of that, you really have to kind of learn how Metastock works. And if you're so inclined to do something like that, the next step is to look at its formula language and learn how to work with that a little bit. You know, even if you're not really interested in creating your own and so forth, the more that you understand about the formula language, the more it'll help you. But again, the power of this thing is just the ability for you to ask whatever type of crazy what if questions you can imagine. So in this situation, what we want to do is we want to say, hey, I want to know what my results would have been if I would have traded this system, for example, and I only want to take a buy signal if the closing price is above its 200 period moving average. Well, if you go to the buy order here, underneath this formula here, this last line right here, this line right here is going to basically generate a buy signal. And how it's generating a buy signal is where the closing price is crossing up above that indicator. And the indicator is this formula right here. So in other words, if the closing price crosses up above that blue line, that's your buy signal. But what we want to do is we also want to add that second criteria of the closing price also being above its moving average. So we could say, and we want the closing price to be greater than its moving average. Now, the way that you would write this is you write MOV, open parenthesis, close, comma, the length of the moving average, and then the type of moving average. And so I know for a lot of you, you're probably like, oh man, I don't know if I want to get into this, but this is the kind of stuff obviously I can help you with. So this second line is just saying the close is greater or above its 200 period moving average. So we're looking for two conditions to be true. So we'll click on OK. And then if we want to run this, we'll go ahead and run this on that same group. I'll just go ahead and choose the NASDAQ 100 again. I'll keep all the same settings and so forth. And what I'll do here is we'll just see what those buy and sell signals look like as, you know, for the entire group. And we'll compare them against that previous group there as well. Okay. You can get a feel for how quickly this is going through down here in the lower right-hand corner. But what you'll find is when you're running these different system tests, the majority of these things are going to run through very, very quickly, to say the least. So we'll go ahead and let this run. And we're almost there. So when it's, and by the way, again, like I say, if you have any questions, make sure and let me know. Otherwise, I'll just, you know, I'll keep going on. You know, I just have to tell me to shut up at some point. So anyway. All right, so now we've got, for example, like we've got these results here, and you can see that these actually look pretty similar to like the previous test results, but you'll see also we've got different securities at the top. The one that was at the top before was, for example, like Broadcom, but you'll see that now, for example, it only traded 4 times, for example, with this system because now it's using the 200 period moving average. But if you want to compare this to like the previous group, what I could do again is I could just right click inside here, click on copy to clipboard, jump over to like an Excel spreadsheet, go to a new tab, and then paste in my results and do exactly what I did before. So for example, like in this column where I need to get rid of this abbreviation, I just go ahead and select the column. I click on find and select and then replace. So that's find and select and then replace. And then again, I just replace PTS with a blank and click on replace all. So now what I can do here is now I can look at the, for example, like the winners, kind of scroll down here and say by combining or using that moving average criteria, now my average winners actually went down. Before it was like 140 something, now it's 121. But the count actually went up. I actually had 3 more securities that tested profitably. Before I only had 70, right? So then we could also then take a look at the losers then too. So for example, I could highlight all those. And here you can see, for example, now the average, actually in this case, now it went up. The average system lost 40 points as opposed to 23 points. And the count also is at 27 there. So that case, depending on the type of trading strategy that you're looking for, you know, this will help answer a lot of questions, you know, if you want to get into it to like this type of depth. But this, again, like I say, is the stuff that I can really help you with. And this is what we do at Learn Metastock, to say the least. Now, another thing that I did as well is I also created an exploration here for you. If we'll go ahead and just do a search, for example, on super, and we'll jump down, you'll see the Supertrend exploration. Now, as Kelly was alluding to before, and I guess there's been a number of presenters that have talked about the Explorer, but the Explorer is actually my favorite tool of the program. The versatility of the Explorer and what this thing can do, the ability to rip through literally thousands of securities in a matter of minutes is just unbelievable. And just finding that needle in a haystack kind of thing. So, I mean, I absolutely love this thing. So anyway, I created this exploration. And the way that this works is that if you jump over here to the buy and sell over here, this is where it'll generate, for example, if there's a buy signal, it'll generate a 1 in the report. And if there's a sell signal, it'll generate a 1 underneath that. So let me just go ahead and run one real quick, and I'll just show you how it works. So we'll select it. I'll choose the NASDAQ 100. I'll choose 1250 records, so about 5 years of data, and we'll run through the current date, or basically get as much data as we can, and we'll go ahead and click on our start exploration. Now, the other thing you might want to pay attention to too is that when you're running these explorations, if you have the real-time or professional version and you're telling it to get the most recent data that it can, you're getting data, that's current right now. And if you're trying to look for end-of-day data, just be aware that, of course, you're in the middle of the market, and there's, the data is going to change, of course, by the end of the market there as well. So in this case, since we ran a scan here, if we want to look for a buy signal, we can click on that column, and we can look for any securities that are giving us a 1 right now. So we've got 2 securities. We have Workday and we have Cadence Design. So we'll go ahead and select out, click on Workday, for example. That'll open up that security in the background. And we can also choose, for example, like Cadence Design. And if you're looking for any sell signals, you click on that column heading. And it looks like Global, I don't know what that company is, Global something here. We'll go ahead and double click on this one here too. So hang on. There we go. All right. Okay. Oh, yeah, there we go. Let's go ahead and close down this report. But the thing I want to point out about this scan here, what we did, or you can do with this scan, is you can also modify the parameters of this one as well. The default that when you receive it is just going to have the default of 7 and 3, but you can change it to whatever parameters that you want. I'd highly recommend that you make copies of it first, but again, that's up to you. All right. Global Foundry, I don't know what it is, but anyway, so let's go ahead and plot our indicator here on our chart. We'll just grab the Supertrend indicator, and all you do is you drag it on your chart, choose the settings that you want. So the number of periods was, we were just using the default, weren't we? So we'll go ahead and set that to 7 and 3. We'll click on OK. And it's so important that you merge it with your scale, click on OK, and then that'll plot the indicator. So the reason why this indicator this security came up as a sell signal is because it traded below that line right here. And at that point right here, now the line is going to start plotting above the price plot until it trades through that level. So that, for example, is that first security. And then the other one was Workday. So let's go ahead and plot that indicator here on our chart. If I can grab it there. There we go. Grab that. And again, we'll just use the defaults here because that's what we scanned on. And here you can see this is a buy signal right now because, of course, this security right now, this closing price is above that line at that point. So as you can see, it's super simple to use. You can modify it as much as you want. And in addition to that, I also created an expert advisor to help you as well. So if you go up to your expert advisor, do a search, for example, on Super up there, you can attach that expert, select it, and then down here at the bottom, click on attach, click on close, and that'll attach your expert, and that'll give you those buy and sell signals on your chart as they actually occur. The nice thing about the expert advisor is that these signals are dynamic. They will actually be applied to your chart as you get new data. So it's, in my opinion, I think creating an expert advisor for your system is a really nice addition to your trading strategy there as well. And like all the other tools that you'll have here, if you want to modify the parameters of the expert advisor, then of course you can do that as well. Okay. All right. So with that being said, that's our Supertrend system. So what I'd like to do, if it's okay, is I'd just like to walk you through what we do at Learn Metastock. But this was a pretty good example today. We take trading strategies and we literally show you how to duplicate them. And we also give you the formula so you can download them directly into your program. So, whether you're a seasoned trader or just getting started, we can help you a lot of different ways. So if you go up to learnmetastock.com, up here at the very top, for example, if you click on this live classes tab, for example, this will walk you through like our class schedule for the week. Like, for example, on Tuesday, we did an expert advisor advanced class. Yesterday, we did a super trend indicator class in preparation for today and so forth. But you can see our schedule by clicking on that. But if you can't make our live classes, Then you can go to the video library, for example, and inside our video library, this is where the majority of our customers spend their time, is going through our different recordings. And if you can't make our live class, for example, you can go to this category right here, which is called the live class recordings. And what we do is we put the recordings of our live classes up on the site from the previous week. Now I'm leaving these two up here for a little bit longer here because 19 is new and I want to make sure everybody understands how everything works. But we always, again, like I say, we put the previous week's recordings up here. So if you can't make that time, of course, you'll never miss anything because we always make it available for you. Now, if you're just getting started with Metastock or new to our service, the area that I always recommend people to begin with is this section right here called the Getting Started section. And what I highly recommend everybody do, even if you're, know Metastock well and so forth, is go through the introduction part 1, the introduction part 2, and the next step into Metastock. And what you'll find then is that these are going to give you a really good solid foundation of how to get started with the program, because once you have a good foundation, you can do anything you want. The problem that I see a lot of people run into is they get excited, they get the program, they want to jump straight into system testing, for example, and they just try to do too much right off the beginning. And a lot of times the basics is what'll kind of come back to trip you up. So, my goal is to get you started on the right foot and help you get started correctly. And from there, then we can, of course, build on it. Now, we've got these different categories and all, whatever you want to run. So, for example, like if you want to learn more about system testing, go to our system testing. You'll find a number of videos just on there. This is that one video I was talking about called Risk or Ruin that I think it's pretty good myself, but it talks about, the average winners versus average losers and how these things statistically play out over a long period of time that a lot of people don't really think about. We have a number of videos just on stops and formulas that you can download using different types of stops. This is another area that you could spend a lot of time working on, but videos on the Explorer. If you want to learn about formula writing, we have a number of videos just on formula writing. One of the areas, but probably the most popular area on our site is this section right here called the trading strategies. This is where we take those different ideas, for example, and then we make these available where we take it. So here's a good example. This is a Supertrend indicator class right here that we have up on the site. So if you're a member, you could just go to here, you could watch this video anytime, and then to download the formulas, you just click on this link down here at the bottom, and that'll download the formulas directly into your Metastock program. So, I can't promise a lot, but one thing I can tell you is that I can save you a massive amount of time, effort, in getting up to speed and using Metastock, successfully. So, if you haven't tried our service before, take a look at it, give it some thought, because again, we can be a very, very good resource for you, to say the least. So that's what I've got here for you today. I hope that that's helpful. Oh, and by the way, just real quick, one more thing real quick. My email address is admin@learnmetastock.com. So if you want to, if you're interested in receiving those formulas, just drop me an email. Tell me that you were in the webinar today, and I'll be happy to send you the formulas that I was showing you here today as well. All right. I'll go ahead and turn it back to Kelly.
Actually, I have a couple of questions here for you, Kevin.
All right.
If you have a moment for those.
I do.
First, Matt wants to know, along with the Supertrend indicator, how would you use stop losses along with that? What would be the stop loss method that you would say to go along with that?
That's a great question. I mean, that's $1 million question, right? That's another area that a lot of people tend to overlook, especially newer traders. And that is, for example, so many people, tend to focus so much on that perfect entry is that they don't spend as much time on using stops, right? So one thing that I've kind of have found is that I try to keep the strategies as simple as possible. And I don't know if you found this as well over the years yourself, Kelly, but a lot of times I've spoken with literally thousands and thousands of traders, and some of the traders that have done the best over the years, who seem to, hang in there and are trading for long periods of time, have really pretty simple trading strategies, and they don't overcomplicate them. And adding stops a lot of times to a trading strategy, in my opinion, depending on what you're using, can be tough and sometimes don't actually help with the overall results. So this is the kind of thing that you can experiment with, and you can try as many different ways that you can. So for example, let's go back into that system test here for just a second. And one thing that I was showing you here briefly is that, like, for example, like here, this last line right here, we added this condition where the close has to be over its 200 period moving average. That's just for the entry. Well, then what you could do is you could go to the sell order, for example, and you could add that same criteria, but maybe reverse it. Say that, hey, if the closing price crosses down or the closing price goes below its moving average, you could add that to it, right? So that's one thing you could do. Another thing that you could do too is you could go to this stops area too. And this is another area that we did a complete video just on this one page, because there's quite a bit to understand here in this page and the way that it works and so forth. But this is where you can go in and you can try a lot of those things. Like we could incorporate, for example, like a maximum loss or a profit target or an inactivity minimum change or whatever the case, whatever type of stop that you want to incorporate with this, and you could try it with it. So again, this is where you can experiment to your heart's delight. And of course, to help you out as well, then in addition to that, I've created a number of different stops that you can download as well by going to the video library, click on this page right here, which is called stops. And here I go through a number of different stops that you can add to literally any type of trading strategy that you want, including, of course, this one. So anyway, I hope that helps, and hopefully that helps kind of get you going in the right direction anyway.
That's perfect. And I think that's one of the challenges that traders kind of come up against, is what stops are best for me. And it's great to have these types of videos that you can go through to kind of help you figure out which one's going to be the best stop for you and incorporate with your system. Wouldn't you agree, Kev?
Right. Absolutely.
Perfect. Well, let's see. In your presentation, I also learned you should be doing a Learn Excel site as well. So
yeah, I know. Excel, that's another one. We could spend a lot of time in Excel, couldn't we?
Definitely. Okay. And yeah, and the other thing that Kevin talked a lot about that I totally agree with is if you're ever messing with something in Metastock, make a copy of it first. It's really easy to do. And that way you can edit to your heart's content and still have the original. All right. Well, let me talk about what Kevin's offering here. Kev, thank you so much for coming in.
Great.
Matt,
thanks for having me.
Thank you for your comments on stops there. So
Absolutely.
Let me go ahead and do this. All right. And I'm just going to go ahead and do this. Kevin, dismiss you out. And thanks for stopping by.
Thank you.
All right, let's go ahead and talk about what Kevin was offering. So he did give you his email address for that free download that you can get for Metastock. Just send him an email to admin@learnmetastock.com. Now, if you're interested in learnmetastock.com, it is a great resource to help you learn more about Metastock and how Metastock works. I mean, everything from very basic videos and tutorials up to very advanced, kind of getting into some of the things that you kind of saw today. So there's a lot of range that you can get. And again, most of Metastock employees go through his training when they first start to learn all the ins and outs of Metastock. It's that good of training. So with it, again, you get 3 live training classes per week. You get the hundreds of instructional videos, the Metastock videos, the 4 expert advisor videos, system tests, videos on stops like you showed, and much more. So there's a lot that you can get, and all the systems that he includes for free, which is really cool to get all those systems. Now, in all those systems, you get 9 templates, 62 indicators, 14 experts, 28 system tests, 13 explorations that you can get with it. So there's a lot that Kevin offers. Now, with this, you can get a new customer special. It runs $99 a month for learnmetastock.com. You can get $99 for 3 months here at the show. So if you do $99, you'll get 3 months of access to everything Learn Metastock has to offer, all the live classes, everything that he was showing. And to get that, you just go to metastock.com/learn metastock 3-for-1 or metastock.com/conf promo. Either of those sites will give you that special offer. You can also call us 800-882-3040 or go to metastock.com/sales chat. And there you can take advantage of any of those offers. So Greg will be posting those links up in YouTube, which he already has. I'll get them into GoToWebinar here in just a moment. But before we bring on our next speaker, I'd just again like to thank our sponsors. First of all, Metastock. You were just seeing Metastock in Kevin's demonstration there. Some of the powerful tools that you can do. But again, scanning, expert advisor, the ability to backtest are all very robust things that you can use in your trading on a day-to-day basis. The ability to just sit down at the end of the day, scan the market, find trades for the next day. It's just huge. It kind of sorts out all the noise, takes the noise out of the market. And if you get a 3-month trial to Metastock, get a 3-month trial to Learn Metastock with it and learn everything you need to get started with Metastock and make it the most effective trading tool for you. I'd also like to thank traders.com, Stocks and Commodities Magazine. They have been an amazing sponsor of the conferences and summits since we started doing them. They've been supporting us through the whole thing. If you go to their website, traders.com, you can see all of their information. They have over 17,000 articles on trading archived, over 1.2 million subscribers, have been publishing since 1982. They are a great organization for helping you learn about the markets and different articles. So check out traders.com, Stocks and Commodities Magazine. If you prefer to get it in the mail or visit it online, you can do that. All right. So I'm excited to bring on our next presenter. He is newer to the conferences. This will be his second presentation, but we really enjoyed having him the first time. This is John from Asbury Research. He has been a longtime Metastock user. He was once, we've been talking a lot about the CMT organization. The CMT organization is one of our sponsors. He was actually vice president of the CMT organization for quite some time. So fantastic credentials, longtime Metastock user. We are thrilled to have him here. John, are you there?
I think so.
Yes, I can hear you. You are there.
If we can see if we can get this camera going. Give me 1 minute here. See if
I can see your backdrop on the camera, but not you.
Yeah, we want that reversed. We want to see. Let me see if we can play with the preferences here a little bit. We'll have it for here.
There you go. Now I can see
you. There you go. So now you can see me. Any of you that would rather see the backdrop, please raise your hand.
Let me do this. Let me switch it to you to make you the presenter. You should be seeing a pop-up right about now.
Yes, and I'm showing my screen.
Okay, I'll let you know when I can see that. I can now see it.
Very good. I'm going to move a couple of things around here. I'm going to try to move some of this stuff around here so I can see what I'm showing you. Just going to kind of rearrange the what I can see. And I should be able to move this up. I did. Cool. Okay. So if you can see me and you're ready, I will begin.
It's all you. Take it away. I'll get out of your way.
Yeah, thanks. This is my second time that I have been in front of you with Metastock. But when I started on the floor of the Chicago Mercantile Exchange in the early 80s, I think probably the first software that I ever used was Metastock. So that was my introduction to it. I've been doing this for 40 years, so I look at a lot of different tools, and Metastock is one of those, and it's probably, well, it's certainly the one that I've been using for the longest time, and it's a very robust tool, and I'm glad to be a part of this. So just a little bit about me for those who don't know who I am. I started on the floor of the CME in 1980. started as a runner. I didn't know anything about the markets except that's where you went if you were young and you wanted to make a lot of money. I went there strictly for, mercenary reasons. I wanted to find a career that I could learn something and, be able to have an opportunity to make an exceptional living. I spent 17 years down there. And if you work on the exchange, you very quickly get introduced, or at least back in the day, really, we don't have the exchanges anymore, certainly the way they were. But you learn very quickly that if you want to make money and understand markets, you're not necessarily coming from academia. You're not coming in there with a PhD in economics. You're coming in there as somebody that understands the day-to-day mechanics of markets and, the emotions that are involved in markets, the momentum that we see on the floor. The S&P was up 35 when I woke up this morning. It's down 38 now. Understanding, the fear and greed faction, and that's really where technical analysis is so important, and quantitative analysis is important. Money flows, relative performance. That's stuff we're going to look at today. Hopefully, when you come out of here today, you'll learn some maybe new tools or maybe a new wrinkle on a tool that you've seen before. So I left the exchange in the late 90s. I worked for a couple of firms. I worked for Bianco Research here in Chicago for a short time. And I started Asbury Research in 2005. And so this is 43 years for me in the business. And my son, Jack, is now with me. He's my partner. He'll be the legacy of the business. Jack and I have been building models together for 10 years or more, 15 years, all through his time in college. I'm the guy that's been around the block a few times and have, the practical knowledge of doing this for a long time. And Jack brings the back testing ability, and he's got his MS in finance, and we're a very good mix of two different skill sets. And what Jack's been able to do is take the things that I've learned in the markets over the years and build them into models. So you'll see some of the models that we use, and hopefully this gives you some ideas in your own trading of how you can build a data-driven skill set where you're not wringing your hands on a day like this where, the market's up 35 and now it's down 35 and it's only been open for a few hours. It keeps me calmer. I make much less mistakes. I sleep better at night, and we don't take big losses. So again, a little bit about me. By the way, if you would like the PDF, all you have to do is go to asburyresearch.com, go to the contact tab, and open that up and just say, I was at the conference today. Can you please send me the PDF? So you could look at this stuff in a little more detail because we're going to buzz through it relatively quickly. So when I'm trying to figure out a problem, I try to look at it from 32,000 feet and just what's the essence of what we're doing here? What questions do I want answered by whatever I'm doing in the markets? And to me, there's two. Should I be invested? And how much, how aggressively? And then the second question is, what should I be buying? So that's kind of what our models do. We want to know when it's time to be aggressive and fully invested or adding more to your portfolio. We call that risk on, the way everybody else does. Risk off for us doesn't necessarily mean that we're going into cash and going to hide under our bed until the markets get better, but rather pulling back, maybe going 30% out of equities and maybe doing something else in a different space. And then we want to know which sectors are outperforming, which sectors are underperforming. We look at a couple of hundred different sectors every day, and we look at them basically from 4 different windows. We want sectors that are trending. The major trend is up. Very simple, but I want to get as many things going for me as I can because we don't know the future. As much as technicians like to forecast. I do a lot less forecasting now than I ever did because I was beaten up enough by trying to think I was smarter than the markets to know better. Now I just basically watch the data every day. So we're looking at trend, we're looking at relative performance, we're looking at asset flows, and then finally the fourth leg of the stool is risk reward. Can I buy this with a little bit of risk and a lot of upside? Some of our models, so we're going to be looking at some of these today. I built a model 15 years ago. Jack helped me with it. It was I think the first one that we built. It's called the correction protection model, or the CPM. I had a handful of RIA customers that were buying our research to help to manage their clients' portfolios. This was right after the financial crisis, 08, and the market was already coming off the bottom. And there's a lot of people that got hit hard on the way down, and they didn't give up the ghost. They stayed in the markets until they were down 30%. Finally, they said, I can't stand it. I'm never going to trade again. You guys can have this. And then the market bottomed. What was it? March of 08. Market started to go up again, and they crossed their hands and they said, you're not getting me. And before you know it, we were up 10, 15% off those bottoms, and people got hit twice. They said, can you just build me a model that tells me when I should be in, when I should be out, and I could limit my drawdowns to a large degree. That's what CPM is. We'll take a look at that. Our Asbury 6 model is really an indicator rather than a model. I got tired of chasing moves like today, where you buy the opening because we're up 35, and now we're down 35, so you begrudgingly take a 70 point hit in the S&P 500, and you say the hell with it, and then the next day it's up 40, and now you have to buy again, and you've gotten just tortured in just a couple of days. The Asbury 6 looks at 6 different market metrics, kind of like an under the hood look of the market. So you have the blinders on and you're chasing the tail of the S&P 500, but rather you're looking at the internals of the market so you can avoid some of the day-to-day noise and stay on the right trend. Our CEF model is for sector rotation, and rather than following performance, what we do in CEF is we track the money flowing around the 11 sector spider ETFs, which if you put them together, it's the S&P 500, and we do it in 3 different periods of time, and it helps us to go where the money's going and to stay out of where the money's coming from. It's kind of like a big monopoly game, right? And we're watching that money moving around the board, and we want to be in the places where the money is going. Our CARP model is cross asset. It's for domestic asset allocation. That answers the question, where should I be if the market's going up? Like the market's been going up since the end of October. Do I want to be in large or small cap? Do I want to be in high beta or low volatility, large or small, domestic or US, all these this or that? That's what the CARP does. We'll take a look at that. And finally, the US versus the world model is for global asset allocation. And what that does is looks at 25 foreign markets all over the world, Western Europe, Asia Pacific, everywhere in the world. And we compare those to the S&P 500 in terms of relative performance in 3 different time frames. It's been a great place to be for the past couple of 2-3 months. We've been overweight Spain and others. We'll show you some of those. So again, all we're doing is we're looking at this big picture, which is the global markets. We're using data to tell us when to get in and out and where to be. So I'm just going to buzz through this. What I like to do when I do these presentations is kind of give you the answers first. So benchmark S&P 500 is in the midst of a May 3rd risk on status according to our tactical models, which we're going to look at. That's the A6 and the CPM, expanding assets. Now, this is through the end of last week, right? So we didn't prepare this yesterday. Markets really haven't moved all that much since then. But again, in order to put together such a large piece of work here, it takes us a few days. So this is not, you're going to notice some of the charts are a couple of days behind, but fortunately the market didn't get away from us. So there's all these good things going on in the market. We still have a upside target in the Dow, that is about 4% higher than where we are right now. The comp is setting all-time highs. The S&P 500, just a few days ago, it's set new all-time highs. However, there's a lot of problematic clouds coming in the market. One, the S&P has risen by 30% since October of last year. Historically very overextended according to investor sentiment, according to various options-based indicators like put-call ratios and things of that nature. If you look at standard deviation, there's a lot of stuff out there that suggests when the market finally does start to have a correction lower, because we're overextended, the likelihood that it's bigger and nastier than what would be considered to be normal is much greater. So we've effectively been risk on since November 2nd, I think, of last year. But we're being really careful here because, like I said, when this turns, when the market is overextended to this degree, it's very easy to fall in love with the market and say, well, I made 30%. I surely can hang on and take a little loss. We don't play that way. If our indicators tell us that the internals of the market are changing, we're out of there, or we're at least shifting our money to other places. And then the way that you make money the fastest in the markets, in my experience, is you get out of the way when the market's going down and you reallocate the capital. If you can reallocate your capital 10%, 5% underneath where you sold it, that's an immediate winner, right? Because you've got that gap in the middle. So that's what we're trying to do all the time. Size and style is large, mid, or small, growth or value. Those trends have been flat as a pancake since February. There really hasn't been any alpha to be achieved by playing the size and style game. However, as of today, and we'll see, it's 118 here. The market's at a 70-point range in just a few hours, but I'm starting to see growth starting to outperform again after kind of being pretty dormant for some time. Second part of our executive summary, and then we'll get into the good stuff. We'll get into the charts. Our CART model has been equally split at 3 strategic defensive and offensive moves for a month or two. What does that mean? It means normally when you're in a bull market like this and you're making new all-time highs, you see all these relationships are geared towards risk on. Tech over the broad market, small over large, growth over value. We haven't seen any of that. So to me, that just tells me internally, even though the market looks great, if you look at the S&P 500 or if you look at the NASDAQ, it looks great. But underneath the hood of the market, so to speak, you're not seeing that enthusiasm. Global relative performance here, that's a US versus the world model. For the past several weeks, there have been between 14 and 18 of the 25 foreign markets we track have been outperforming the S&P 500 in multiple time periods. We look at weekly, quarterly, and monthly. So again, normally when the S&P 500 is making all-time highs, the rest of the world is with it. We're not seeing that here. You're seeing a lot of global diversification. I don't know if that's because the world sees this global, recovery going on or whatever it might be. A lot of times when I see money going into overseas markets, I see that as a defensive play where people are spreading their bets. They're not just pushing all their chips in the middle and go with the S&P 500. They're starting to allocate elsewhere. I think that's what might be happening here. Our CEF model currently favors utilities, financials, and technology. And we'll talk more about the CEF model, and we'll show you how it's done and basically what we do to get these signals. Finally, yields. Right. Can you turn on the TV for 5 minutes and not hear somebody prognosticating about what interest rates are going to do? Was it at the beginning of the year there's going to be 5 cuts? Now, Larry Summers, a week or two ago, thought there might be a rate hike by the end of the year. I'm actually more in that camp than I am that the Fed's going to cut multiple times when there's some signs of inflation. Price-based inflation that we'll take a look at. record unemployment, new all-time highs. There's a lot of really good stuff going on in the economy, even though I think your standard citizen doesn't see it that way. But rates right now are stuck between 5% and 5.23% on the top side. It's a big yield resistance level. Underneath, you got about 425-ish is where that level is. So we've got about 75 basis points. We're right in the middle now. We're about 440 or 445 in the yield of the 10-year. As long as we don't get through either of those extremes, I think interest rates are going to be relatively benign in their ability to affect the market. So that's kind of what I'm looking at now. I'm not wringing my hands, the 10-year yields are up 4 basis points today or whatever. Those are the two levels. As long as we stay kind of like in between those lines, I don't see anything outrageous coming out of the interest rate space that's going to drastically affect equity prices. So now let's look at some charts. And these are Metastock charts, of course. Well, let me back up. We like to start big and work small. This is price and trend. I want to look at some major indexes and see what they're doing. Here on the left, we've got the SOX index, which is semiconductors. And again, this is a few days old, but the essence of the chart is still there. This chart's daily, goes back to November of last year. On any Asbury Research charts, you're going to see an orange line and a blue line. The orange is the 200-day moving average, which is the major trend. The blue line is the 50-day, the minor trend. Why do I use those? Because they're trend proxies. I don't think there's anything that's really magical about them, but they're trend proxies, and it allows me to see that the major trend in the SOX, and the SOX tends to lead tech tends to lead the broad market. It's up. Most of this price activity is up above those lines. You could see here's the correction that we had in April. And now we're back through the 50-day moving average, which turned the minor trend back to up. The major trend is still up because we're up above the 200-day moving average. And we also broke the 61.8 Fibonacci retracement of that entire move down from March 8th to April 19th. What does that mean? It means that the major uptrend is still intact, it's resumed, and it sets up a possible test of 52.18. What would have to happen, John, for this to look bad again? I think if we roll back underneath the 50-day moving average, that would get my attention. I wouldn't get all freaked out about it, but that would be an indication that the SOX is starting to lose its mojo. This is the comp. This is the composite index in the NASDAQ. Excuse me. It's the larger of the two, broader of the two. This one was really interesting to me because this is the November 2021 peak. We tried to take it out in March, failed, came close to this big support down here. Let's call it 14,600. And then we went back through it and made fresh highs. That was a big deal for me. That was an indication that a more robust or a broader index that measures technology that leads the market is doing better. If we slip back down through 16,121, it's going to get me a little bit nervous. If we broke down through the April 19th low, that would be much worse. But again, I don't want to start talking too much about bad things because the market's down 41 on a Thursday afternoon. I mean, it could be up 41 tomorrow afternoon, the way things go. So now let's look at the Russell 2000. So we've got effectively strong SOX, a strong comp. This is the Russell going all the way back to 2018. And the big takeaway here, I can talk on and on about these charts. I'll try to keep it a little briefer. Basically, the Russell has been banging up and down through this big major support here. Let's call it around 1,700, just for round terms. Big support level that dates all the way back to 2018 and 2020. And then this 2030 area up here has kind of been a ceiling on the Russell since August of 2022. We're starting to break out to the top side there. If we can hold that, it's a big deal. people have been talking about buying the Russell and buying small cap for a long time. It hasn't gone anywhere, really hasn't made any money relative to the rest of the indexes. So, you know, the Russell above 2030 is good. Below 2030, we're not going anywhere. I wouldn't pay a whole lot of attention to it at this point. This might be the most important one in the series. This is the Dow weekly, the Dow 30 weekly. It shows this big move we've had down here from the COVID lows in March up to the Jan 2021 high. We came down and bounced and held twice at this long-term support from the February 2020 high at 29,569. In the process, we traced out a technical chart pattern called a symmetrical triangle. The triangle gets tighter and tighter and tighter because the market is, or that particular index doesn't know what to do, right? So, you know, the range is contracting. We broke out on DC1, and this breakout targets 41,500, and the Dow right now is 39, let's call it 39,000, 39,100. So this suggests another 4 to 5% higher to fulfill that target. When does that idea get negated? To me, if we broke through the 52-week moving average, that's down at 36,000. We're a long way from 36,000. So this helps to answer the question, when you're making new all-time highs in a bunch of indexes, and then you're looking at like our CART model, it's showing that there's not a lot of relative performance pushed towards the faster horses. You're seeing a lot of outperformance from foreign markets. This at least gives me a measuring stick as to how much, if I ask myself the question, man, how much higher can this go? Well, the Dow can go another 4 to 5% higher to 41,500. This is simply the S&P 500. I think the support to watch is this trend line from the October low of last year, which again, 3 or 4 days ago was at about 5,100. 50-day moving average is around 5,150. It's probably a little higher than that now. If we break through there, that changes the minor trend from up to down. Major support, let's say we go into a corrective period and we take out 5,100. Everyone's running around, their hair on fire. The major trend stays intact as long as we can hold this benchmark high from Jan 2022. Let's call it 48. Well, it's basically 4,800. And then we've got the 200-day moving average coming up underneath at 47.34. This is about 10%-ish higher. I'm sorry, 10%-ish underneath the market. So what does that mean? That means that if we do have a move down, my Asbury 6 is going to get me out of the way, and my CPM is going to get me out of the way. I'm going to go to a lot of cash. And if we get down to this level, now I'm getting dollar signs in my eyes, because if our tactical models tell us to go back to risk on, and I can avoid some of this move down here, I've just done a really good thing that's going to make my P&L look great at the end of the year. Let's look at some relative performance. In my view, relative performance is at least as important as looking at the individual prices of the S&P or the NASDAQs, because it tells you from a relationship standpoint how strong the market is, where the money's going. So here, the SOX index was outperforming the S&P from November 10th to April 16th, which was here. Gave us all of this in the SOX, and basically all of that in the S&P. You can see the SOX started underperforming from April 17th to May 9th. That gave us this, and it gave us a move down in the S&P and all the other indexes, right? But now we're starting to see outperformance by the SOX again. As long as the SOX and the tech indexes continue to outperform, that's telling you the risk appetite is they want to be on the faster horses. They want a little bit more alpha in their portfolios. That's really good for the market. This is the NDX. This is the smaller of the two NASDAQs. It's the 100. And look what happened here. NDX outperformed the S&P from January of 2023, which is when this major uptrend started in the broad market, through March the 4th. March the 4th, started to stall here, started to underperform. We peaked in the NDX on March 21st. We peaked in the S&P on the 28th of March. But this underperformance here from March 5th forward gave me a heads up. The market's losing its leadership. Be careful here. The under the hood of the market is not strong anymore. That gave me a heads up to start looking for other signs of weakness because the leaders weren't leading anymore. It's starting to lead again. You can see right here, it's starting to lead. This is the 63-day moving average, by the way. I should have mentioned this. We use a 21-day moving average for a tactical lens. We use a 63-day moving average for a strategic lens. So with relative performance, we're interested in the strategic aspect of that chart. As long as NDX and SOX outperform on a 63-day strategic for us, then that is a good sign of relative health for the market. Let's look at two more. This is IWM, which is the ETF that tracks the Russell 2000. Note that it's been underperforming the S&P since January the 16th, which means whenever I hear CNBC talk about what a value there is to buy the Russell 2000 or I'm not touching this until we start outperforming. There was no reason to be in it down here because you really didn't make any money. The S&P 500 or the NASDAQ were the place to be. So what does that mean? It means as long as this continues to underperform on a strategic basis, I'm not in small cap. It starts outperforming and we get through that resistance level that I talked about a few slides back at 2030. Now you've got me interested. Now I might be looking at overweight Russell. I'm not ready to do that now because the charts are telling me not to. This is the diamonds. This is the ETF that tracks the Dow 30. And I like to look at this because if you're a money manager and you can't go all to cash, let's say your mandate is you have to be 80% in the market. Well, you got to buy something when the market's weak or the market's going down. Typically, that one of those things you buy is the Dow. So here you can see Dow was underperforming SPY since January the 19th. Why? Because that money was going into the NASDAQs. That money was going into faster horses. This is the burrow, I call it, and the NASDAQ are the thoroughbreds. So as long as this quarterly or 63-day relative underperformance trend by the Dow remains intact, that tells me that the market is tilted positively in terms of relative performance. If this starts outperforming, if the Dow starts outperforming and the NASDAQ start underperforming, you might see that underperformance and outperformance shift before you see a definitive top in the S&P 500. But that tells you underneath the covers of the market, there's this churning going on and people are getting on those sturdy-footed burrows and getting off the thoroughbreds. So really important chart that I don't think gets enough attention. The relative performance charts tell you what the market's thinking and not just looking at the S&P 500. Key stocks to watch. Apple was a big deal to me on May the 3rd, because on 2nd and 3rd, I should say, because it gapped back above its 200-day moving average after failing at this resistance up here at the end of December and early part of the year. And while it was doing that, it started outperforming the S&P 500 again on a quarterly 63-day strategic basis. Why do I care? Because Apple is number 2 in market cap and it carries a big stick in terms of having a lot of influence. This is Amazon, number 5 in market cap. Again, these charts are a few days old, but Amazon had been trying to get through its July 2021 benchmark high since April, hadn't been able to do so, and it still hasn't. I just looked at the chart a half an hour ago, and in the meantime, look how it's managed to outperform the S&P on a 63-day basis, SPY, but it can't really get off the dime. It's getting up above that moving average, coming right back down on Dec 14th, tries to outperform, comes right back into it. This is really important. If Amazon rolls over and starts underperforming the S&P 500 on a quarterly basis underneath the green line, that's trouble. Why? Because Amazon, again, carries a lot of influence in the overall market. Now we're going to get to our CPM. I'll just explain to you, it's a secret sauce. I can't tell you the metrics that we use, but there are a half a dozen metrics in there, and they have to do with asset flows, relative performance, and standard deviation is really the broad. So we're not looking at the S&P 500 and wondering if it broke the moving average of the trend line. I don't want to get hypnotized by the S&P. I want to know about the stuff that tells me when there's opportunity, when money is going in and out, and which parts of the market are performing well. So you can see when the market is tight, there's a lot of signals here, right? Because the ranges contract, and you're getting a lot of movement. But once the market decides it's going to take a trend, it shows up on our model. You can see we went to risk on here on November the 2nd, caught all of this, went to risk off from April 15th to May 3rd, and now we're back to risk on again. And you can see it catches most of the important peaks in red and bottoms in green throughout the period. Totally data driven. It was designed to give you the S&P 500 or close as possible with as much less risk as possible. As you can tell, I'm not 30. When investors get older, it's like football. It's like football. In the first half, you see a lot of trick plays. You see a lot of bombs thrown downfield, taking a lot of chances. Once you get into the fourth quarter with the lead, to me, it's like if you get into the fourth quarter of your investing game, so to speak. Let's say you're in your 50s or 60s, you've done well. So now you want to participate in the markets, but you don't want to make any fumbles in the fourth quarter and blow your lead and lose the game. That's what CPM does. It keeps you in the market, but reduces your risk quite a bit. Averages 5 round turns a year, a little bit more than 1 a quarter. We don't use any short positions or derivatives. We're risk on or risk off. So we manage money for, this is one of the models we use for managing money. We also sell research, but when we're managing money, rather than go to cash, we'll go into some short-term ETF, short-term interest rate instrument like BIL, if you're familiar. Annualized total return comparable to the S&P, better risk-adjusted returns according to Sharpe ratio Sortino. We can actually turn this into an alpha generating model, which Jack and I have done by using a leveraged ETF to trade those signals. We're not going to talk about that here, but it's done quite well when you use some leverage, something like an SSO, and some standard like SPY, and you can mix those two to bring those risk numbers back to what the S&P 500 looks like, but now you're outperforming on the alpha side. Just to give you an idea, it's been effectively, even with the S&P 500 going back to 2017, but your maximum drawdown in the S&P has been 33.9% during that period, 40% less for CPM, 20%. Our Sharpe ratio is better. Our beta is a lot lower, 0.59 versus 1. Standard deviation in CPM drops to 12.4 versus 17.7 for the S&P. This is the Asbury 6. The Asbury 6 I built because when market volatility, day-to-day volatility started to pick up, I think it was about 10 years ago, maybe 7 years ago, been around for a while, as I said, but a lot more computerized trading, a lot more days like this where the S&P has 70-point swings in just a few hours. So even though I have all this experience, I was getting mad at myself because I get sucked into these moves. For example, this morning, we had good earnings for NVIDIA. Market likes it. It's been higher overnight, 35 higher. I'm going to put more on right here. So what happens is the market tears your face off in the next 4 hours, and now you're down 70 S&P points in less than a day. So you know what? Maybe I was wrong, and you get out. And then the following day, it's making new all-time highs and you got to get in. So you got screwed twice. And the longer that you do this, the angrier you get at yourself. So I built a metric, Jack and I did. We back tested a bunch of my favorite tactical tools that I've been using over the years, and paired them up as kind of a team. So when 4 or more of them are green, so we've got the rate of change in the S&P, relative performance between stocks and high yield bonds, investor asset flows in SPY, volatility, trading volume, and breadth. We look at all of them through a tactical lens, which for us is 21 days. If 4 or more of them are green, it's positive in terms of the status of the indicator. 4 or more are red, negative in the status of the indicator. Here they are. I'm going to go through them quickly, but this is the monthly rate of change in the S&P 500 above the 21-day moving average, positive. This is the relative performance between stocks and high yield bond prices via SPY versus JNK or junk. Outperforming, SPY outperforming junk, positive. Underperforming, negative. Outperforming as of May 6th, positive for SPX. May 6th was the day that it went back to positive. This is ETF asset flows. We look at the AUM in SPY every day. We look at the AUM for about 200 ETFs every day. Very important part of what we do here at Asbury Research. But you can see when it's outperforming or when it's expanding on a 21-day monthly basis, S&P up. When it's contracting, S&P down. We also notice that there are big AUM levels that work as kind of support levels. Look at this $486 billion. That was the peak at the end of last year. Once we got above it, that was a pretty good place to buy here on April 18th, and again a little bit later in April. So just another tool that's obscure to some, but it's important for what we do here. So here's volatility via the VIX. VIX above the 21-day moving average, bad. Underneath the 21-day moving average, investor complacency. The market likes that, goes higher. Another Asbury 6 volume. We use cumulative volume rather than raw volume. We think that it just works better. If you're not sure of any of these various terms, Investopedia is a very good way. And Metastock also has a way where you can click on these indicators, of course, and you get an idea of what they're supposed to do. But you can see NYSE cumulative volume positive since May 2nd. A6 has been positive since May the 3rd, is when we had 4 or more of those green. Here's the last one. It's market breadth. For that, there's a lot of different ways to look at market breadth. This is the NYSE AD line. Moved back above its 21-day moving average on May the 2nd. So that's what we do. Instead of looking at the S&P 500 and getting faked out and making to feel stupid once a week, the way this thing moves sometimes, we're looking at the Asbury 6 every day to give us an under the hood look of what the real health of the market is. It was 6 green going in today. So I look at this and I'm saying, well, that's really interesting. But now I'm looking at where the support level is in the S&P 500. It's at 52.65. We're sitting right on top of it now. So now instead of panicking, this is the top. We have a key reversal day, run around in circles. I'm saying, okay, until the A6 tells me that the internals are breaking down, I'm looking at this 52.65 as a possible place where the market finds its legs. We'll see. I can't predict the future. And the older I get, the longer I do this, the more I realize data. Forget about trying to predict the future. It's great for show business. It's great for CNBC. It's not really good for your trading account. ETF asset flows. These are some kind of ancillary indicators that I think are important right now. This is NDX and the QQQ's AUM, or total net assets underneath. Note, they're expanding. It shows investor overnight conviction. They're willing to hold that overnight and take the overnight risk. When that happens, market likes it or index likes it, goes up. From April 10th to May 2nd, started to contract on a monthly basis. It gave us this. As of May 3rd, it's expanding again. It's important. It shows investor, it's not noise during the day, like this may be, but rather people that are buying the stuff and holding it overnight because they like the market, they think it's going higher. Two other relative metrics that we look at that I think are particularly important right now. This is relative performance of SPY versus AGG. AGG is the iShares Core US Aggregate Bond ETF. And you can see when SPY is outperforming, the market goes higher. Oftentimes when it comes back and it checks that 63-day moving average of outperformance, as it did here in April 19th and May 1st, gives us some good opportunities to maybe get back into the market. This is relative performance between SSO versus SPY. SSO is the 2 times leveraged S&P 500. SPY is the standard S&P 500. It shows risk appetite. You can see when SSO is outperforming SPY, S&P 500 up. When it starts underperforming, S&P 500 down. So again, another tool that we use it's another creative way to use relative performance to tell you what the market's thinking underneath. These are just some simple tools. I'm not going to spend a ton of time here, but they're all available. Obviously, if you're using Metastock software, when I look at these indicators, I like to have a tactical version and a strategic version. So this is a 21-day stochastic. Shows me monthly overbought, oversold. This is a 63-day. I think this is a relative strength index or RSI. So I'm looking at overbought, oversold in 2 time frames. Tactical is my time frame that I use to get in and out with. Strategic is that bigger trend that I want to catch. This is market breadth, same thing. This is percentage of NYSE stocks trading above their 40-day moving average. That's a tactical tool that gave me a signal to buy on April 17th. Not bad. And it caught these other signals, other bottoms as well. This is a percentage of those NYSE stocks trading above their 200-day moving average, which has been stuck right in the middle, so there's no signal there. Why are we looking at it? Because I look at this presentation is very similar to a monthly report that we do for our subscribers. And we like to look at the market the same way, swing the club the same way every time, to use the golf metaphor. This is investor sentiment. This is futures trader sentiment. It's coming off of a least bullish extreme on April 22nd, which turned out to be a nice buying opportunity. It's a variation of Jake Bernstein's daily sentiment index. In case you're wondering, Jake, I've been following Jake for 30 or 40 years, very smart man. Check his stuff out. This is the investors' intelligence data, of which Asbury Research is one of the inputs. And note that these firms, which are independent research firms like Asbury Research, are at the percent bears is very low, only 16 to 14%. As a contrary indicator, that has gotten out in front of what I'd say are the most important peaks that we've had in the S&P going back to 2010. That's where we are now. That's one of the many indicators that tell me the market's stretched out. It's over its skis. Does it tell me to sell? No, this is not a tactical tool, but it's a strategic indication that when we get the inevitable, correction lower here, we're starting from an extreme level. It could be nastier and bigger than people would normally expect. This is just simply seasonality. It's showing you that the monthly seasonality, this is annual. Each of these 12 columns is 1 month. May to September is very weak. This is showing you with that same data that goes back to 1957, the 13 weeks in the second quarter. Pink here or orange, whatever it looks like on your screen, that's the month of May. There's some weakness coming up here in the latter part of May seasonally. With that, I'm going to turn it over to my son, Jack. This is an indicator that we actually built for this presentation, also for ourselves, using Metastock to combine different tools to identify significant market bottoms where you may want to put a little bit more money to work or a little bit more emphasis on than you might otherwise. So let me back out of the way. So yeah, we kind of trying to put a combination of all of our different tools and metrics and things that we do into one chart that will highlight, try to identify market bottoms. So what we have here, this up top is SPY, price chart of SPY, with our green arrows identifying market bottoms. How do we get there? We have two charts underneath. One, relative performance, VXX, short-term volatility, or short-term VIX, relative performance versus SPY on a 21-day period, and also a relative performance of the OEX or S&P 100 versus SPY using a 63-day moving average. What we're aiming to do here is trying to identify points in the market where we start to see volatility lower, and specifically lower versus the market on a 21-day basis. This kind of shows a little bit of complacency in the market, potentially the ending of the current trend, and then looking for kind of the bigger ship of the S&P 100 to kind of change directions, in this case, start to outperform the broader market on a 63-day basis to kind of show leadership. You know, take those large cap stocks, they're starting to outperform the broader market. Volatility is low, showing complacency. So really kind of giving it an opportunity to have a launching point. And as you can see here, you know, while this metric isn't perfect, it can definitely be used to start to find a little bit of some of these market bottoms, give you an opportunity to maybe blend these with some of your other tools and allow you to figure out maybe when you can put the foot on the gas a little bit because you have some underlying strength to know that this is within a couple of days or weeks of a market bottom. So, you know, not being a 25-year user of Metastock, but, you know, definitely really appreciated the software and the way that it allowed me to build this chart out and really highlight all the different key points that I wanted to for this new metric that we're calling the Kosar RPV, or relative performance volume. Okay, we'll place the musical chairs and I will get back into the camera. Yeah, so basically what we're looking at here, and Jack was trying to point out, is what we're looking at is different qualities of the market, different characteristics of the market. You know, so you ask yourself, what are the characteristics of a bottom? Now, my idea of what they are and yours might be different, but this is how you can use a tool like this. Say, well, when I see a bottom, I like to see an oversold condition, or I like to see the MACD do this, or I like to see the stochastic do that. Jack and I are have kind of moved towards more quantitative metrics than looking at plain stochastics or whatever. But this is a way where you can ask yourself the question, get out a piece of paper, what's important to me? What have given me my best bottoms? Well, you write them all down, and then you start to get them on here and get them together and see what they look. One of the great things about this chart package is you could stack these indicators up on top of each other. I've had 8 or 9 of them in a row stacked up, and then you could take that vertical hairline and bring that back and forth, and it helps you to use tools that you know are successful individually and build them into a metric. That's what the S46 is. It's my 6 most valuable tactical tools blended into one. Why? Because none of these tools work all the time, but the likelihood of all 6 of them not working at one time, if they're different, is very slim. So it keeps you looking at the data and not getting mesmerized by all the show business. The S&P's down 50 now. Perfect day, right, for that. So let's move. This is our CARP model. I'm not going to spend a ton more time here. CARP is cross-asset. There are 8 different equity-related cross-asset relationships: stocks or bonds, high beta or low volatility, large or small. And then there are 3 here for fixed income. That's what we use to quantitatively understand what the condition is of the market by seeing what's underperforming and what's outperforming. This is our US versus the world model. This is 25 foreign markets versus the S&P 500. Relative performance on a trading, tactical, and strategic basis through May 10th, 60% of them are outperforming SPY on a tactical and a strategic basis, which are the two most important ones as far as I'm concerned. This recent large and sustained increase in global relative outperformers suggests an aggressive global defensive, perhaps, repositioning away from the U.S. market. This does not happen very often. You don't see all this outperformance, but once in a blue moon, and that blue moon's here right now. So this is, and this is two of those. Our model gave a signal to buy Spain on April 19th. You can see Spain's up 8%. This is, again, a couple of days old. Outperformed the S&P by 1% during that period. This is UK. Also, the model gave us a signal to buy / overweight on April 19th. We got a 10% move higher outright and 3% of relative outperformance. We're just looking at statistics. We're looking at numbers. We're not thinking, well, Spain seems like, it's going to have a better, whatever, fundamental information. I'm not looking at that. I want to see where the money's going and what's outperforming. So with that, our CEIF model is another one of the models that we use in our the money management aspect of our company, because it, with similar risk to the S&P 500, it outperforms quite a bit, and it's based on money moving around the 11 sector spiders. Jack's really was a big part of building this model over the years. So I'm going to back out of here again, and Jack will explain how this works. I know we're getting a little short on time, Kelly. So if you need to cut it short, you let us know. But Jack's going to finish the presentation here with CEIF.
Yeah. So, and again, I'm going to run through this pretty quick. So if you guys do have any questions about CEIF, you could always reach out to our contact page at asburyresearch.com and contact us for a little bit more information about CEIF. What we have here is our CEIF table. What it does is it breaks down the asset flows in 3 different time periods: our trading week, tactical month, and our strategic quarter, and kind of gives them overall ranking. What this is really telling us is how asset flows are coming in and out of the different sectors, and then subsequently, where do you want to be invested? We've done some back testing, and the way it works is we want to take the top 3. What that allows us to do is it really allows us to participate in the 3 sectors that over 3 separate time periods are actively seeing the most growth in their assets, kind of allowing us to cut through some of the noise and really show where investors are putting their money, where they're kind of putting their money where their mouth is. So in this case, our latest model, we have utilities, financials, and technologies as our top 3. And the other thing to kind of look at is, the model itself tells you where to be invested, and that's the top 3. But this also tells you where to kind of avoid. And as you can see here, energy, healthcare, and consumer discretionary are at the bottom of this list. And that generally means that we're seeing net outflows in cash being pulled out of those markets. And that tends to have, we'll see in a minute in some of our charts, have to do with the relative performance versus SPY. So these are our rainbow charts. We really like these because what this does is it takes each sector and it breaks down in that top panel. You can see we have our favored, neutral, and avoid bands, the colors being hence the rainbow. And it really shows this is a daily chart of what the ranking is in CEIF, the total ranking in CEIF. And as we can see here in a couple of different ones, as we hit up into our favored ranking, we can really start to see some relative outperformance. Utilities went into favored ranking April 30th, and that corresponded in a 4% relative outperformance versus SPY move. As I was mentioning on the flip end, we're seeing, or on the other side, we're seeing healthcare kind of dip into this avoid, roughly being in the void. We've peaked up into neutral here and there, but since March 13th, that has really corresponded to a 3% underperformance in versus SPY. Showing 2 more of these. Technology, we like to also look at these things for patterns. We can kind of start to see some reoccurring patterns in terms of the way the individual sectors are being ranked, and then subsequently how we can see, the relative outperformance spike here. We went into favored October 23rd of 2023, and up until this dip into neutral, we had a 10% relative outperformance move. again, similar thing here over in energy. We can see as energy crashed, you can kind of see the corresponding move in the relative outperformance. This chart really just breaks down and shows us that our rankings and the way we're looking at these asset flows really have some meaning in how these individual sectors are performing. One of these things that I do, I actually do a weekly video on the CEIF model, breaking it down to a little bit more granular level, and we do a heat map. What this heat map allows me to show is kind of the strength in which flows are coming into each individual sector. The dark green really highlighting a stronger flow, the dark red highlighting strong outflow, and everything in between. And what we can kind of glean from this is that between technology and energy, there was actually quite a bit of weakness in the how much money was moving around. I believe, when this chart was originally made, we were still waiting for the inflation number as well as the NVIDIA earnings, and we didn't see a lot of movement in terms of the asset flows as they on the trading week. And the reason CEIF does so well is you could really get whipsawed if you're just following the flows on a weekly basis. You really kind of want to take these flows and see them build some momentum from the strategic quarter all the way to the trading week. What I tell our customers when I'm highlighting this heat map is you really want to see clumping of green across the board, because what that tells you is not only has money accumulated on the trading week, but it's been flowing in there for quite a bit of time. So that is our heat map. Moving on, just with models, you want to see that they have some performance. So, out of the past 11 of the past 16 quarters, the CEIF model has outperformed. And then lastly, just kind of showing some of the higher end numbers. These are returns based on the rules that we have set for CEIF. A little bit less focused on the total return numbers and more on the fact that we have, looking back at these numbers, the max drawdown being about equal that to the S&P 500, a bit with much better return, highlighting better Sharpe ratios, Sortino, and beta. Broadly, this model does a very good job of putting you where the money is going, and we like to follow the money for the CEIF model.
Okay, we're going to rotate one more time. I know we're bumping up against our time. So these are our trading ideas. We use trend, relative performance, asset flows, and risk versus reward to pick ETFs that have done well. Hey, how are you, Jeff?
I'm good.
Good to see you. Hope the graduation went well.
Yeah, it was fine. It wasn't me graduating.
Yeah, so I'm just going to buzz through these last ones here. This is just showing that we're starting to get a pretty important multi-year breakout in Ring, which is the gold miners, one of a couple of different gold miner ETFs. This is some bond stuff here. Again, I'll send you the PDF. We always like to have a few more slides than we need. We do certainly this time. Just a little bit about what we do. Investment research and money management. On the research side, for individual investors, 3 and 12-month online subscriptions. If you've attended this today, there's 10% off for you as long as you take advantage of it by May 31st. Go to asburyresearch.com, go to the contact tab, ask us for the pricing and the service information. We'll get that out to you, and you can save a little bit of money if you like our approach. Again, we also do money management. There's feeding the attorneys. And finally, that's how to get a hold of us. I'm sorry, I went over a few minutes. I hope you've got some ideas on how you can use non-price-based indicators to really build a robust way to keep you in markets and not get spooked out of them when you have crazy days like we're having today.
All right. I'm going to thank you very much for doing it, John. It's always good to have you on here. Unfortunately, I'm going to have to watch the replay. I just got here. But Kelly says you did a great job. I appreciate your being here. And I put the link in the chat. And we'll see you again really soon.
We enjoy it. We hope to see you again at the next one. Maybe we'll have another indicator or two for you then.
Cool. All right.
Thank you. Bye-bye.
Thanks. Okay. Let's kind of do this. All right. I've kind of migrated places a little bit. So yeah, I had a little bit of a graduation to attend to. So let me make sure everything's I get the buttons right and stuff like that. I'm going to go ahead and make me the presenter. I'm going to say really quickly, just so we can kind of keep things a little bit reasonable with time. Thank you to CMT for the sponsorship. We appreciate it. Thank you for Task for the sponsorship, and thank you for TechnoTrader for the sponsorship. 3 really great organizations, and we appreciate all the help, all the support, and all the everything. So if you want to get any of the Metastock offers that we've done today, metastock.com/conf promo, you can give us a call at 800-882-3040 or metastock.com/saleschat. As we kind of migrate into the next speaker, between this speaker and the next speaker, we'll do a prize. I need to get ready for it. I need to pull the list. So if you haven't registered and you're watching us on YouTube, what you'll want to do is register right now, because I'm going to pull a brand new fresh list, get my prizes ready, be ready to kind of do a new prize delivery. So any questions for us? Metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. And next, we're going to talk to the person that I think gets the most questions out of all the people that we do, gentleman by the name of Jerry Allison. Jerry's going to talk about trading as a business, the tax consequences of that, how it can help you, if it's beneficial, all that kind of stuff. What I find really interesting is all of this. Like I remember when we initially started doing this with Trader Tax, it's like, it's going to be a tax session. Turns out it's way more interesting than I thought it was going to be. So especially with Jerry at the helm here.
Well,
so let me go ahead and turn it over to you, Jerry.
All right, I appreciate it. Thanks for that introduction. And I'm going to go ahead and get set up here. Let's see. Can you see the PowerPoint presentation?
I can see it. Trading in 2024.
That's fantastic. Okay, great. So I'm going to go ahead and get into this. I know the last one went over a little bit over time, so we'll just kind of get back on track here. Today, again, my name is Jerry Allison. I am a CPA with Traders Accounting, and we are a full-fledged accounting firm for traders. We specialize in traders. Now, there are a few clients that don't do trading that we do, but we primarily cater to those to traders, people like yourself. And what I'm going to present today is some things to look at and start thinking about. I want, as I present this stuff, take notes, do your research, because I don't want you jumping into something that you're not comfortable with. And this is what I do with my consultations. I consult people all the time on how to handle the trading business. I also do tax returns. We also have bookkeeping and stuff like that. But I want you to be comfortable with what you're doing. Don't jump into something because somebody gets your emotions up and you get excited about it. You need to research and you need to understand everything. So we're going to be talking about tax strategies for traders. And you may be saying, well, we're after tax season for 2024 or for 2023. What can we do? Well, there's some things even that you could still do for 2023 if you haven't filed, or possibly even if you have filed. And certainly for 2024, there's some things we can do, but we can also look ahead. And there's no time like the present to start looking ahead at things, because the sooner you get in, the better. And don't lament being late. Just get in the game and get going. So first of all, let's make the lawyers happy. To the best of our knowledge, the information given here is accurate as of the presentation date. Tax changes do happen constantly. And the reason I say that, even though you may not see anything passed through Congress right now, you may hear rumors about things. I know certain things has come out of this administration about wanting to tax capital gains and things like that. And don't worry about that stuff. Keep an eye on what Congress is doing, because everything has to pass through them. And right now, nothing is passing. But the IRS does have the ability to change a few things, procedural things, and that does happen. So you might want to keep an eye on things. So before you use any information here, make sure you consult with a tax professional. And this presentation does not establish a professional or confidential relationship between you, me, or Traders Accounting, and we are not a law firm. So the information provided here should not be construed as legal advice. So let me give you a tad bit of information about us. Our website is www.tradersaccounting.com/metastock. That is a special link where you can get a free ebook. A lot of what I'm talking about, and there's actually a few other things in this ebook. You can download it. You can do while I'm speaking here. You can get that free ebook and certainly read about all of this that I'm going to be talking about. Our phone number is 800-938-9513. If you need us, if you want to consult with us to find out the best way to structure everything for your trading as far as taxes, we certainly could set up a consultation for you. If you need your tax returns done by somebody who understands trading, then we can do that as well, and a host of other things. We can set up LLCs and things like that. And of course, an email address is learn@tradersaccounting.com. So let's go ahead and get started in this. I used to be a college professor. As a matter of fact, I taught for about 25 years or so. And I always like starting at ground level. It's like, you may have heard the story back a long time ago. Newt Rockney, I think, was coaching, and his team was playing horribly. And he brought everybody into the locker room. He said, "We're going to start at ground level." And held up a football and said, "This is a football." And he literally started at the ground level. Well, sometimes we need to go back to basics. And if you're trading seriously, you really need to treat it like a business. I know a lot of you say, "I don't really want a business. I just want to go trade and make all kinds of money." Yeah, but there's a problem with that, because what you have to do is you've got to be concerned with cash flow. Now, let me emphasize that or explain that further. Cash flow is not just money coming in. And you guys attending the seminars and these sessions here, you're learning how to bring the cash in, and that's great. And you should. I mean, that's a primary emphasis. But you also need to learn about preserving cash flow out, because traders have expenses. You pay for data feeds, you pay for software, you pay for a lot of things that a trader has to have. A computer, you may have to buy a new computer, internet, things like that. And that's important to safeguard that and not spend more than what you have to. So there's two sides of this business equation. It's not just money coming in, but it's also money going out. And taxes is one of those things as well. So we want to be able to structure things so that we can, the things we have to spend money on, we can write them off on a tax return and be able to get money back from the government as a result of that. So you've got to be constantly worried about, not worried, but concerned and focused upon cash flow, cash coming in as well as cash going out. The second point here is a major one. Do not make your financial decisions based on the tax code. Make them on business needs. And what I mean by that is somebody will come to the end of the year and you may say, "Oh, I've made a lot of money, so I'm going to go out and spend a bunch of it to get a big tax refund or to reduce my taxes." And that is a very bad idea. Every time I've seen somebody do that, they've actually messed themselves over considerably. So don't make financial decisions based on the tax code or your taxes. Make them on your business needs. If you need a new computer, then go out and buy one. You need it. It will help you probably in the long run. But don't make one just for taxes, because let me give you a story about something like this. It's in a different sector. A long time ago, I was working for somebody. We had a client. Actually, he was my client. I'm sorry. And he was an automobile repair mechanic. And he'd been making some good money through the year. And he talked to me, I think it was in November, early December. And he said, we're having a pretty good year, but I'd like to cut down my taxes. I said, "Okay, that's reasonable." He said, "I'm going to go out and buy this $20,000 tire machine." I said, "Okay." So we can write off a good chunk of that, and if not all of that, get some money back and reduce your tax load. And then I asked him, I said, "How often are you going to be using this tire machine? He said, no, maybe once every couple months. And I'm thinking, you're going to buy this $20,000 machine. It's going to sit there, do nothing except, and probably pay for itself over 30 years. And you just for a tax refund, you pay $20,000 to get $6,000 in taxes back. So you still lose $14,000. It just doesn't make sense. So don't make decisions based on the tax code. You need to have a plan set up, and that's what we're going to talk about today, is a plan to actually use the tax code for your benefit to reduce the taxes, but also to structure it in such a way that you don't have to worry about them. Because one thing, as you guys know, trading is psychological. And if you start letting taxes or anything else affect your trading, you're done. It's going to, and I've seen it time after time. Some of our clients have gotten their focus off and on taxes or something else, or health concerns by necessity, and it's ruined their trading. So do not focus on taxes. Get a plan laid out, get everything structured, have somebody help you that knows what they're doing, and everything's laid out and you don't have to worry about it. Now, you also need to be aware of all your tax and protection options, and we are going to be discussing that through this webinar today. So we're going to talk about different options to help you structure things. Maybe certain areas will be better than others. A lot depends upon how you trade, but certainly we want to be able to discuss all that. Now, some of the things we're going to discuss, really it's a threefold attack here. We're going to look at trader tax status, and we'll talk about that, how any trader, doesn't matter if you're trading Forex or stocks or options or crypto or futures or whatever it is, this can apply to you if you meet the qualifications. We'll talk about that. We'll talk about entities. There's a lot of information out there that says, oh, if you set up an LLC, you can save money in taxes. Well, just you got to be careful with it. And so we'll talk about what those characteristics are that will help you and do other things for you. There's some more important things out there than just saving in taxes too. So we'll talk about that. And finally, we'll talk about the mark-to-market election. This is for stock and options traders. It does not apply to people who trade futures, and there's a few ETFs out there like SPX that get treated like futures as well. So mark-to-market will not apply to that. So this is basically the outline of what we're going to be talking about today. So the first thing, let's talk about trader tax status. Trader tax status is a choice. Yes, that's right. It's a choice that allows an entity or person to deduct expenses providing the criteria are met. So this is criteria that has been set up so that you could take trading expenses, whether it's data feeds or it's commissions or if it's education, or if you had software or any type of specialized software, whatever it is, this will allow you to deduct those expenses on your tax return and obviously reduce your taxable income as a result of that. However, the IRS is not going to allow just anybody to deduct expenses. So there are some criteria here. Now, we're going to dig into this. Now, the criteria that the IRS mentions is very vague. And by the way, while I've got here, Publication 550, Publication 550 from the IRS is the go-to guide on investing with the IRS. It talks about everything. It talks about interest, dividends, original issue discount, bonds, futures, commodities, everything. I mean, everything's there. It's 70-something pages long. You can go to the IRS website and you can type in the search bar Publication 550, and you can download it to your computer or you can read it online, either way. But that's our go-to manual with the IRS. Now, their criteria for doing trader tax status is extremely vague. You have to treat it like a business, and you have to rely on it for income, things like that. So, and I think the IRS writes things like that so that the vagueness allows their examiners to have a lot more latitude. And so these things end up going to court. And so what we have to do here is we go back to court decisions. And there have been three main criteria that have come out of court decisions. That all three of these need to be met in order to deduct the expenses on your personal return. And now we're assuming for a second that you are going to deduct the expenses on your personal tax return. First one, you must have 720 trades in a year. If you read publication 550, it does talk a little bit about volume and activity. It doesn't give any specific numbers. But somebody sued the IRS, and the court said, you know, they've made 720 trades this year. That's enough to allow them to deduct expenses to show that they are taking this seriously and treating it like a business. So that is our criteria, 720 trades a year. That's one. Another case said there has to be trading in over 75% of the trading days per year. Now, that one makes sense if you think about it, because the publication 550, as I mentioned, says you have to treat trading like a business. Well, think about owning a business, you know, something else, whether an automobile mechanic or as that, or a restaurant or something like that. You're not going to take half the year off. You're going to be putting yourself into that business. You will take a vacation periodically and leave other people in charge, but you're not going to take most of the year off. And so in a similar fashion, the court ruled you need to be present 3/4 of the trading days per year and be making trades in all of that. So in other words, there has to be a good activity there as well. And then the last one, coming out of a court case, there have to be over 500 hours in trading, research, and education. Now, trading, obviously, we know what that is. That's, you know, going out there and making trades, obviously. Research, I mean, you're talking about it in these seminars that you're doing the charting, and you're looking at software, you're looking at all kinds of stuff, we're reading about companies, things like that. Education also qualifies for this. So the time that you're spending in these seminars to actually learn more, that qualifies for the 500 hours as well. Or if you go watch a YouTube video, or if you watch or you read something on the internet, or if you buy a book and read it, that will qualify as well as education. Now, how do you prove these? Well, the first question I get about all these is, yes, all three of these have to be met, because we don't know what would happen if you don't. These are things that have come out of court cases, and if you meet all three of them, then we can point back to the court cases and say, hey, the criteria from those court cases have been met, so this individual should be allowed to deduct expenses on their return. However, if you don't meet one of them, or if you fall short of them, that's a gray area. We do not know what would happen. It's very possible an IRS examiner would deny the expenses in this case. Well, if you're ever challenged on this, how would you prove it? Well, the first two, 720 trades in a year and trading in over 75% of the trading days per year, that's provable by your monthly statements and your 1099 that you get at the end of the year. You just give an auditor, here's the statements, here's the 1099. That shows what days I made trades, how many trades I made, etc., etc. The last one is not so easily provable. And so what we suggest is that traders keep a log. It could be a physical written log, could be a spreadsheet, just, you know, activity that you spend each day and how much time, so that you can prove that you made the 500 hours. It's very similar to a mileage log. And it really doesn't matter about the format. It just matters that you took the effort to do it and can show that you put the time in. Now, I do want to emphasize here, this allows you to deduct your expenses, but the tax savings you have depend upon your current tax bracket. If you're in the 22% tax bracket, you're saving 22 cents on the dollar. But if you're in the 39% tax bracket, you're saving 39 cents on the dollar. So a lot of the savings depends upon your current tax bracket, but as we know, every little bit helps, particularly in these times. Now, that sounds great. You say, okay, well, I've met all of this stuff and I can deduct expenses. And I alluded to this a little bit ago. If you've already filed 2023's return and you met these qualifications and you didn't deduct your expenses, go back and amend your return, your 2023 return. You can do that for 2022 still. And if you do it soon enough, 2021. The statute of limitations is about to run out on that. So that's something that you might have to get moving on. But you can go back and put this in if you met the qualifications for those years. And that sounds great. You know, you can deduct these expenses and on your Schedule C of your personal return, and you can, you know, save some money that way. Well, not everything is roses. And I do have a warning here. And this warning is actually very serious because I want you to pay attention to this. A person deducting trading expenses on their personal return must use a Schedule C. Now, some of you are probably familiar with that. Some of you may not be. What that is basically a small business schedule on your personal return. It follows Schedule A, which is your itemized deduction, Schedule B, which is your interest and dividends. Schedule C goes right behind it if you have one. And it lists revenue and expenses for a regular business. Now, traders are different there. But it's the Schedule C that's the issue, not the trading that's the issue. First of all, there's some issues here. Your audit risk increases. Schedule C is by far the #1 most audited form of anything by the IRS because people have abused them for decades. Auditors are trained to audit Schedule Cs. We're going to talk about things that they're not so trained in here in a little bit, but they have guidebooks written up. Matter of fact, I attended a webinar myself for my continuing education here last week, and it was about somebody who dealt with IRS audits, and he said Schedule Cs are just one of those things that they're trained in. They know how to do it, and so it's easy to go to, and so you're really increasing your audit risk if you do this on your tax return. Now, I realize I just said you can do this, you can deduct those expenses on the Schedule C. Now I'm telling you that there's an audit risk. Everything's risky in life, but it can be done. And we have clients that do this. They deduct their expenses on Schedule C and they haven't been touched as far as their trading yet. So, you know, you just take that chance. Second thing, the home office deduction may not be attainable. Schedule Cs are such that they're really funny on a personal tax return. And sometimes you can take the full thing. Sometimes you get limited. Sometimes you can't take it at all, depending upon your situation and your profitability and all that. So there's a lot of doubt here about whether the home office deduction can be obtained. Now, keep an eye on this one because I'm going to come back to this because it really is extremely important. Number 3, there may be no asset protection. If you're trading as an individual on your personal return and somebody comes along and sues you personally, whether they have an accident in your yard or an insurance doesn't cover it or whatever it is, you get sued personally, then your trading assets are subject to being taken, quite frankly, as a result of that suit. So that's what LLCs are for. So asset protection is something that you might want to think about to protect your trading assets. Number 4, this is something weird with the IRS. They don't like people having a W-2 job and being an active trader. It really kind of rubs them the wrong way. And it kind of goes back to number 1, and it increases your audit risk a little bit more even. They just don't think you can do 2 jobs at once, which all of us know is baloney, but you know, we've all worked probably two or three jobs at one time. We do what we need to do, but the IRS has a difficulty with this one. So is there a remedy? Is there a workaround around this? Now, by the way, I would not say if you've got expenses to deduct from last year, go ahead and go back and amend your return. You know, if you file a Schedule C for 1 year or 2 years, take the risk. Usually it's when you file Schedule C after Schedule C, year after year after year, that's when it's like, you know, rolling the dice. Eventually snake eyes comes up. So if you're going to go back and amend, go ahead and do that. I would recommend doing that. However, is there a workaround around this? And I say yes. This is where we get to entities. And a lot of you may have heard, well, just set up an entity, an LLC or something like that, and that's going to save you all kinds of money. Well, there's a lot of Pollyannish thinking out there, a lot of good things, vibes that people put out, but you got to really be careful about this because, first of all, there's a lot of types of entities, and I've got them listed here: sole proprietorship, single member LLC, a general partnership, limited partnership, multi-member LLC, an S corporation, an LLC S corporation, C corporation, an LLC C corporation. We're not going to go through every one of these because you don't need them all. Sole proprietorship, first of all, is what we just talked about. It's trading on your personal return and deducting expenses on Schedule C. I've already mentioned the problem there. A single member LLC actually does the same thing. It puts it right back on your Schedule C of your personal return where we don't want it. So we can cross those two off right away. The only thing the single member LLC does, it gives you the asset protection if you want that. We can also get rid of the last two, the corporations. Now, you may have heard, well, corporations are really awesome because C corporations, because they got a flat 21% tax rate. And that's really cool. You save in taxes. Well, what people don't tell you is that yes, there's a 21% tax rate, but once you get accumulated earnings over 250,000, there's a second tax that kicks in at 20%. So there's that problem. C corporations are really difficult to work with and get money out of. So we don't recommend those unless there's a really, really good reason for doing it. They're horrible to work with, and you can't take money out very radically without getting double taxed, and things, there's problems. So what we're going to do is we're going to limit ourselves to really partnerships and S corporations, and even those we're going to fine tune to LLCs. So as I mentioned, the sole proprietorship and the single member LLC don't do much for a trader. They put things back on your personal return again on the Schedule C. They increase your audit risk, and they limit the possible home office deduction. Now, the type of entity that's right for you depends upon your situation. And I do a lot of consulting throughout the year and talk to people about their situations. Lately, I've had a couple people come in, and I've recommended an LLC S Corp to them. There are reasons for that. But a lot of times we recommend multi-member LLCs to start off with. And the difference really is if you go the S Corp route, the IRS requires the owners pay themselves a salary. Now you've got a W-2, so unless you know how to do payroll, now you've got a payroll company you're going to have to hire. So you've got a lot of infrastructure there. And so we don't recommend you go into the S Corp unless you're already making good, solid money, good, solid profit, so that you've got the money to actually set up the infrastructure. And then that's where we start talking about 401ks and stuff like that. But most people, they're starting off, they're not making $100,000 a year. They're making $20,000 a year. They're making $30,000 a year, or possibly even a loss. And so we recommend that they go to a multi-member LLC, or what I call an LLC partnership. Now, I'm going to explain to you why we go through this. The simplicity of this is one thing, but it resolves a whole lot of problems without getting overly complicated with like payroll and things like that. Now, before the pros, I want to mention the cons, because I'm also one that wants to tell you what the bad points are as well as the good points. So the cons here, with an LLC in most states, you will have a yearly LLC fee that you'll have to pay every year. South Carolina, it's $25 a year. In a lot of states, it's minimal. I think New York, it's 25. Some states, it's $100 a year. North Carolina, it's $200. California, which is the highest, it's $800 a year. You do have to pay that. Some states don't have a yearly fee. Arizona does not have a yearly fee. And there's a couple others. You will have a tax prep fee because this is a partnership. And so what you have to do is you file a partnership return. Now, the partnership itself does not pay income taxes. It passes everything on to the individual partners. So the tax is actually paid on the personal side, on the personal tax return, but it skips around that Schedule C problem that we had. But anyway, we'll get to that. And then there may be increased broker fees because a lot of brokers look at you setting up a business account and saying, oh, well, you're a business, so you got money. And so you can, there may be some of that too. So I want you to be aware of the potential for these problems right here. But that's really about the problems that there are. Now, the pros. I mentioned that this cures a whole bunch of problems. Well, one problem it cures is asset protection. Anytime you've got an LLC or a corporation, it's flat out corporation, you do have asset protection. The assets are protected from anything on the outside, and they're also protected if there's liability on the inside of the entity. It can't come out and get you personally. So we do have the asset protection that's certainly a benefit. Number two, most people don't realize this, but when you set up an LLC, you have a choice in how that's going to be taxed. You can actually, when you set up a single member LLC, by default, that becomes what's called a disregarded entity, but it's taxed like a sole proprietorship, and that's where it goes on the Schedule C. But you can also choose to have it taxed as an S corporation, or possibly even a C corporation. When you start a multi-member LLC with a partnership, that defaults to a partnership, but you can also choose to have it taxed as an S corporation or C corporation. So you get a choice, and you can change that later. And this is one of the reasons we try to start with a multi-member LLC taxed as a partnership, because once you become really, really successful, then we can convert to a S corp. It's filing a piece of paper with the IRS. That's all it is. Changing over to an S corp, and then you're now taxed as an S corp. We set up the salary, and then we can start setting up 401ks with matching contributions, things like that. It's just, there's a lot of things that we can do at that point, but you've got to be making a lot of money before that happens. So you do get to choose how you're being taxed. Number three, this is a big one. A reduction in IRS scrutiny. I mentioned if you're doing this on your personal return and you're deducting those expenses on Schedule C, then you increase the risk of being audited, because that's what examiners are trained on, is that Schedule C. They are familiar with that. They know it inside and out. However, if you go to partnership or an S corporation, you dramatically reduce the IRS scrutiny. I mentioned a little bit ago that I attended a webinar where I was listening to a speaker who did audits. And he mentioned that S corporations, the rate of audit of those is 0.11%, which means 1 out of every 1,000 S corporations ever get audited. And partnerships, like the multi-member LLC, is even lower than that. He didn't mention what the percentage was. So you dramatically reduce your possibility of audit by the IRS. Now, let me interject something here, because every time I talk about this, I have somebody that says, my tax return is very clean, and if they can come audit me, and everything's going to work out great. And I said, okay, I'm sure it is. But can you spend the time for the audit? And I also found out in that webinar last week that the average audit time is 15 months. Do you want to spend 15 months trying to prove a perfect return to the IRS, or do you have better things to do? That's a question that you really need to ask. And we can minimize the chances of going under audit by moving into this partnership or moving into an S corp. Number four, I told you to remember this one, or hang on to them. It's going to come back up again. The home office deduction opens up completely on a partnership or an S corp return. There's no limitations. So what we can do in a home office deduction, Whereas it gets limited on Schedule C, we can take a percentage of your home mortgage interest or real estate taxes, or if you're renting, we could take a percentage of your rent based upon the square footage of your office. We could take a percentage of insurance, percentage of your utilities, including cell phone and internet, a percentage of like HOA dues, percentage of repairs and maintenance. So there's a lot of things that we can take a percentage of that goes into your home and actually write it off as a home office deduction. This can be rather big as a deduction, and you're already spending the money. You might as well put some of it on a return to actually deduct it. Number 5, it solves the W-2 trading issue. I mentioned a little bit ago that if you were trying to trade on your personal return and you're doing the Schedule C for the expenses, the IRS has a problem with if you're trying to work a full-time job and you're trying to trade full-time. So there is an issue. This gets away because it looks like on your personal return you've got a W-2 job, but the partnership is doing the trading. And then now it looks like as it comes back into your personal return, it looks like you're just investing in this trading business. And that's it. So it really does resolve that problem. There's one other problem this thing resolves, and it solves the mark-to-market long-term, short-term dilemma. Now, I haven't talked about the mark-to-market election yet. We'll get to that towards the end. But suffice it to say, when you make the mark-to-market election, you want to do that for short-term trading, like day trading, swing trading, things like that, that you're not going to be holding longer than a year. And if you do the mark-to-market election personally, the IRS is going to want to try to attach that election to everything you have, including long-term holdings. So if you're holding stock for 5, 10 years, they're going to try to put mark-to-market on that. Well, what's the problem with that? Well, that means they're wanting you to pay tax on all your unrealized gains in those long-term holdings. You will also lose the 20% capital gains rate, long-term capital gains rate. So that favors the IRS if they can get all that stuff under mark-to-market. So how this solves it is we get the short-term trading into the LLC, the partnership or S corporation. We get it there. Mark-to-market election is around that entity, and then you keep the long-term holdings on your personal side about as far away from mark-to-market as you can. And that solves that dilemma so that there's no conflict and there's no chance the IRS is ever going to try to put the mark-to-market election on top of the long-term assets. Okay, so the last thing is something dramatic that I present to people. The tax savings that you have from doing this can pay for the LLC itself. In other words, what you can do is you can have enough in tax savings, enough in refund to actually pay for the extra expenses. Now, go back to the top of the slide. Remember the cons, the yearly LLC fee, which you pay the state possibly once a year, tax prep fee, and increased broker fees. That's a little extra money you have to put out. But the tax savings you get can actually pay for those things. And I'm going to show you how that works. In other words, we can get the government to pay for your LLC for you. If you've already got yearly trading expenses, the refund that you get from deducting those expenses could pay for the yearly LLC fee and the tax prep fee. Now, I'm going to go even further here and say, just by limiting to stuff you're already spending, and it may not be trading expenses, it could be that home office deduction. Just by using that may give you enough of a refund to pay for the LLC. And so what we're going to do is we're going to talk about this, and we're going to give you an example. Let's take a person that lives in Illinois. I'm just going to use Illinois as an example. You could use any state. Now, the yearly LLC fee is $75 a year. So every year, this person has to pay $75 to renew the LLC with the state. And let's say the tax preparation fee for the partnership. Now, this is not the personal return. This is just the partnership return. Let's say it's $600. That varies widely, and that's not our price. Matter of fact, I don't know what our price is because I don't deal with that stuff. But let's just say, the total of $675 extra a year that you're paying. Most people look at that and say, you know, LLC may not be worth it. I don't want to have to pay that money each year. Let's assume the person's in the 35% tax bracket, and in Illinois, there's a flat rate of 4.95%. So their total tax rate is 39.95%. So what does that mean? This person needs an extra $1,015 in trading expenses to get the government to pay for their LLC. Matter of fact, if you take that $1,015 with the $75 and the $600, combine them together, the refund from those alone will provide the $675 in refund that you need to pay those extra expenses. And I'm going to show it to you here in a second. What do you mean? How are we going to do that? $1,000 is a lot of money. Remember that home office deduction I've been talking about that keeps coming up? Most people at a minimum can get $1,200 a year in home office deduction. And some people even more than that. I've seen as much, you know, in the tens of thousands that people can get from their home office deduction. And the refund you get just from having that will actually help pay for the LLC. And you're already spending the money. You might as well get a deduction for it. And some people, a lot of people, can't itemize their deductions anymore. And if you're renting, that certainly can't be itemized or deducted. So you might as well get something for it. And so the LLC will help you do that. Now let's go through our proof here. So recall, our traders got $675 in extra LLC expenses. That's the tax return and the LLC fee. And there's a combined tax rate of 39.95%. Now, if there's $1,015 in extra trading, the refund will pay for the LLC. Here's the math. You're going to take your deductible expenses, $675, the tax return fee, as well as the LLC fee, add the $1,015 in extra expenses. Let's just say it's home office deduction. And so you get $1,690 in deductions for that year. If you multiply that by the 39.95% tax rate, you're getting $675 back, enough to pay for those LLC expenses. And certainly if you have more in deductions, you're going to get even more back. So my point here is the government, if you do this right, the government will pay for the LLC and you get all these benefits in order and that you can do. You can write off all these expenses. And by the way, those criteria I mentioned for trader tax status may not be as important. Matter of fact, probably aren't as important as what they are for doing it on the Schedule C. Remember the 720 trades per year and trading 75% of the trading days and the 500 hours in research? It is my conclusion, and there people disagree with me because this is a gray area, but when you get into a partnership LLC or an S corporation, you don't have to worry about those qualifications nearly as much, if at all. So an LLC could greatly benefit you in how you structure this trading business. Now let's go on, talk about our last topic, the mark-to-market election. The mark-to-market election is an election. Remember, I mentioned with trader tax status that is a choice. You could choose any time. You can go back in time and do it anytime. You can do it 1 year and not do it another year. That's your choice, as long as you meet the criteria. The mark-to-market election is an election with the IRS. And it's only for stocks and options traders, period. Doesn't apply to futures or commodities, doesn't apply to Forex or anything else. Any business entity or person can make the election provided you meet the trader tax status qualifications. Now, this is where these two get linked together. And a lot of people confuse mark-to-market with trader tax status. They're not the same thing. Trader tax status has to do with expenses. And you've got to be able to do that before you can make the mark-to-market election. The mark-to-market election takes care of the revenue side. It eliminates those pesky wash sale losses. If you've been in trading any length of time and you've gotten a 1099-B from a broker, you've looked at the section that talks about the gains and the losses there. And a lot of times, if you're trading the same things over and over and over again, you've accumulated a bunch of wash sales. I'm not going to go into depth what they are, but they are deferred losses. They are losses that you incur during a year because you may have sold, let's say, a stock at a loss and got back in immediately to get into a better position or something like that. But those losses move in time, and some of them eventually cross over December 31st, meaning they go into the next year. And so you can't take those losses. Basically, what you're doing under that system is you're paying tax on money you lost money on. So you're paying tax when you lost money, and I've seen cases with clients where they've had a losing year, but the wash sales have pushed them into a profitable margin. They end up paying tax on it. It's really a goofy system, quite frankly. With mark to market, you pay tax on what you actually earn. The simple way to think about mark to market is you take your account value at the beginning of the year and you take your account value at the end of the year. If your account goes up, that's what you pay tax on. If your account goes down, that's what you get to write off. It's got to be adjusted for money you put in or money you take out, interest and dividends, things like that. But the idea is you're actually paying tax on what you did rather than having all this deferred stuff that goes on. So that's one thing mark to market does. The other thing it does, it eliminates that $3,000 loss limitation. It is kind of a safety net. If you lose more than $3,000 in a year with mark to market, you can deduct all the losses. And I've deducted for some people over $250,000 in a year. If possible. I'm hoping that none of you ever get in that situation where you lose $250,000 in a year, or you're making it so much money that $250,000 is negligible, but it is possible. So under traditional accounting, normal accounting, let's say I lost $20,000, I could only write off $3,000 in a year, and I'd have to carry the remaining 17 forward to next year to use it against future capital gains or another $3,000 a year. But with mark to market, doesn't matter how much you lose, you get to write it off. And if the write-off is more than any income you've got, the remainder moves to next year, and you can use that against future income. So it's really beneficial. It's a good safety net, actually, to have. Now, here's the rub. This election must be made at the beginning of a year. For individuals and C Corps that are on a calendar year, this election had to be made by April 15th of this year. And for S Corps and for partnerships, this election had to be made by March 15th of this year. So we are well past the time to make this election for 2024, with one exception. If you create a brand new entity, let's say you create a brand new multi-member LLC, an LLC partnership, or if you're ready to go to the S Corp realm and pay the salary and all that, you can actually, from both of those, you can make the mark-to-market election immediately. And actually, the IRS doesn't have to be notified until the first tax return is due, but we won't get into that too much. So with a brand new entity, you could start mark to market. So theoretically, what you could do, here we are towards the end of May, you get an LLC set up, a multi-member LLC or an S Corp set up by, let's say, June 1st. You can make the mark to market election. You could be trading inside of the LLC under mark to market this year. And you've got an extra benefit because if you're moving all your stuff into the LLC trading, then your personal account is going to go dormant, and all those wash sales that have accumulated this year will turn to regular losses after 30 days. So there won't be any carryover to next year. So it's actually kind of a double benefit if you go ahead and create the LLC sometime during this year. So that's a huge, huge benefit for stocks and options traders. And if you're seriously trading stocks and options, I wholeheartedly recommend you get mark to market at some point, either through an LLC, or if all else fails, get it individually. But we've talked about the issues that individuals have. So in summary here, what we're going to do is just review our points, and I'm going to talk about a couple other things, and then we'll have Jeff come back on. We'll talk about questions there. But in summary, trader tax status allows you to deduct trading expenses if you qualify. The qualifications are more important if you're doing it on your personal return than if you're doing it in a partnership or an S corporation. But deducting those expenses can really help bring some money back into the fold to either use for your family or to go into trading or whatever you want to do with it. Forming a multi-member LLC provides assets protection. It decreases your audit scrutiny considerably, and it could be free because you can use like the home office deduction to get a refund back so that to pay for those extra LLC expenses. And finally, the mark-to-market election allows stocks and option traders to pay tax on what was really earned. I mean, this is what we really the way the tax code should work. You pay tax on what you really earn, or you deduct what you really lost. And that's the fairest way of doing things overall. Now, let me talk about some things to watch out for here in the future, because as we know, weird things start to come up, different trends start to happen, and all of these have different tax consequences as well. First of all, one of the issues that have come up in the last 2 or 3 years is prop firm trading. If you're not familiar with this, a prop firm is you can go sign up with them and you take several challenges, and you have to pay for those challenges, by the way, to prove that you are a good trader, and then they will let you trade a bunch of money. They give you the money to trade. They don't give you the money, but they allow you to trade it, and then you get to keep a good chunk of the profits that you make. However, you are acting as an independent contractor for them. So what you're getting from them is not gains and losses anymore. You are now working for them, and now you've got not just income tax, but you've got self-employment tax. So everything I've talked about here, you can scratch if you're going to trade through a prop firm. There has to be different structuring for that, because now you got self-employment tax and things really change considerably. Number two, I mentioned this a little bit earlier, some options like SPX are treated like futures contracts, and they fall under the 1256 contracts and have the 60-40 split. Now, if you're not familiar with that, just research how futures contracts or 1256 contracts are taxed. But SPX and a few other index options are actually traded through Chicago. They're not traded through New York, and therefore they go through the mercantile exchange, and therefore they're taxed like futures as well. So the reason I bring this up is every year we have clients that get surprised because they've been trading SPX all year. They've been thinking it's like a regular, ETF, and it's not. And then they think they've got mark to market, and then all of a sudden they have a bunch of losses in SPX, and they get treated like futures, and they can't take all those losses. So be very aware of what you're trading. At least know what's going on when you trade it. The last thing I'm going to talk about, I think, to watch for is be careful about trading other people's money or giving them advice. This can create major problems with the SEC, with the federal government, and with state governments. I cannot sit here and recommend stock alpha, beta, gamma. I'm saying that one because I know there's not one out there. But if I do recommend that stock, then I can actually just say that right now. If I did it, I could be in trouble with the SEC. And if you go further and say, hey, you got parents or you got family members that want you to trade their money, now you're becoming a broker, and you're becoming, things start to grow there, and then you have problems. And we've had clients that have gotten into trouble with the SEC, and you also have to worry about, like I said, the federal government and state government regulations. So unless you plan on getting the licensing from the SEC, avoid that at all costs. There are ways maybe to structure family members, but it's very special structure, so you have to be very careful with that. So just don't get into trading other people's money if you can avoid it at all. So before we have Jeff come back in, I want to give you our contact information again. Our website again is www.tradersaccounting.com/metastock. Again, that free ebook is out there. And our phone number is 1-800-938-9513 if you want to set up a consult, or if you want us to do your taxes, or if you want help with something, setting up an LLC, we can do that as well, or if you need somebody to keep the books. And of course, we got their email at learn@tradersaccounting.com. So I'm going to go ahead and leave that up on the screen here. And we're going to start taking audience questions here. And I noticed some information on Canada here. Yeah, I'm dealing with, I want to emphasize very specifically here that we are dealing with U.S. tax law. Canadian tax law, Mexican tax law, or any other country, this stuff does not apply. There may be similar things here, but we only handle U.S. tax law. And I noticed somebody's writing here very eloquently about semantics and defining a person as an individual or a company, things like that. But in Canada, things like that. So if you are in Canada, please contact a tax professional in Canada. So that's pretty much everything I've got. If there's any other questions, go ahead and put those in the chat and we can answer those. But I think Jeff's going to come back on, or whoever his surrogate is at the moment.
It's me.
Oh, it is you. Okay, there you go.
Yeah. We're kind of almost.
You stayed in the same location too.
What's that? Yeah.
You stayed in the same location.
Yeah. No, I just came back home because my daughter graduated 6th grade. Yay! So it was fun. It was really, really cool. I appreciate Kelly for stepping in and doing the thing. Do you? Here's a question from. Let's do a couple of real quick questions because we are out of time. But Jesse wants to know: do you have multiple members? Do you have to have multiple members for a multiple member LLC, or can one be 100% owned by one person and still be an LLC?
You have to have two partners, but the second partner does not have to be a person. There's a lot of ways around this. The other partner could be an irrevocable trust. We have a lot of clients who they're by themselves, and they set up 1% of the partnership into an irrevocable trust. So that's kind of like a savings account for a family member, or it could be a charity or something like that. That's one way around it. You could have, if you have another business already, you could have that business could be a partner as well. So there's several different ways around that. And we have several clients that actually they're alone. They have no family or friends, and yet we managed to still get it all set up.
All right, and then last one from Matt. Can one have a TTS expenses while trading mostly Roth IRA funds?
No, I'm glad you asked that. When you're trading in a Roth or even a traditional IRA, whatever your retirement is, if it's self-directed, you can't deduct the expenses for that because that's related to the retirement only. It's only for your cash accounts that you have going.
Cool. All right. And then if they have more questions, so they're free to reach out, right? Because there's
absolutely
we've still got hundreds of people here and a lot of questions. We always have a lot of really good questions.
Operators are standing by.
Yeah, 800-938-9513. Learn@tradersaccounting.com and tradersaccounting.com/Metastock. One of my favorite things.
Yeah, absolutely.
Very cool. Thank you, Jerry. I appreciate it. You always do.
Thanks, Jeff. All right. Have a great day. Okay.
You too.
All right. Bye-bye.
Yeah. Bye. Okay. Let's try to kind of move things a little bit here. Yeah, and I'm sorry. We sometimes just don't have enough time for all the questions that we want. But let me go ahead and share my screen real quick. I almost forgot to do that. I did make myself the presenter, show my screen. Okay. I do want to say real quickly, thank you to TechnoTrader for sponsoring the events today and this week. And they always do such a great job. Martha's been a good friend of mine. Somebody we just love to work with. Has some great courses that are available. I'm going to go ahead and put this link here in the chat. If you go up there, you can get some mini courses for free. Do it. You like them. So Timothy says, thank you, Jeff. That was terrific. Yeah, I'm just running the show. It's just the speakers that are coming in. So in any case, it will be terrific, but thank you. I appreciate that. And I appreciate you saying that. It does make me feel nice. So in any case, Greg, are you available to help me for just a second? We are going to do a prize. Okay. The first thing I'm going to do, we're going to do this as quickly as we can. what I'm going to have you do is use your random number thingy majigger and give me a number between 1 and 9,047. $5,941. And the winner is Jagrit Trader. I'm sure you remember if you signed up that way. So let me go ahead and tell you what you won.
Oh, Jeff, I just realized I wasn't live on YouTube, so let me repeat that. The winner was 5,941.
Cool. All right, and then and then they got the winner. Okay, so for this one, we're going to give away the Wendy's Wealth Building Weekly Newsletter. Wendy Kirkland came in. She spoke on Monday. She's graciously offered as a prize a 1-year complimentary subscription to her flagship trading newsletter. It features a list of every stock she flags by her weekly system on the verge of a potential explosive move. And the value of that, I'm not used to working on just 2 screens. I usually have this on 3 screens, is $468. So we'll reach out to you next week, all of the prize winners, and help make sure that you get your prize. So if you see an email from me said, hey, you won a prize at the conference, don't delete it. Don't think that it's spam. It's legitimate. I'm trying to get it sent out to you. So in any case, we are, of course, Metastock. Metastock's been rated #1 in its price category. All of the offers, including a buy one, get 2 free, is available at metastock.com/promo. Let's go ahead and move on to our next speaker, which is Mark Leibovit. Mark, I'm going to go ahead and I saw your camera go back on. I'm going to ask you to turn it on again, and we'll go ahead and get you live. How you doing, Mark? Let me see if we can get your mic going. I show yourself muted. So there should be a red.
You hear me now?
Hey. Woo! We're working. Okay, let me make you the presenter. How you doing, Mark?
I'm doing great, thank you. Just gotta move my camera around here. I'm all messed up. We'll see where that goes. That's a little bit. Well, you're gonna have to look at me this way. Is that okay?
I think you look great no matter what. Did it give you a little pop-up that says share my screen?
Show my screen.
Yeah.
You got it?
All right. Wow. Your desktop is busier than mine.
Yeah, I gotta move the, you want to see the presentation, obviously.
Sure. Yeah, please.
That'd be nice, slideshow. Did you see that?
I can't. So I'm going to go ahead and get out of the way. It's your turn. Go.
You do see this the screen?
We can see it. Yeah. We can see the screen and the promo code. And,
okay, cool. Okay, so I figured it out. Thank you.
The floor's yours, Mark. Good to see you.
Nice to, Jeff. It's always a pleasure. You're a good friend, and I really appreciate it. Thank you so much. So, hi everybody. Mark Leibovit here. It's always an honor and pleasure working with Jeff and Metastock, and it's my presentations are a little bit unusual because I look at a lot of things, but those who followed me over the years know that I'm a little eccentric in some of the stuff I do. I have my volume indicator, which is on Metastock. We'll talk about that in just a few moments. And I have my newsletters, which you see on the screen. But my approach in the last 45 years in the market, coming from a floor trading background and running into a lot of cyclical analysts along the way, including some astrologers, believe it or not, some good friends of mine. I've moved into the cyclical world as well as the technical world. And just as a brief introduction, one of our headlines in our newsletter today, where we got short, was because we had a full moon above us. And I know that sounds crazy, but since 1972, when Wall Street Week actually had an analyst on television talking about lunar cycles, I've been tracking them for the last 45 years. And I said, this is a top. You're at the moon. And we went short. And obviously, we're making money today. So just one indicator among many we follow in the cyclical world, along with our volume work, which, by the way, is also negative here. So let's move on. Just want to introduce you a little bit, so prepare you a little bit for some extreme indicators if you're not used to the work that I do. So anyway, to move forward here, let's see here, we gotta go. All right, so I have a book, Trader's Book of Volume, covers all my volume indicators, also in Chinese. It's published through McGraw-Hill, and of course my volume indicator, volume reversal, is in there. It was Timer of the Year many years, but in particular 2019 is the most recent time. Unfortunately, Timer Digest is no longer being published, so we don't have that accolade out there in the future. This little cartoon I put together, that's me, of course. I used to be an elf on the Louis Rukeyser television show for all you old timers out there. So that's what I do. I have a weekly radio podcast on HouseStreet.com out of Vancouver. The headline this past week is "A Time to Sell in May," and we'll see if that plans out. Seems to be working today, so we'll see what happens there. But go to HouseStreet.com if you're a subscriber. We do send it. We also post it on our homepage. My VR forecaster, we're going to get into that in a moment, showing some of my forecasts for the year, which is sort of what we've been talking about here, which combines both my volume work and cyclical work. For example, last year, this was my forecast for the Dow Industrials. The bars are the forecast, and the little yellow line is what actually happened. We've been producing this indicator since 1987, so this is for the Dow. This was our forecast last year for Bitcoin. The bars were the projection, and the yellow line is what happened, but obviously it gave you the upward bias there. So we'll get into more of this at the tail end of the presentation. You can acquire the forecast models every year. It's a special report, but it's something that we're very proud of in terms of some of the coincidence. This has really worked for us in terms of trading and planning. I'm a bit of a bear, for those of you who've been following me in the last several months. Most of our trades actually have been on the short side, including the one today. We talked about black swans for over a year, and as you know, we've seen several, starting with the banking crisis last year. Of course, the wars that have unfolded, the uncertainty about the Federal Reserve, and that actually there's a slide coming up showing that a bill has been presented in Congress, which I'm very supportive of, for the abolishment of the Federal Reserve, something I've been talking about for decades. So I think we're in a little bit of a bull trap here, and I think NVIDIA today and yesterday was probably the culmination of that in terms of, attracting investors into the market at the wrong time, unless, of course, you were in NVIDIA, but in terms of the rest of the market. This is a brief slide from the Creature from Jekyll Island. My view, of course, anti-Fed. This book was put out by G. Edward Griffith decades ago, and I'm a big follower of this concept. So we'll move on, but I think I made my point. Is G. Edward Griffith. This is a YouTube link there if you get a copy of it. You can watch an interview with him and talking about the Federal Reserve. And we all know the Federal Reserve is a screw up. We can go into a lot of videos and presentations about it, but even Ben Bernanke back in 2008-9 admitted that the Fed was part of the cause for the Great Depression in the 1930s, when they raised rates at the worst possible time. And the money printing schemes of the Fed are just over the top. Of course, we've got Congress and other issues which we can spend hours talking about. In any event, inflation's here to stay. These are the reasons: government deficit spending, cost of living adjustments, as you know, rising commodity prices, historical inflation cycles, and again, as I mentioned in regard to Congress, unrestrained government spending. My fear is we don't have another 1980 situation where like Paul Volcker had to do back then, driving rates up to 20%. The Fed even now is indicating that there's a possibility even a rate hike, which would be the last thing that Street really wants. Of course, there's more powers to the Fed, and we can spend hours talking about that. That's not the point of this presentation, but they have a lot of tools that they don't talk about, and we'll get on to that. So Elon Musk sent out a little note the other day. He says, what if the bank runs out of money? And some players think the bank is bankrupt if it runs out of money, but this bank never goes bankrupt to continue playing. Uses slips of paper to keep track of each player's banking transactions until the bank has enough money to operate again. The bank also issues new money on slips of ordinary paper, basically in their money printers. Interesting story here that came out. India rejects trade with China. That's a big story in terms of owning Indian ETFs in particular. I think a lot of businesses with the uncertainties in China are starting to move locations into India. The plunge protection team, I'm going to talk about this really quickly. I don't know if any of you are aware of it, but it was created back in 1988 by Ronald Reagan in an executive order. Financial press doesn't touch it at all. It's not even mentioned as an existing power of the government, and they are in there, folks. If we had Freedom of Information Act information to get that, I'm sure we could trace all kinds of manipulative moves on the part of the plunge protection team and the Treasury and intervention in the markets. Those of you may or may not be familiar with the Japanese markets, but the Japanese government owns and controls substantial percentages of ETFs and stocks there and is manipulating that market for the longest time. So maybe we taught them what to do. In any event, it's an existing thing. We also have the Exchange Stabilization Fund, which again is not talked about at all. It allows the government to move into all the financial sectors and manipulate the markets. It was created under the Gold Reserve Act of 1934. If I was running CNBC, which I'm not, though I've joked over the years that we should create an alternate CNBC to try to tell the real story, we'd be talking about what these institutions are doing in the marketplace. This is the bill that was just filed, just the first page of it, I think it was a couple of days ago, to abolish the Federal Reserve. Ron Paul, the former representative, U.S. representative, I think it was about 12, 13 years ago, initiated a bill to abolish the Federal Reserve. It didn't go anywhere. We'll see if this one does, but I see little or no press conversation about this at all. I think basically the reporters on the networks and the financial press are just misinformed, afraid for their jobs, or told what to do. Okay, this is it. It was introduced. Oh, this was the one that was introduced by Ron Paul back in 2013. That's the reference I just made. That was he called it the Federal Reserve Board Abolishment Act at the time. Where are we now on the CNN Fear and Greed Index? Well, we're up in the greed level, so that's good if you're a bear. Gold, again, something not even talked about anywhere. Gold Antitrust Action Committee. I've known these guys, Bill Murphy, for over 20 years. Gold market manipulation has been going on forever. If gold manipulation wasn't involved on the part of our government and central bankers, gold would probably be 10, 20,000 an ounce right now. So bottom line is, are they backing off a little bit here? We know central bankers are accumulating gold. That's one of the reasons the U.S. dollar has been strong, because they can convert into dollars to do that purchase. So it's not an inverse relationship of dollar to gold at all. Actually, seeing gold and the dollar move up makes sense if the central bankers are involved. But the question is, what manipulation is going on? The primary source of that manipulation has been the COMEX, where phony contracts have been traded to suppress prices, and it's also in the silver market. We'll move on. So, you could be bearish on the markets, but this is some examples of reasons not to invest, but you should invest, because look at all the negative events since 1999 that are highlighted on the screen, from the Y2K that really didn't do anything, all the way up to the recent rate hikes. And the result is either because of the plunge protection team or just printing of money or general inflation, markets just go up. And that's really the bottom line. So, just keep in mind that, I've been doing this since 1979. You can check the records of the markets for the past 100 plus years. And regardless of all the crises and wars, the market still seems to always come back. Well, this is one of the bearish signs here. And this, this came out a few weeks ago, came out in mid-March, actually, when we had a big reversal day at that time. Barron's came out with a Bet the Bull headline. And my experience with the financial press is usually they're wrong, and they're wrong at the wrong time. So this headline said "Bet the Bull." That tells me the market may be topping. If you're older like me, back in March 2000, this was the headline for the Nasdaq in the Wall Street Journal. This was the day, in fact, the day, March 10, 2000, that the Nasdaq topped. Imagine it was only 5,000 back then. But when I see financial reports come out like this tells me as a contrary thinker that, watch out, folks, something could be coming just the opposite. The January barometer, I talk about and have talked about for decades. My old friend who passed away, Yale Hirsch, from the Stock Traders Almanac, created this back in the 1970s, and it's on a buy signal this year because the month of January is up was compared to December, which is his rule, but he also has the 5-day early warning rule, where the first 5 days of the year are an early warning for the year ahead. That didn't confirm as it did in previous years. So here we are. We'll see if the January barometer works out by the end, and we won't know until obviously December 31st. And this is more and more indications, more charts about this. If you get a copy of this presentation, obviously you can take time to look at this chart. Geocosmic, folks, we're going to touch on that really quick. I referred to this at the top of the conversation with the lunar cycles. I do a lot of stuff here, backed by a lot of research. You can see right on the top of the screen the full moon, the 23rd, which is today. That says lunacy is afoot, and you might see a big change in direction in the market. It could be a low or a high. Ian Machiavetti appeared on Wall Street Week with Louis Rukeyser back in 1972, and he talked about the full moon being coincident with highs in gold, and that was one of the triggers for me to start studying the lunar cycles and related to the stock market. In addition to all my technical work and volume and oscillators, let's look at the cycles, folks. So turned out it wasn't necessarily tied to highs with full moon. All the cycles work. You have to see where you are in the market. Are your stochastics oversold, overbought? Is the market overbought, oversold? Do I have a negative or positive volume reversal? That kind of stuff. You try to tie it all together. I also look at Mercury retrograde. I am not an astrologer, but like lunar cycles, I did a lot of studies on this. And during the Mercury retrograde periods, the market does crazy things. The next period is August 5th to August 27th. So we got to watch that time frame. And I've done a lot of work on the seasonal cycles in the market. No one wants to talk about the vernal equinox or the autumnal equinox or the summer solstice or the winter solstice, but in many occasions, markets change direction around these time frames. One of the classic dates was March 20th, 21st in 2020 during the COVID crisis. It was right at the vernal equinox, market bottom there. So we have the next one coming up is the June 20 to 22nd time frame. Whether it be a low or high, we'll have to watch as we go into that time frame for a reversal. So I put all these other pieces together, and this is why I'm a survivor. I'm still doing this after 45 years because I look at a lot of stuff, and I definitely don't pay attention to what's on financial television or which in the financial press is any indication of what I should be doing. So moving forward, we just had the big sunspot, huge event. I've been talking about this for weeks. Keep an eye on the sun. There was an instance back in 1859 called the Carrington event, super sunspot, and we came almost close to that. I'm going to back up here, the one we just had just in the last couple of weeks. It wiped out the telegraph system on the planet at the time. Of course, we didn't have advanced technology then. Even the one we had now hurt but didn't apparently damage Elon Musk's Starlink system, which was around the planet. So if we ever experience a super sunspot, we had one, we got close just in the last week or so, and there were auroras all over the planet. Shortwave radio was affected. We get something like this, we're out of business. Internet's gone. Technology, all this technology that we see here could be fried. So we have a very powerful parent out there in the solar system who could, or godfather or father, whatever you want to call the sun, and her mother. She's in control here, and you know, I track this every day. I have nothing to do about it. Obviously, if it hits, you know, even if you're short the market, you probably can't do much about it, because if technology goes down and, you know, we get our systems fried, it's going to create a lot more serious problems than worrying about trading the stock market. Interesting stuff here in the geocosmic. As you know, we've been doing work with asteroids, flying to them, trying to break them up. But one of the reasons that they may already be going on, folks, mining the asteroid for precious metals and for other necessary things. So NASA's been sending ships up there, and this could affect our markets in a big way. I mean, if we start mining an asteroid and there's more gold on that asteroid than exists on Earth now, that's certainly going to, you know, change prices in the whole position of the value of gold, you know, in terms of what our markets have been valued at. So it's not happening today, but it's something that we obviously keep an eye on. I also watch volcanic activity on the planet. Can't do anything about it. Keep thinking about the super volcano up in Jackson Hole, Wyoming. If that ever goes, watch out. But it's funny, many people don't even aware of this or think about it. But a super volcano goes off, we're also fried, just like with the Super Carrington event. Right now, there are 48 active volcanoes on the planet. So we've had events even in recent years with the Icelandic volcanoes, how it changes weather, airplane, directions, and so forth. So in fact, it's just something that we watch. Again, can't do anything about it, but I pay attention to all these geopolitical, geocosmic, events that affect us, including asteroids. They're up there. They're tracking them. We're trying to prevent any disasters. You can get this at spaceweather.com, by the way. They're near misses all the time, and they're small ones that come in. So if you were in Russia in the last few years, that big super meteorite, a small asteroid came in. It caused tremendous damage across Russia at the time, and there's some videos you can follow on the internet where this super meteorite, a small asteroid, entered the atmosphere. A lot of tornadoes, a lot of disasters occurring in the United States right now. It's downplayed, not mentioned at all in the financial press, but if you're one of these people that got their homes leveled or lost, unfortunately, if you're one of the victims, obviously this is a serious event. And what's causing all this? Is it government manipulation of weather? Is it geocosmic events that are affecting this? Is it something to do with the solar activity that's now occurring out there? Very serious stuff. I track it. I should have been a weatherman. I've been good at predicting weather and watching weather since I was a kid. I always thought about becoming a meteorologist. Maybe that's why I do market timing instead, because you're doing the same thing with weather. You're trying to time and forecast weather. And there's a little joke I have about that is, you have a forecast, whether it's a weather forecast or whether it's a stock market forecast, but you want to look out the window first. In other words, you want to look at your short-term stuff and open that blinds and look out, because your forecast may not fit what the short-term stuff is telling you. So it's a big overlap in the strategy for predicting weather and looking at stocks, I got to tell you. So looking at someone who's done both over the years and student of both, there definitely is a correlation. Really fast, just came across this in recent weeks, the Adams event. The risk of a swap in the poles on the planet happened, unfortunately, didn't happen, unfortunately, 41,000 years ago, but suddenly we lost the magnetism on the planet, and this caused havoc, and a lot of life was lost on the planet, and this is a risk, just like the asteroid, just like the Carrington event. Watching all this cool stuff, it's actually just as interesting to me as the markets. Do you think the recent disasters are coincidences? I mentioned this before. Is there something else going on here? My friend Bill Koenig, who used to be a White House correspondent, you may want to watch this video. It's on the screen. It has religious connotations, but in his view, these weather changes have something to do with his belief in the state of Israel. So just something to watch. He was a White House correspondent, and I pay attention to his stuff. It seems far-fetched, but I would look at this video. If we had time, we would play it now. So let's jump into some of what we're supposed to be talking about here, which is Metastock. And I do have a toolkit on Metastock. It's called the Volume Reversal Toolkit. It's the only place you can buy and use my volume reversal indicator. And it's an add-on indicator, and I'm sure Jeff will talk about it at the end of the presentation. But we're going to go through some of little charts here and look at my little VR indicator, which frankly is what I use for my short-term trading. There is 3 versions of the volume reversal on the Metastock platform. The first one is the VR sequential, which shows all volume reversals on the screen. And we're going to go through that. There are 2 others, the directional and the 2-day, but I use the sequential because I like to see all the volume reversals. So this is like a skeleton chart of, when you see the little VRs on the screen, if we're going up, they would be red if we were going down. Volume reversal is my proprietary tool, and again, it's something that is the basis of the indicator in Metastock. So let's see here, keep going. All right, so let's see what we have here. This is an example, and we're looking, I believe this is the Disney chart. If I'm not, no, this is the VTI, the total stock market, the total stock market index, VTI. So on the screen here, I want to put this up first because obviously, you know, it's important for market timing. If you're trading, this is a daily chart. What we have here, if you look at, is little down arrows, little negative VRs, little positive VRs. You've got a 533 stochastic, which I use, and basically 3 moving averages, a 200-day, 20-day, and a 50-day moving average. And from a trading point of view, I like to see the stochastics in sync with the VRs, but there's some tremendous correlation here in short-term trading, and you have to pull up each stock or index and do your own homework. But if I'm just trying to, it's a small example on the screen here, but you get a negative VR. I'm circling back here. This is last year, just as an example of the many that are on the screen. Stochastics were in a downtrend. You get a negative VR, and sure enough, you get a multi-day decline in the total stock market index. So as a trader, if I get a positive VR, like I'm circling here in the middle of the screen, and I have an upward rising stochastic, this gives me motivation to get long. And the question is, how long do you want to stay long? And I'm a short-term trader, and that's why we created a 2-day version of the indicator, which we'll show in a moment. Basically, I like to get out in a couple of days on a trade, and if you can put the VR into weekly charts, you can put them into 5-minute charts, any time frame you want. But it just basically says, what's it saying? It's saying volume precedes price. There are more sellers than buyers, and I get a negative VR as we move into a low as compared to the previous day, and we have more buyers than sellers, and a positive VR as we kick out the previous day's high, and volume moves higher. It's very simple, basic indicator. I used to be a floor trader on the CBOE decades ago, and when I watched all the volume on the floor and the trading, this sort of helped trigger the work that you're seeing expressed here with the theory, of course, that volume precedes price. Okay, so we're going to look at some Disney charts here, and I have them in different time frames. I'm going to try to move the thing off this to the right here so I can see the screen. What do we have here? This is Disney on a daily chart using my sequential indicator. Okay. Again, great correlation on the trades. Most recent negative VR was about 5-6 days ago. You got a negative VR here and a downtrending stochastic. As you know, the stock was down a couple points today to 100. Your 200-day looks like it's in the mid-90s, around 95. So that's probably where Disney is headed. Again, you want to tie in the stochastic with the volume signal, and you got to again decide what time frame you're in. You can get a positive VR and run for 10-12 days, or you get a positive VR and it can be a day or two, or even reversed if you get a conflicting signal the next day. So here's an example over here where you actually had a negative VR, but it flipped to a positive the next day, which means you reverse your position and stop out. So of course that does happen. So that's your daily. We got a weekly version of the same thing. So what I do is I just click the button on Metastock and I converted the chart to a weekly. And sometimes you get really great signals here. In fact, you always get great signals, but you want to tie them together. So if you look at the weekly sequential, again, that's showing all the VRs on the screen. There was a negative VR several weeks ago on the weekly, and it's been down since. Prior to that, there was a positive VR up for several weeks before the negative came in. So you want to check your weekly along with your daily VRs, and we do that in our trading. I trade a lot of Disney. It's a long story, and we don't have time to go into all the details. When I was very young, I actually spent a day walking around Disneyland with Walt Disney, and I wasn't invited, but I did it anyway, and it was one of the fun days of my life. So I've been a big Disney fan ever since, and something that weighs very heavily with me in my trading. You know, there's a theory out there. I've seen it on the internet, and I tend to believe it. You only need to trade one stock. If you can find one stock that you really like, and you can get a feel for it, and you can get a good technical patterns like you see here, you know, don't worry about the universe of thousands of stocks. Trade the stock that you really think is your favorite, or the one that you have the great correlation with. So in the background, you're hearing my two dogs, which I can't control at the moment. So, okay, so here's the 2-day version of Disney. So what is the 2-day version? I don't use this as much, but we created it because of the thought that you generally get follow through with a couple of days following a negative or positive volume reversal. So here we got a signal that says when you get a negative VR or positive VR, you immediately are out of that position 2 days later. And on the screen, you in this example here, you got positive VR and you got a little blue signal on the screen that says you're 2 days out, take your profit. And in this case, you had a profit. So the little blue things on the screen are basically 2-day warnings following your negative or positive VR. And it doesn't mean the stock didn't continue down beyond that or go up beyond that. It's just a little 2-day thing we created years ago, and some people like that. So now this is the same chart. That was a daily version. This is a weekly version. So the same signals here. And we'll move on. Basically, little negative VR. 2 weeks later, you would be out, because this would be a weekly chart using this particular, and you had a downtrending stochastic, which had helped confirm that trade. This is a directional version of Disney. Now, what's directional? Directional is we filter out repetitive volume reversals. So I like to use the sequential, which I've said already, but this takes out some of the noise. In other words, if we had a series of positive VRs going up or a series of negative VRs going down, we would just eliminate them until another VR came in. So I guess we can use this one in the middle as a good example. This is a daily chart, and you've got a negative VR, but no more. There was no more. There may have been more, but we filter them all out until another VR came in. In this case, it was a positive one. So this is a way of filtering out some of the noise on the VRs, which in some cases you can get quite a few in a very short time frame. This is the weekly version of the same directional that I just referred to. Same patterns, eliminating any conflicting VRs. Dramatic one here, going back last year, negative VR on a weekly chart, and nothing until a positive VR, a couple months later, all the way down here, during this huge slide that Disney had from that high $180, $200 level. So very interesting here, where if you filtered it out and you had the patience, this was a great tool for you. Basically, what I'm doing now is going to show a bunch of stocks that I've been trading that I like. Some of my favorites. Occidentally is one of my favorites. Works really well with the VR signals. This is a daily version using the sequential, which means it's showing all the VRs. I'm biased, I have to say, because Warren Buffett owns a big chunk of the company, and he has a great track record. So obviously, I want to be a buyer of the stock after big pullbacks. But we do get negative VRs, as you can see, and downward stochastic patterns that indicate that we have a downtrend in place. So it trades like every other stock, but great correlation on the VRs for very short-term moves, 2-3 day moves. And this is why I enjoy the VR. There's some great examples here as you study the chart, and you see that there is some great correlation. And I tend to trade pretty aggressively, so I'm usually out within a day or two on a VR. Natural gas looking great. It's been so negative for so long, but if you look at this chart, this is a daily chart. We start getting a series of positive volume reversals here with an upward stochastic, and this is in the last couple weeks. And UNG, which is the ETF for your natural gas, has been on the move, and it's super cheap. I mean, I don't know how far this could go, but you're talking about something that was in the mid 30s, down to $1. And of course, I did a reverse split here as well, but a little extended here, but coming out of a big base and above the 200-day moving average. Another one of our favorites. It's in our newsletter. U.S. Steel. I'm favorite to U.S. Steel. As you know, there was a deal. It broke off. Nippon came in. It's been rejected. Nippon still wants to do it, but the government supposedly doesn't want them to do it. Who knows? Maybe they'll change their mind. But someone else, including Cleveland Cliffs, may come back in. So to me, I'm a hold on U.S. Steel at these current prices. Somebody's going to come in again, in my opinion, and whether Nippon actually does a deal or someone else. But you can see some nice correlations here. I love this one here. This was, not too many months ago. We get a positive VR and a rising stochastic, and then the deal is announced with Nippon, and things, explode. You've been long the stock, and then you got the benefit of this huge gap opening as a result of that. So just showing you how some of these VRs, then a negative VR came in after that, and it downtrended for a while. So, great indication of where the buyers and sellers are. First Solar, I don't know how to explain this. This is one of my favorite stocks of all time, besides Disney. They're actually based here in Tempe, Arizona, and I drive by their corporate headquarters all the time. I was trading the stock in the 30s, in the 40s. Now they shot it up to $251, supposedly because it's a AI stock, which don't press me too hard, which I think is a bunch of nonsense with regard to why they took the stock up, using that as an excuse. But in any event, the stock used to be in the mid 300s, probably 25 years ago or more. Maybe it's headed there again with the AI story. But we've been trading this stock. It's in our list almost every day in terms of a trade or watch, because we have some nice correlations here with the negative and positive VRs. So that's the daily for solar. Tesla we follow, obviously, because we want to keep on top of this. It's this little stock, which is great for trading as well. That's also a sequential chart, so we want to keep going so we don't run out of time. But this is a daily version of it. I don't know if I have a No, I didn't put a daily version. This is the video, of course. This is your sequential. Of course, we know what happened with the video. I don't have to tell you. It went to about $1,160 today. But interesting pattern here. If you're looking at this daily chart, this is like a inverse head and shoulders pattern. If you look at the head down here and the two shoulders up here, and the rough rule of thumb that I use is the distance from that head, from that shoulder to that head, is usually the amount that it exceeds it when it takes off. And in this particular case, you're looking, it was what, $975. It got to about $780. Okay, so that tells you you may have more, more coming here. You might be looking at $1175, $1150 in the stock. It only got to $1060 today. So the ultimate target may still be a lot higher. Right now, however, I'm more of the view that your pullback numbers way back to the previous high down there in that 975, 980 area. So I'm not chasing it here. I bought and sold just for quick trades here, but if it pulls back under 1,000, then I would take a look at it again for maybe a move to that much higher level that this inverse head and shoulders sort of implies. Okay. Costco, well, I shop there just about every 2 days. So they always say, if you do business with a company and they're doing well and they're busy, you should own it. So, we have Peter Lynch's from Magellan's theory about that going back decades, that go kick the tires, go see the company, and if you like it, buy the stock. Way extended here, it's into new all-time highs. I think got to 808 today. So if on a pullback, I would take a look at that one, but we'll see. It's got a lot of recommendations, but great correlation on the negative VRs and positive VRs here. Just like 4 days ago, we had a nice little positive VR, and it got up to, I think, 808. Today was in the 780s at the time. As you know, I produce, or you may not know, I produce the cannabis letter. I've been a big proponent of cannabis trading since 2014 to 2015. Got into weed, the original Canopy Growth stock, and it was about $1.50 to $2 a share, went to $58. This is the ETF for the American domestic cannabis stocks, which for the most part are making money. Most notable which is True Leaf, TCNNF, which has got a big presence in Florida, a big component of the index. This index was way high. I think it was in the 50s. And here it is, it's trading today around $9. So with the DEA looking to reschedule, they're sending out comment letters now with Biden all over this for political reasons, trying to get a reschedule, and there's still a little headache in Congress with the Banking Act that needs to be passed. But for the most part, I like MSOS because these are companies that are doing well regardless. I mean, I think that TCNF is actually buying, or is it Greenleaf, Goodleaf, with GTBIF is buying back their own stock. So unlike the Canadian names, which had more problems, the U.S. names seem to be actually making money. And I guess I don't know whether the DEA change from Schedule 1 to 3 is going to make a big difference in their profitability if the Banking Act is not also passed, but the psychology is sort of changed here. So again, we trade MSOS quite a bit, and it's a nice little trading stock with a lot of heavy volume. CGC, of course, is Canopy Growth, which I mentioned a moment ago. It's really volatile. It was trading like 20, 30 cents, went up to $1.50. But remember, this was a reverse split. So, this thing has potential to go way up here, back to $2.50, go much higher. And it looks to me, looks like an uptrend to me, higher highs, lower lows. And this is also contingent on the legislation and the DEA action. But the company also apparently has the benefit of doing business or planning to do business in Germany, which recently has changed its marijuana laws. So their future may not be only dependent on what's happening in the U.S. Got to look at gold, obviously, way extended here. As I was a little bearish on the stock market and got short, I'm a little bearish on the gold market here for a pullback. But I think the cat's out of the bag for this one. I've been predicting a $2,700 target in gold over the near term. I don't know if it's by the end of this year or into the middle of next year, but we're seeing the shares confirm. Most recent signal, positive VR. And as you can see, we do get some negatives when it has a little bit of a downtrend. So you got to watch that. But I think we're in a corrective phase now. We had a couple upside gaps that need to be filled. So I decided to stick with the gold play. So my gut feeling was sell and rebuy on the gap. I didn't want to leave myself out of a market, which I think is psychologically and physically has changed here. GBTC, also a bit extended here. This is a Bitcoin trust. I'm looking for $80,000 to $100,000 in Bitcoin. But right here, we got a little extended. So we're in a little pullback phase. So I sold my Bitcoin and my Ethereum for a trade here yesterday and the day before because I thought we needed to pull back with the overall market, since it tends to move with the market as well. And we had some gaps below the market in GBTC. But the bottom line is, you can see here before it started to head down in a correction a few weeks ago, we did get some nice negative VRs, warnings of the decline. And prior to that, you can see we had some positive VRs before a move up. So we got a good correlation in GBTC with the negative and positive VRs. So that's one of our favorites. Generac, this stock is all over the place. Some analysts are recommending it now because of fear of hurricanes this summer or power losses. Obviously, if that solar impact actually occurred, there'd been a rush, obviously, assuming you could even get a solar generator, a Generac generator, which replaces, it's not solar, but it runs off natural gas or propane. But I'm still a fan of the company. The company's had some problems, but it has some nice trades regardless. You can see with the negative and positive VRs here. Just philosophically, I just think it's a good idea to have one of these. My mother-in-law had one years ago, and I stayed at the house when there was a power outage, and I was sold on Generac. So whether the stock or the company is going to do as well, we do have competition out there. Kohler, for example, produces a comparable unit. But the bottom line is we trade it. We sold it a couple of days ago for a trade, but we still like Generac overall, and we do like trades as well. Solar, I already mentioned, so we'll pass that. USO, the oil index, negative trend here in the last few weeks, mostly negative VRs. We got a positive VR. This chart was made a couple days back, so I don't have a current reading here, whether we got a negative VR last day or so in it or not. We may have, but I show it to you because I track it and follow it and trade it, and mainly because we get some nice correlations on the signals and with the stochastic. So it's basically your ETF for oil, and it's one of our favorites and high correlation with the VRs. Central Fund of Canada, also one of our favorites. It's now the Sprott Gold and Silver Index. I think this was the first fund, I think it was created in 1964, that has gold and silver as its components. So bottom line is, shut my door here 1 second for the dog, so bear with me 1 second. Sorry about that, folks. You know, I got 2 little munchkins here, and they have their own mind. You know, you work out of your house and you do this. This is what happens. There's a story about that too. You know, with COVID, there's no change for me. I was working out of my house since the 1980s, running off satellite, where I used to live in Sedona, Arizona for the longest time. So anyway, CEF has been around since the mid-60s, half gold, half silver, roughly. Great way to play gold and silver. It has physical behind it. If you have enough of it, I think you can get delivery. And had a couple gaps on the chart here, so it got a bit extended. But you also could see on the chart here, great correlation on the VRs, positive on a huge move, negatives, we come down, positive, we go up, love it. Great correlation with the stochastic. So this is one of my favorites, traded all the time. There's about a dozen or so here that we've been talking about. So I also talked to you about my forecaster indicator, which is my cyclical indicator. At the top of the presentation there, it showed you the results for Bitcoin and for the Dow last year. So as a reward to Jeff and to the great followers here at Metastock, you're going to see some of the forecast models for 2024. My first thing that I want to point out is that my feeling about the direction of the stock market is down. It may not be going down tomorrow or the next day, but I think into the summer. And you'll see this in my model in a moment. And I think you have potential targets here. This is a down in the Dow, so you could be looking anywhere from the 34 to 36,000 level, which is, you know, obviously a few thousand points below where we're at now. If we do get more of a correction, so let's see how that unfolds. And this is sort of where I'm looking at the market over the near term, and then up beyond that into the election or post-election, I suppose. But let's take a look at it. So these were the ones I showed you earlier. The results for the Dow and for Bitcoin from last year, from 2023. This is the forecast for 2024. And basically, we're looking at a low here coming up this summer. It looks like July, maybe August time frame. And here we are in the current time frame where we're making a peak. So I think we're headed down based on this particular model, okay? So this is gold. Let's see here. This is indicating that we may be hitting a little top here and a pullback. Okay, so you got to keep an eye on that. And right now I've been warning you a little bit that we had some gaps. Okay, US dollar shows a steady uptrend during the year 2024. I do not believe there's an inverse correlation with gold and the dollar here. In fact, the actual reason why the dollar's been strong is because central bankers have been accumulating gold and they had to convert into US dollars to do that, and that drives the dollar higher. So don't fall into the trap of thinking that a strong dollar is weak for gold. Treasury bonds, you know, basically down for most of the year. So, you know, higher interest rates is what this is saying. It's becoming no surprise now for those who actually believe Jay Powell or follow the Fed or any of the nonsense you hear on national financial television about lower interest rates. My fear is something more significant could happen, and we end up getting a repeat of the 1980 phenomenon. I remember financing a home. I think it was back in 1980, which dates my age. Obviously, I'm in my mid-70s, getting 11% on a mortgage when regular rates were 14, 15%, and I thought I was getting a great deal at 11%. So, you know, my life experience is 6, 7, 8% in mortgages seems high, but it isn't based on history. But who knows, we could be going even higher. Bitcoin says, be careful here, you know, right in this current time frame, you know, May. We may hit a top. This is just cyclical work. You got to put this together with my volume and my trading and so forth. But you know, we had a big run here, and it says we may have a pullback here in Bitcoin, and then maybe up again later in the year. So if my volume work says positive ER, I'm going to go follow the volume. This is like the weatherman forecast, a big picture view against the short term. But this said, you know, we had a run here, and you know, maybe we hit a little top. So right now it looks like a little trading top, and let's see if the volume confirms a bottom, in which case I'll go with the volume. Lithium downtrend during the year. probably a result of the fact that people are buying hybrids, not EVs, as much as Biden wanted us to do. So, as you know, companies producing the EVs like Tesla suffered a little bit. The companies that did the hybrids like General Motors doing better. Uranium, a little toppy here, my work. We already had a run here, and we're in this time frame, and then sideways pattern during the years. We already had a big run in uranium, so I'm not chasing it. And that's the forecast highlights. And if you want a copy of my newsletter, we offer that 50% off promo code 2022 half off. Just go to VRTrader.com and you enter the half off, and you 22 half off, and you get 50% off any of the newsletters, including the forecast model report, which goes into a little bit more detail. And let's see if there's anything. That's it, the 50% promo. Jeff, we're about 3-4 minutes from the top of the hour. I think we did pretty good getting everything in here, and I did talk fast, so thank you.
All right, thank you, Mark. That was appreciate you, and thanks for coming in. I will talk a little bit about your add-on as well. All right. Very cool. Let me go ahead and do this. I'm gonna go ahead. Okay. And we'll go ahead and do this presenter. Okay. And, all right, cool. And then just to talk a little bit about Mark's add-on. Mark, one of the things, if you're not familiar with Timer Digest, you have the ability, it's a website, and basically they keep track of trades, and so you can kind of send your trades into them. And many times, including in 2019, Mark's been rated the top market timer of the year. So congratulations to him on that. And we have created as an add-on his VR system, and we talked quite a bit about it. He has the VR. He has basically 3 versions of the volume reversal toolkit. He's got basically 3 included indicators, 3 included expert advisors. That is the VR reversal 2-day, the VR directional, and the VR sequential. Those include scans. They include expert advisors. They include commentaries. They're full systems. They're ready to go. It's only $99 per month. If you want to try it out, we'll give you 2 months for free, like we're doing with everything. So if you buy a month, we'll give you the second and the 3rd month for free. The cost on that's going to be basically $33 a month to try it out. If you like it, keep it. So to order, call 800-882-3040. You can also visit us at metastock.com/salespchat, and we can kind of help you out with that as well. Or, of course, it is available here at www.metastock.com/conf-promo. So, very good. All right. Do want to say thank you this time, well, to all of our sponsors, really. Stocks and Commodities Magazine, CMT Association, and TechnoTrader. But I do want to say for a second, thank you this time. Thank you to Stocks and Commodities Magazine. I know they've been supporting the Traders Conferences, the Traders Summits, and you probably know too, because we're pretty deep into this conference, but they've been supporting us since day one, 13 years. Great guys, easy to work with. They've published since 1982. They've got 1.3 million subscribers. If you're a subscriber, you can become a subscriber. You just go to www.traders.com. You can subscribe now. If you do that, you actually have access to all of the articles they've ever written, all 17,000 plus of them. So www.traders.com. Our thanks to all of the guys over there and all of the gals over there, everybody that kind of helps us with the event, helps us get people here, and has basically supported this since the inception. We appreciate it. So, Greg, are you available to kind of help me pick a random winner? Okay. Let me give. This is the. We're coming up on the final speaker of the day, and so we're going to give away the best prize of the day. So when you're ready, is your random number generator ready?
My phone is otherwise engaged. I was kind of doing a meeting off here to the side on my phone, but I'm pretty sure I can come up with a number that's relatively random just by using
anywhere between
by using brain power.
1 in 9,047.
81.
Okay. That's a
8-1.
very low number.
You know, like I say, I feel like I know random is random, and I think it's impossible for a human being to pull a random number from their head, if I'm honest. I think if you look it up in Google, maybe you'll find out. But I feel like we've really been skewing to higher numbers. and I want to give some favoritism to those people that registered earlier. So,
yeah, okay, cool. Well, Nick C is the winner. So, Nick, if you're watching right now, type something in chat. I know Nick C is kind of probably pretty vague. There's probably a lot of Nick C's out there. And we don't like to kind of give out full information. But if you have a Gmail account, you didn't provide a country when you registered, but your name's Nick C, there's a better than 1 in 9,000 person chance that you just won a prize. So congratulations. The prize that you won, we've been talking about Metastock, how it's been rated the best software in its price category for 31 years in a row. We've been talking about how it can kind of help you scan through the markets. We've talked a lot about scanning. Scanning's my favorite thing in Metastock. It's practically something that I do twice a day, most of the time, but also helps you test trading ideas. Scott Brown came in yesterday. He talked about our patent and forecaster, how it can help you. Talked about the real-time commentary, the signals, the alerts. Talked about our support, how we keep more people in our support team than ourselves and our marketing teams put together. And how a lot of times, how they're very helpful, how they can really kind of, I think the people in our support team really make a difference for the company. So we're going to give you, Nick, 3 months of Metastock. We're the real-time version. We're going to give you 3 months of the Metastock Zenith service. The Zenith service, just to kind of remind you what that was. Metastock, the Zenith, basically was developed at the cost of over $1 billion. They've still been developing it for years since then. It is a premier news service. It's designed to compete directly against Bloomberg, which is about $1,300 a month. It includes news and articles from 3,000 reporters in 300 different news bureaus. It's got 30,000 different company research papers that you can look at. One of the most extensive news and analysis platforms on the planet. And we're going to give you that as well. So Nick, congratulations. What's going to happen is next week, as the test kind of settles after Memorial Day, I'm going to reach out to you and make sure that I have the appropriate information. In order for us to provide you data, we need to make sure we have an address and a country and that kind of stuff. You send it back to me. We'll even provide you with our white glove installation service. That means that if you, we'll have somebody give you a call, they'll help you install it. They'll answer any questions that you have. You'll have unlimited access to our support team. And I'll also make sure you have Unleash Your Power Metastock. So great offer. Congratulations. Also, if you're just watching and if that sounded good for you, I do absolutely love Metastock. I wouldn't trade without it. I don't think I'd be able to really, but if you want to give it a go, I'd encourage you to try it. If you buy a month, we will give you the second and third month for free. There's no commitment. Right now it is right now it's May 23rd. And I'm a little loopy. It's been a long week. 8/23 is basically 3 months. You get 3 months. For DC, Metastock starts at about $69 here in the US or $59 internationally. $69 will get you basically the whole Metastock platform, as well as the training, as well as unlimited access to the support, as well as the Unleash Your Power Metastock. And there's no ongoing commitment. So give us a call. We'd love to talk to you. We'd love to answer any questions you've got. 800-882-3040. Metastock.com/sales-chat or metastock.com/conf promo. Greg, thank you very much for the assist. I appreciate you. And let's go ahead and talk about our next speaker. Our next speaker is Peter Dalal. Peter developed one of our most successful selling add-on called Forex Traders Advantage about 15 years ago. And as the name implies, it was designed around trading the Forex markets. Over the years, Peter's been kind of perfecting his methods and programming them, and has written a really, really good methodology that combines ingredients to help you trade more successfully. So without further ado, let me get him on here. How are you doing, Peter?
Can you hear me?
Okay, yeah, now I can.
I think you muted me.
How are you? I'm doing good. Let me make you the presenter right now, so it should pop up. Do you want to share your screen?
Okay.
And I'll make sure that we've got everything ready to go before we let you go, like that we can see everything and all that kind of stuff.
All right. Can you see my slide?
Yes, sir.
All right. Let me go back and forth one more slide. So I could see that it represented second slide, right? So it's working.
Go ahead and click on next. Okay, yeah. It's coming through, and it's advancing. Everything's working properly. Everything looks good. You sound great. I can see your slide, so I'm going to get out of the way. Your turn.
I'm relaxed, actually.
Good. That's good to hear.
Today was a very interesting day. We kind of knew it. We wrote it. In fact, this morning I wrote it on a WhatsApp to my audience. Doomsdays are coming. We've been telling since January, but this is the perfect timing was. But anyway, let's get started. So how is everybody around the world? Thank you for being here. And thank you to Jeff and Kelly to have me speak here. As you get older, you don't want to talk too much, I guess. So today we're going to talk a lot in a shortest period of time. So let's get started. My name is Peter Dalal. As Jeff told, we started with Forex Advantage in 2003. Then, not talking too much, but we broke all previous records for Reuters history back in days. But at the same time, I was developing a product which is called Magic Trader, and that was not supposed to be given to general public. It was an institutional product. But years after years, I've been in touch with Jeff and Kelly, and at one point, we felt that we should give it to general public, right? Because something can happen, and my ride for the health is very turbulence. Who knows what will happen? And I got 2 lives so far. So, and I'm doing good. So basically, I always felt little guys will never know what institution does. I was lucky enough to get a extensive exposure to many institutions. I was just lucky to be right timing, and my nature to help others. That's how I got there, and I never left. So we're going to talk about all these things pretty soon. Now it's the last hour of the expo. We'll be still brief, but also we don't want to go too like a quick, so you don't understand anything. All right, so we're going to talk about many topics here. So basically, Magic Trader is designed, and I just don't want to give heart attack to people. When I started first time with Metastock doing the public event for Magic Trader, I made a statement, and I had a picture at that time. It's like an iceberg, right, and galaxy together, right, an ocean and galaxy. What I discovered and got the patterns, I could not believe myself what is out there. And basically part of the losing streak on a Wall Street is number of risk involved. And we talk about 50, 100 risk, but there is much more beyond that. Interestingly, it is true, and it's been proven, the combination of the risk is unrealistic. Means you're talking about trillions, so not even billions. In my attorney, the law firm, who's very old law firm for patents, the owner made a statement that I'm inventing like a Bill Gates and I need money like a Bill Gates. You're talking about thousands of new inventions, but that's not important. As long as you make money, who cares how many are there? So, and you don't need to know everything. So going forward from this point, keep in mind, you will see a lot of things, but you don't need all of these things to trade. Eventually we'll know the impact on your bottom line, knowing certain things. And there are a lot of secrets. What I learned in a real time on a Wall Street, I have put it inside this software, and plus new inventions which only knew while we were trading. I kept it to myself, right? So having said that, it's all different things we're going to talk about it. The simplest way we could take advantage, Jeff mentioned, right? Ingredients. Also, it is called also chart patterns. And this has nothing to do with your traditional stuff. Magic Trader was designed totally from grounds up. So you're sarcastic. Honest, I use all this for years. I used to speak for Reuters, and Jeff and Kelly was with me. But I also realized there is a better thing I could do for myself as well as everybody around me, and takes less time to analyze. And that was my biggest issue. And I wanted pinpoint entries based on a risk, not on the price side. So Magic Trader is really consists of many, many things like this. And as I said, you don't need to learn all. So don't get overwhelmed, please. So I'm registered, my company's registered, and I'm having many licenses over the period of time and different industry. I still have a lot of licenses in different industries too. So my mindset is work like a lawyer because I got to deal with all the regulators and the lawyers. So you got to think like a lawyer to protect you as well as your company and people around you. So I wish there was a better way. So we're going to talk about all the disclaimer, not in full length, otherwise we'll be here until 10 o'clock in the night time. So we're going to be brief. Copies are available with Jeff. If you don't have it, there will be email address all stock. You could request me. It's on my website, themagictrader.com. And disclaimers are all over the place because that's what lawyers wants it. So we're going to talk few things important out of this disclaimer. So basically, trading is risky. Nobody can guarantee for profits or losses, and regulators don't want us to use even word consistent results because you cannot consistently produce the results with any market. So they don't want us to talk about it. So, and they don't want us to talk about guarantee, any kind of word related to guarantee, directly or indirectly. Otherwise, I get violation. Luckily, so far we are okay with both agencies, such as SEC as well as CFTC, and I have a lot to deal with. And normally don't talk about CMS, which you guys probably half of you don't know. It's a health department issue, right? So that's another part of my life for many years, and I normally don't talk about it. But we are in compliance business, not in trading business. I think I make a joke out of myself. Okay, so basically everything is risky. Do not borrow money and trade. Do not leverage. I hardly use leverage. Maybe on a forex or futures you have no choice, but I normally don't like to have a leverage because it's risky and a risk on a steroid. Please, an intraday margin also stay out of all these things. Please, you could trade options is much easier risk, and also in that we're going to talk a little bit. I like to trade options, but spread trading and different type of option trading. In my count, there are more than 200 different kind of strategy you could use. You never heard of that? We'll talk about it later. I've been trading options since 90s, and just want to tell you, at one point, it took me 3 years to get permission from Painweber, now it's UBS, to sell naked calls and naked puts. I was a nutcase on a Wall Street, but I don't do those anymore. I'm conservative, but yes, I did, right? And I did good, so I cannot complain. But I was a risk taker. Now I'm most conservative trader. Again, CFTC rule 4.41, you could get a copy from cftc.gov, but basically everything we do, including they want us to tell you all, even though it's a real-time trading results, they all fall under hypothetical definition. And because of the lack of liquidity, bid and ask price, say for instance, depends upon liquidity in a market, spread widens or tighten up. Every security has the same problem. So how you could consistently tell, oh, you could make consistently money? No, it is not true. You could make believe it. So people do all the, but we are regulated. So we talk about what regulator wants us to talk about it. And we stay within that guideline. Now, options involves very much risk, right? I love it, right? I think that's the best invention anybody has ever done it. And I cannot wait, and I'm going on a public today. There will be a time, hopefully, right? Just like I was instrumental in micro mini contract for a forex industry, right? When time comes to, hopefully, they do $50 contract instead of 100 or less in 25, and hopefully that can happen so little guys can trade, right? Big options. So hopefully that happens. Now I'm going on a recorded line here. There will be a time to do so. I'm not the regulator. So again, we're going to show you a lot of call options and put options here, but that doesn't mean they are accurate. Even though it is accurate, we got to tell it's hypothetical. All right. And there are trillions of different conditions. Does happen. I'm going to show you in black and white today. Shocking, but we've been knowing it since 2004. Okay. My company is registered with CFTC. We're going to talk about my license number. You could check whatever you want to check it, because we require to say so, right? We got to represent our license number. That's a law. People don't do it, it's a different story. But we've been regulated, so we've been audited, so we got to do what they want. So my company also not playing in role here for advisory service. We just do interpretation of the chart and evaluation of the chart. We don't give any recommendation of buying, selling, or anything to hold it or any kind of securities, right? It includes everything. And by the way, Magic Trader is applicable to anything which Refinity or Reuters or whoever's feed is, or Metastock feed. We will produce results on the chart with those data feed. And I don't want to talk about the past, but we had data from Reuters at that time, or Rona virus or whatever. And I made a bold statement, and administration in charge was making statement that it's going to go away. I said, no, it's going to take 2-3 years minimum. And it was shocking. And later on, we got to redact it because it became a political by talk, because it was the fact, right? So nothing I could do. Again, everything what we're doing is intellectual, more or less everything around Magic Trader, intellectual property. Please respect our, and we really take it very seriously. And streaming access, in fact, including today, and broadcasting. This is our license number 3529991. Here I may talk about some security. I may be in position. I don't know. We'll see. But I just got out one security yesterday, which I was having married put strategy, and I wish I could have done collar, because there are stories about that. But I had a good successful trade on that, and I was lucky. They gave me even stocks in form of dividend. That was even shocking. So I made good money. That's the only thing I could tell you. Some people in this audience knows what I'm talking about. Again, everything, we don't give people hope or guarantee that you're going to make $1 million with Magic Trader. We prefer not to get involved with those. As long as people can do positive trade, I'm happy to do so, right? And Magic Trader has a lot of opportunity. You're talking about trades, setups. We don't have scarcity for that any given market, boring or any market. Magic Trader, when I started, I said there was only maybe 50, 100 strategy. Believe me or not, there are a few thousand. You don't have to believe me, but it is true. People in my room, eyewitnessing. It is mind-boggling. This is what I invented. What I firmly believe as a businessman, and I want people to pay attention to this thing. Market has to give you money for the risk, and you got to work for it. So I developed a simple system, scalp swing, and we teach that how to do it. So the idea was, I don't like drawdowns or very minimum drawdowns, right? So I figured out, right, using multiple time frames and a couple of things, and all these 5 ingredients plays a big role for that. So basically, we can't guarantee zero drawdown, but we experiment this thing over and over and over and over again. So you got to practice it. But it is true, you could come to very close to zero drawdown, no guarantee. So this scalp swing is playing a role for that. And our scalp swing is a couple of hours. I don't need to wait whole 3-4 days to make money. However, it is still good for swing trading also. It works with any strategy you want. Okay, so we're going to talk about how to trade options with the Magic Trader today. And we're going to use simple strategy, just buy and call, not a very complicated. So ordinary people don't get overwhelmed. I could go up to 200 different option strategy, but that's not the point. You got to make it simple. That's what the goal is today. So you don't have to learn every single thing. You make little money here and there, and then you become graduate, and then you start going, become a professional. Okay, so we're going to talk about how we could find so quick these option setups. So we're going to talk about it. And we have Explorer, thanks to Metastock. Okay, and you could enter with the confidence. That's what we're going to talk about. Very simple things. You don't need to get overwhelmed. So this is simple chart, what it looks like in a nutshell. That's why we're going to start a little bit at a time, and then we're going to speed up. So basically, the chart more or less looks like this. And that has a lot of different variation. I could put 10 different pens here, but we don't need to know all these things. So we're going to make it very simple. So what I did it, so let's do something very simple. So this is a line, vertical line. It is like a going sell side. This is the side which is going long. So we're going to talk both of them. So basically, when vertical green line comes, it means we're going long. And at the same time, suppose the spike comes in, which is a dotted triangle, we're going and enter in a bullish line or a bullish side. As simple as that. However, this doesn't have to line up. This line can come later. It's still fine. At least you are getting out of your short positions, such as here, and good to go in another direction. You're going to see 3 different colors over the period of time. One is my favorite yellow bar. Then there is a turquoise bar, right? And black bar. Black bar is, I always struggle, such as this neutralization of the market. When is the point market tries to neutralize? So it gives me heads up. If you have a short, put a tight stop and get the hell out of that. So it gives me heads up. And with the ribbon, black is even better. And this one telling me, right, with the yellow bar, right, or even by itself, that time has come, we're going long, right? And the spike can come in a half shape, right, while you are trading, and we call it an anchoring. At the end of the day of that yellow bar, it will anchor, but it gives me heads up when I see the spike that, hey, Peter, we're going long. So let's go and look at this smaller time frame and see if they have similar things going on. And that's about it to get started. So now we have different symbols in a handbook. You have all these meanings for that. But for simplicity, yellow bar and a bull. And he says, call. And that's what you need to know. It has a plus plus, which is something better. What is behind plus plus, you don't need to know all these things. And while you're trading, do you think you have a time to analyze that way? No. You have fractions of seconds to make a decision, right? And scanning takes a little bit time. So in a first 5-10 minutes, you need to scan it in the market and see how many securities has a yellow bar. And I will admit, each of the yellow bar, there are different kinds because there are millions of risks getting lined up behind the scene, right? But we can't plot every single thing, but I made it simple. As long as you see some kind of hope here, hope in a way, technically it is lining up for bullish. That's why bull is there. And we're good to go. Another thing you have to watch here, these 2 lines has to be parallel. That doesn't mean you cannot trade or you could trade without being parallel. But you have to have a little bit advanced knowledge of that. So for new guys, only thing, if this security has a parallel line, this is no brain required, right? It's going up, so we're going up, right? Then this is, we call it a pure health. So use of this health indicator. This is our patented product, right? I always, because I'm having a lot of health issues, so often go to hospital. So I'm sitting there one day. I said, doctor can check my health. So why we cannot create something to check internal health of security? Exactly, that's how I invented this thing. There got to be a way. And I'm an engineer by trade and have a bunch of licenses in a financial industry. All right, then I put myself, it took me damn 2-3 years to figure it all out. And there is more into that, but the simplicity outside, you're looking only this much information. That's it. Otherwise, we go crazy, right? And you don't have time to analyze. So when you try to do too much analytical work, you wind up having that, stagnant point. You can't make right thinking. So over analyzing gets you parallelism. So don't do that. And I was running around all over the world, speaking everywhere. And I said, this is nonsense. I got to do all the trading plan. It takes 2 hours to do trading plan. And by the time I call the broker next morning, right, things moved. And we wound up losing money or make few bucks. There got to be instant gratification on analytical side. So I figured it all out. All right. These 2 lines are not the lines you're looking at. I don't want to go into too much, but common sense. If it is above it, we're going long, right? When it crosses, it's not your cross. What are you talking about? How many days? I even forgot about all these things. I have not used those things for many years. I don't need to. Once in a while, somebody challenge me, then I'll talk about, because I taught technical analysis many years. So I still remember a lot of things, but I don't want to know about it. So basically, common sense. If it is above it, we're going good. Now these colors, different colors, what I invented and got the patent for, that I realized that thanks to institutional trading, it is not market moving because everybody is going long. Within that, there are divisions. So when institution like Goldman Sachs and Merrill Lynch, when they're taking risk, there is a different color of the candle because they're taking initial risk to change the trend. So prices can go down, but all thing is the ship is going to be turning. I spoke in California, and that's the first time I talk about ship turning concept. If Jeff remembers that, right? He was there. My daughter was there. So this is like a ship turning in my eyes. It is expanded. Otherwise, you will see like a belly ship. And we're going to see further in the chart. That means risk is changing the hands. So anything can happen if you are short. You will have a pain in the stomach, right? So very simple. These colors, different colors, don't get intimidated, but they are there because different kind of institution playing the game. So you got to recognize, oh, this is big candle. That's how big boys are coming in there. So I have no problem taking the risk. Now, what I invented, and I don't want to take a credit even today because I want to keep it very, very simple. Forecasting, we've been forecasting since this was invented. And these symbols are forecasting. I could tell, artificial intelligence, and I could take all this ride with the current hype. But we were doing 15 years ago, but I kept myself quiet, right? And I did the same thing a couple of years ago, right? Thanks to Jeff to inspire me in a way. I don't want to say, Jeff, don't get mad at me, right? I was begging him for option data, and somehow it didn't come through. So I said, hell with it. I'm an engineer. I'll figure out artificially when there is out of money calls, people buying it, I'm going to figure out how to do it without option data. And I put my X together, and here we go. We figure it all out. So basically, it's artificially looking at what market makers, right, adjusting that delta position, because anytime you buy out of the money call, they got to buy security or hit it with the futures. Come on. So now I want to know what is that zone where they're buying. So I will take advantage of it. The same thing applies to the other side. So we, by necessity, figured out new invention, which is forecasting what these people are going to be taking positions with. This is very big. If you realize on institution side, it's very big to know. I'm always fascinated about those kind of things. All right, so this candle here is enlarged here. We're going slow so you understand that don't get intimidated by these symbols, right? Because I've been to scrutiny of one of the agencies which we have license with, right? For 2 years, they examine Magic Trader, every symbol you see here, plus more. And I was having a good report in a way that each candle represents some kind of risk, and we have not seen that before. So generally, no disrespect to people, you get one buy and one sell arrow. Your risk is in between and you lose a lot of opportunity because you could take advantage of lower risk in between. So you have another entry with that, or you could get the hell out of this trade if it is not behaving. So it really produces unrealistic results, no guarantee. I went in real, what you call competition, right? In my alert room a couple of times with the Forex, and then I did something very unusual recently. How about trading, spread trading as a day trader? All right. And I don't want to talk about the results because then we can of worms, but people were in shock. All right. That's the only statement I could make it. That doesn't mean that you could do that because I know this software, but you could do even very close to that. You will be shocked. I had a losing trade because of, sometimes I go on both directions, right? And I forget to take off the old one. So I had a losses, right? But very minimum total losses. I don't want to say much, but it's not 100, it's not 500, not 800. Then you could figure out it was 8 losses. I had a losses, and sometimes I will take a loss. But $100 or less, come on, give me a break. So, but I don't have to prove anything. I have a live room, people see it, they see actual my statements. So I'm very transparent there, but they sign confidentiality agreement. So we don't need to talk and prove anybody anything. But can you do a little bit about it? Then you'll be happy. And there is no guarantee that we could consistently doing that. I got a lot of practice, right? So you do learn it and make few bucks, and that's the answer. So now this is the YB4, which is really a good way of trading with a lower risk. Lower risk means that it's almost selling done. In my opinion, that's the risk. But that creates drawdown business and give you heart attacks. Now, advanced price perceptors, what I did it because I came from institution side. So what are those points where prices can go down, but institution taking position? You don't need to be scientists to figure out. Look, even it closed below the open. What happened next day? And this is heavy duty institutions are buying. In our trainings, I have recorded those. So now we're going to go speed up this thing. And this is called health window. And this is the spectrum where all the magic happens. So I added these 2 little square. So the red spike is number 2 and green spike is number 1 because we all want to go long, right? So when you have traveling or you've been traveling from red spike to green spike, there is a strategy you could trade with that very simple recognition of these 2 triangles. Right, and I'm going to talk about the trades done and documented with Thinkorswim platform, and basically you're going to see yourself very simple thing you learn out of all and can create a good what you call results for yourself. And again, there is no guarantee that they're going to come one after another. Sometimes they come next to each other. Then you got to figure out why it does that. Generally, when consolidating, you will see bunch of spikes. Stay out of it. All right. Magic Trader has a capability, will tell you which direction is going. and you have to be patient, but I like to have yellow bar coming up here clear way and belly formation. So basically all the sellings are done. All right, so we've been showing that there are so many documents with the Metastock or recordings. So we're going to spend little time. So these are 5 ingredients or 5 patterns we are been talking about. And I'm going to go very quick because today's presentation is this spike, number 2, and number 1, rate spike. That's what we're going to be focusing. But in nutshell, in general trading, when you have direction clear, we're going long. Right, so we're going long. So that's the number 1 pattern, right? One vertical line. Now these 2 lines are parallel, as I spoke to you, right? This has the value of 4, this has the value of 1, this is a blue line, and this is a purple line. And if they are above 0, that means we are bullish. Then green spike, we already talked about it. So we're going entry, it's an entry spike, we're going long. Pure health is a juice of the whole health indicator, so you don't have to go and become like an expert about it. So that's number 4. And HDR is not the ribbon you have with a Metastock, a lot of product. This is horizontal time risk. We have a pattern for that too, right? So this is all part of claims. So it's all tied up in the patterns. So basically, I figured out there are risks which has a time effect, and you have to pay attention to that. And I take to my advantage. As long as this is green, I'll give you some hint, and this is 1, I'm good to go. And if there is 1 missing, that means it's retracing. And I will even exploit that too, using the counter cycles, right? And waiting for the rates up to go up. Now, same thing applies here, all right? So it is a pattern number 1, red color, right? Only difference here between the other ones in that this has all the values below it. So -1 and -4. As long as they are parallel and below that, we're good to go. Right? And spike is the one which we're going to focus today. Right? When I see this spike, I could take advantage of that. Even half of that is good for me. And it comes in a scanner too. So that's even better. So we are earlier stage, getting up the run risk and entering the other direction at a low risk or going bullish in that time. So or if you are bullish and this spike comes in, we get the hell out of that bullish side and we go short. So same thing here, horizontal time risk, including this is even good entry. So you could trade with combination of all these things. I prefer the one catalyst like yellow bar with a bullish side, and here is a purple, right, or golden bar. So those are the catalysts for bear side. So now let's go and create a whole new way of trading. Very simple way. Keep all these things behind the mind. In case we need it, we'll use them. Otherwise, we don't need them. Right? So we see this spike coming up in a scanner. All right. And we look at the chart. It looks good quickly. Right? You could see and enter into conservative side, which is parallel lines, train up your mind. But the idea here is simple strategy. Once we have this spike, is anchored on yellow bar next to that here, right? We are going to vertical start shorting because it's already over this, right? So we're going to go and preparing for short once this is over, all right? We're going to show you on a chart in a few minutes. Let me do it right now. So this way you don't get confused. Let me bring it here. Can you see my chart, Jeff? Yep. You guys see my chart? Anybody's listening? All right.
Peter, we can see your chart.
Okay. So this is where, right, we were bullish before. Look here. We were bullish here on Apple. We had a ride. We had a yellow bar, all this happy stuff, and we went to the moon, right? I just randomly had it. So it was not part of the presentation, but I made it happen. So this is where I'll be looking to get the hell out of this security. So that's the idea. We were bullish before, we took advantage, and now we're going bearish, right? So bullish spike to red spike, and that's where I'm looking for entry for bearish move. And also, this happened to be 60. This is my simplest template, right? I use it every day, right? So I flip every security this way. So now here is bearishness, right, on that day, and it has a pullback, right? It says you it's a pullback. So here is controversy, and here is telling me forecasting. Look at this forecasting, minus 3.4. Earlier entry for me. Spike is there, direction line is there. What are you waiting for? Buy put option or short it. And that's the end of this trade. We say entry is done, right? And then you manage the trade. There's nothing secret about it. Look at this here. As I told you, look at this here. It's matching, right? Matching on a minus side below zero. What else you want for? So now I don't have to draw trend lines and all higher highs and whatever technical I used to teach people. MACD and RSI. I don't need all this thing. And we have nothing to do with all. But these are like magic line, specially designed. And I'll give everybody smart in this room, or everybody going to listen in the future. Every time frame has their own magic line. If it was the same things you're doing, those two lines similar looking, why I need to have separate magic lines for each time frame? And we have done all the way to 5 minutes. Do I use 5 minutes? No, because it consumes a lot of data. I don't need it. I'm the guy looking at the bigger picture. What is happening on a bigger picture? So this is a retracement trade going in, I know, because we just started, and I just want to teach you a little bit how I think. Even though we went long, it's too far from main area. So it's going to retrace. And here also, we need to take profits in order to, right, have profit taking. We've been going for a long time, Apple up. So we need to take some profit. So today market, look, and magic line is holding it back. They're resisting. So basically, we had a ride, take your money and run. And here, look, there is a nuances you got to learn. Here is a -5, -6. That means now I'm looking for a spike to go down. So that's the end of this shorting business or put option, because this has to come down. We can't keep on going. This is the weekly chart, by the way. But it is a bullish trend. Look at this here, going to the moon. And here also is telling that we're going to the moon. If you even enter here, even though it's risky, right? I like to be here, not here, right? I'm not a risk taker anymore, right? But if somebody challenge, I'll still make money because I got a lot of practice, right? So you need to, don't do it because for sake of like proving somebody. I am a conservative trader. I'll be scanning this thing, -5 is next to that. So I am going to go and make a decision to get in there utilizing smaller time frame. That is as simple as gets. How to enter. All right, 2 parallel lines, everything looks good. 2 seconds it takes me to make a decision. I do not need to worry about where is the oscillator. I forgot even MACD is the oscillator now, whatever, right? And RSI and OBV and all other stuff, no more. I just look at the Bailey. My risk is low, -5. I prefer -6 and -6. That means we're turning back. And now I'm looking for entry somewhere here. And that's the end of this thing, all this technical analysis. I'm looking for excuse, right? Look at this, pure health is good, so who cares what is happening? I'm looking at here. And look at this sudden switch. So existing members of the room or who are using Magic Trader, these are some hints I'm giving you. And people, oh, it's too complicated. What complicated? Simple thing I exploit myself, right? Don't make it too complicated. And that is the way you learn, right? And look at that. I just want to give you the power of this forecasting, which are many, many years old. Look at here, right? In a book, a reference book, you will see 3 guys in a row telling we're going to the moon. So what happened here? We're going to the moon. And this is the institution of my choice. All people are talking about gap trading and this trading and whatever trading, right? Listen, way before the gap happened, we knew it. And all the institutions were lining up. So where were you? So even if you miss the trade, you still have another opportunity because institutions are coming in. This is the way I trade. You don't need to make a project after project. Listen, these are the Goldman Sachs kind of institution buying it, right? Look at this here. This color belongs to that. That was the really big breakthrough in the industry. I was one of them, right? And I don't want to go too much into, we were buying. So I wanted to know how I could do it so I don't have to call my friends. What are you doing? No more. And these are my favorite entries. And even if you miss that yellow bar is there, another yellow bar, and a day before it gapped up. So what is so excitement about gap? We already knew where it's going to go. And you look at 60 minutes, it's going to tell you where it's going to go. We don't have much time, but I'm just giving you a little taste about how I trade. So people who are existing ones, right? People in my room knows everything, right? Because I teach them and I take advantage of in front of them. And this is the way I trade. And you're talking about patterns trading. There are a few thousand of these. I don't need to be expert about. You trade with one of them, you will do good. Right? Before this move happened, this pattern was telling a lot of story. But if you don't need to learn, don't need. When you graduate from the basic one, you do that. So from this pattern, I know it's going to go higher. I just have to look for some ingredients here or some clues, and I'm done with this thing. Worries, talking to my friends want to watch it. I'm not talking to them like I used to. I don't need to. I was just very blessed by God. I'm just be honest with you. Thanks to one attorney, and it was a real estate attorney, opened up my life for Wall Street. He introduced me. I don't want to talk too much about it, but somebody very powerful in this industry. He retired, but he's the one made the history, and I was part of the whole group. And what I learned, we started with acquisition side, and I got leverage to go into real trading desk where they keep a very high secret trading, and I have no restrictions, so I could see what they're doing. It is very rare you get that access. You're talking about these people are elite of elite. People who are listening all over the world, yes, they are the elite of elite. And I was fortunate also hanging around with Jeff and Kelly, and that opened up my doors for writers. All right, so everybody got it. We were long and we're going short. That's what this method is, simple that. So I want people to start not getting overwhelmed. Just look at what I'm doing. We were bullish and we're going bearish. You saw this spike coming in, right? So now that's the practical application. And the spike will be picked up from the scanner. So what I did with Metastock, all right, now I have to bring this one with this slide. Okay, I think software is playing games with me, I guess. Okay. Okay, so let's do one of the security right here. Same, you get bored, so we use this one, right? Let's Google. What is this? A Google or okay? Everybody likes Google, right? So let's open up this chart for Google. I was teaching you, going to teach you, nuances of option on a platform, but let's do this one is better deal. All right. So let's see here. We were negative, right? And this spike started coming in, yellow bar came in. This is the weekly chart, but look what happened after that. That's what we talk about. From negativity to positivity. And imagine you had to scan this and forget about all the teaching and everything. And you saw the yellow bar and a spike and looks good. And you enter here. Look at here. This week here, you got to use smaller time frame. That's where scalp swing comes in and you don't have drawdown. You know exactly where to enter. Or you enter here, same way, right? And you could scan it and look what happened. Now here was a big bar. So every time is a big bar, I take profit because I don't want to, I'm already up. So what do you want to be greedy? But who was force behind this scene? Institutional setup. These are C1, A1, B1. They're all institutional setup. But there was nothing there. But knowing the fact they are going on a retracement. Look at this here. It's containing the risk here. That's where I will exploit the health indicator that way. And I have no problem going and manage my trade that way. But How I know it's going to go up? Is a forecasting is going to tell me we're going to do to upside, right? It says here, look, it's Magic Trader earlier highs. I had a lot of discussion with the agency, which is government, and we had a different name. They scrutinized my software for 2 years, right? Otherwise, they won't let me go and release it, right? So basically, I had to compromise the thing. What it tells you earlier warning that we're going to go high, and it has a risk of on a scale of 1 to 6, 3 scale risk. So 3 risk is nothing compared to 6. So common sense, right? So it is good thing. Even though it went down, it gave me an opportunity to buy at a cheaper price, including option. Even though symbol is not there, no problem, right? Here it was there, so we bought the call at a cheaper price. Now it's telling me buy the call option. Unbelievable. So now you got to just see this smaller time frame on a 60-minute. If it has a similarity, something yellow bar or whatever, and you have an excuse to avoid the what it calls drawdowns, right? And yellow bars and all these things are all over the place. And there is a method to the madness, right? Bunch of yellow bar, what to do with that, right? We teach all this thing in a room. Oh, double spike. Look at this here. All the selling is done right here. And we're going to the moon. So we went, and today is telling me to get the hell out of that. But before that, it was telling here too. So now if you want to short it or put a buy, put option, but you got to be scared of these magic lines. They're going to the moon. Here is a kind of retracement, right? But that doesn't mean you cannot go long or short. You could go both ways, but depends upon what is happening here. Look, it is counter-cycling again, counter-cycling to this downward movement. So you got to look for an excuse. What is the excuse? Another spike. And I don't like to go in without this spike. I have some indication that is turning, is supporting here, right? And this is nothing but magic line plotted from daily to 60. We call that as an extension. There's a whole different theory, right? Because this magic line has all the magic. So basically, this is also part of the invention, right? So it is not just lines you dealing with today and for years. It's all different animal, but it gives me low risk entries, right? So the risk is contained here. So now look at these counter cycles to this trend. CT is a counter cycle. So all these things you will learn how to exploit the situation. Look here, it was telling me going down. Buy a put option even for a day trading. Nothing wrong with that. You entered here somewhere at the open, right here, and you had an opportunity to get it at a better price here. Even if you went there, take a damn profit and get the hell out of that and get in again. That's called scalping, right? So I like to make money here, and then I will wait for another opportunity. So I scalp it. Either it's spread trading or put option. It does not matter. You take that money, apply here, and now you have a more advantage. So I want to teach you a little bit how to make some, good trading decision. I cannot tell you should buy and sell here. Right? No recommendation again. All right. So be careful. I'm just doing for education purposes here. So let's go back again. Jeff wants me to show some charts, not only get you boring with these slides, which is academic. Believe me, I wish I never have to do that. All right. So these are bunch of scanners. Comes with that. There are 30 some scannings coming that each has a 12 some field, which even in the near future, Jeff gives me 24 columns. So I could reduce them and I could see bigger picture in one place. I've been asking them for since 2010, I guess. So hopefully their pressure is on you now. It can change trader's life. That's why I opened my mouth. Metastock has to do that. I cannot tell them what to do, but for trader's sake, it will be better suggestion. All right, so use one of those and exploit. If you want to find where the spikes are, right here. All right, let me see what time. Holy cow, we got to speed up now. Okay. All right, so as I told you, there are millions and trillions of combination of the risk. So what I did is 51 symbols for just option in this. Total that there are 112 symbols, and there are 11 highlights with different colors of bar. So yellow bar is not only one color, right? So when you do the combination of the risk, and each has a lot of long formulas, right? And Metastock programmer takes long time to figure the formula which I gave them to protect them, right? So you could see I cannot even comprehend how many trillions are there, and even combinations are 47 trillion. You're talking about billions, trillions. So this our calculation has to be done in order to analyze the risk. So now you know why people losing money. It's impossible, and we have just cracked the surface, right? And for your knowledge, I'm way advanced. I have a second, third, fourth, fifth generation already programmed. Dell, according to Dell and NVIDIA and Intel, they don't have those chips done yet to process all. I'm constant communication with them. That tells you where I'm going. And 32-bit will not work, according to them. Just like Steve Jobs in the 80s, I have evidence somewhere. He told my friend, one of the partner in my one business, told, I'm telling you all the extra stuff to get an idea. In 80s, he wrote right to my friend, Dr. Whoever it is, that I'm ready for the iPhone, but the industry is not ready. Don't forget, this was developed in 2006, was done working model. All right, I left this one. We're going to go quick. There are different symbols out of 50, 51 symbol. Look, just for option symbols on both sides. These are partial. So that means there are risks involved in every damn symbol. And behind the risk, there are many combinations involved. I'm just putting a front face. Each of them can do very well if you know how to trade with them. But just give you an idea. So one buy and one sell arrow does not end your future. I'm not knocking anybody down, but this is the reality. And it has to done with not the price, it has to done everything with the risk. And if you trade with the risk, your exposure is less in the market. Now, there are different ways you could do trading on a Thinkorswim platform, call options, weekly and monthly and day, right? So these are the different things. I'm going to leave this slide for a second. You could read it and you could take advantage of. The important points are theta and delta. Gamma is a little bit advanced for people. I write every day on a WhatsApp something about gamma because I love it. And gamma expansion is a killer if you are short, and gamma compression is the killer for the bulls, right? These are the advanced topics we teach here and there into my alert room. But for you, you worry about delta and gamma and theta, right? That's good enough to do good trading. And I use Thinkorswim platform. I tried other ones. I still have account, but you know, they are much advanced. And what I did is different strategies here. There are 150 deep and wide strategies, right? 145 plus all the normal things you hear in industry. People don't talk about these things. They don't even talk about a lot of things. Unbalanced, balance, right? We teach all these things, but you don't need to learn all these things. Simple thing, right? With this strategy I'm teaching you, just green spike to red spike and red spike to green spike, and you will do better. No guarantee that you will make money because I got to put disclaimer, I get in trouble. So now I put it in one slide, same thing what we talk about. So when you read the recording, whatever I teach it, I just put one line where we're going. We're going bullish, and then the spike came in, we're entering here. So that the number 2 is right here from number 2 to number 1, right? So that's where we're going bullish, and then we're shorting, right? Same thing here. We were short and we got bullish here. Right, so when you want to go short, then you follow 1 to 2, right? And this spike to this spike. So it's very simple. You enter here and you get out here. That's it. You buy a put, sell a put. Buy a call, sell a call. And the symbols are on the chart. Now, there is a scanner, which I told you, institution, right? It is given with a, so I always wanted to have little guys because they will never know when the institutions are coming and going. You could use that fine gradient scanner plus this one for calls and puts, and you will find them. There are tons and tons of opportunity, right? So 39 scanner can do a lot of help to you. So we talk about something very quick. I'm going to go very quick because we're running out of time. So this is one other invention. I always trade with Fibonacci's. Jeff, can we take a little bit more time so I can at least send the message here?
Yeah, Peter, you're fine.
All right. Sorry about that, but I thought that I could help you guys. All right. And we want to stay within the limit, but we're not going to go 2 hours here. So let me tell you another secret Magic Trader has it. And this has itself has thousands of secrets. You don't have to believe me. When I start teaching them, then people will be shocked. All right. And Jeff, for your knowledge, I reveal one secret with one of your guys. I'm not going to say, you got to figure it all out. It is fascinating. And I traded 2 years ago, and I went in underground because that's what was supposed. It's an institutional product, right? And if the guy is there, he will tell you. People saw me trading live with that. It was fascinating, and the stock did very well. Bunch of them. Okay, so long story short, this is not Fibonacci, right? I had a lot of discussion with the examiner, right? Because they are also traders, right? They put tough examiner on me, pulling my hair out. So let me be honest with you. This do forecast very in advance what will be the prices here. I want you to understand the concept. On 1024, on this is a SPY, I guess, or whatever it is, doesn't matter. But it is a SPY, spider, SPY. So on 1024, it already established horizontal line that this will be level and this will be all forecasted level. So Magic Trader having we call magic zone lines. I have a pattern on that, right? So basically these zone lines not necessary, right, working just like Fibonacci, but it adjusts all this dynamic movement of the market, of the security, and forecasting at the same time, and it is adapting every single changes. You don't have to believe, but you see the prices here, and they are not kind of similar, right? They work at their own. Look, upper line is horizontal, this is shifting, right? So long story short, it got horizontal and produce these results of the forecasted level, right? And these are the forecasting for you to go to the moon, right? So say for instance, we got institution buying, where are we going? So you don't have to do Fibonacci and commonality and whatever, right? However, I use sometimes, right, for my own sake, I will compare these levels with 60-minute because I'm entering on a 60-minute or 50-minute. So I have nearest resistance. So I know I could take profit or I could make a decision, keep on going, right? And you will see they cut it like a knife. So this was the entry time on advanced price perceptor. They said, software tell me buy. As long as you know there is a A1 is institution coming and this is a lowest risk or institution side, they're loading up, right? Oh, where is -5? They were there, left in a field, but they come to cycles. I did not enter. I could, right, if I want to, but I'm trying to discipline. I need this confirmation of half a spike, right? It comes, right? All the meta stock spike has nothing to do with us. And there is a PDF comes in your account and you could see how to trade with these spikes, right? We call it the anchoring. So this was the anchoring time today, but end of the day. So, but is the institution coming? I'm going there. Where I'm going? 424 magic zone line number 3. Where you're next here, next here. So I don't need to worry about Fibonacci as the projection, I guess. I forgot even how to use them. I used to teach all these things. I don't need all these things. This is where institution making decision. That's where we're going. Do you think this is me making decision? No. institution trading with those secret things, right? So I figured out. Long story short, my health is good, right? So I am taking call option position. Where I'm going. So my trading plan is right here. Where I'm going, right here. So I know how to take profit, or I could add. Either way, if it breaks about it, right, I will add. I will look at the chart. So I'm a technical trader. But again, where we came from, 2 to 1, where we going, where we came from, it was -1 to 2 here, and now we're going opposite, right? 2 to 1. So we're going to take profits and get the hell out of that. So what we're going to anticipating a rate spike in the future. That's what it tells you, this particular pattern here. All right, so now how it looks. Same thing. So I put a line here. This is the time. It tells me I'm going to go and make new levels. Come on. It was going down, and software is telling me that we're going to go here, we're going to go here, we're going to go here. Now you're talking about artificial intelligence. This is in front of you. What else you want? So now this is A. This is the Think or Swim platform. I took a screenshot right from the trading place, right in there where you trade. So this was the time I entered, so people get an idea. So if you want to go on a reverse engineering, go and do the reverse engineering, right? Reverse engineering means at that time, go and see what was happening that time, right? And this was the price of the option I paid. I put a limit order. I don't like market order unless I'm in trouble, because I want to get the hell out of that, right? I don't care how much it is. So learn from me. Limit order, I would rather let it go. And how much it took me to do analytical scan and this, no big deal. But I will not enter. So I took a limit order, 8.11, and this was the targeted level from this zone line. So I get rid of the zone line because Jeff likes clean one, but I have to still show something. And this is the scanner I use. Look at this here. So people who are existing ones, oh, we can't find the trade. Do some more scanning. That's what I tell them. Because they did not look hard enough. 39 scanner times 10 is 390 plus 12 columns. You can find a trade. Do the math and combination. So many trades. We don't have problem with the trades. We have problem executing. We can't do all these trades. Fast moving market. So you stick with little things. So again, look at here. And these are all pattern. You see the symbol. That's a pattern. So at the end of the day, that's what I'm showing to you. Already I'm in a profit. Close at 422 and it was open at 419. $3 on option. Go and do the math. Everybody with trading option, go and figure that one out. However, I could use here spread trading, and I don't want to go into that, but I like calendar diagonal, right? And I will trade weekly option. But this is sake of you guys. I did simple call option because calendar diagonal will give me more returns. No guarantee, but you have to know how to trade. I do sometimes butterflies, right? But not in this case. I like calendar diagonal because I am anticipating to go higher. So I trade options for many years, but I calm down. It's simple. All this thing, drive me crazy, and my health is not good. Jeff knows about it. Everybody around me knows. I just made it another life a year and a half ago. I was told I'm not going to make it. I beat the odds. One of the astrologers telling in India, right? You look at my date of birth and time of birth and place of birth. He said, "You're not dying." I said, "What are you talking about? All doctors are telling me I'm going to die." He said, "No, you have a lot of good things yet unfinished to help a lot of people." And I'm struggling. I'm telling you honestly. I can't find good people to help them. I don't like bad energy. After I had a stroke, my life changed. I'm all to do good work for humanity, helping a lot of people, but not the way I anticipate, not enough time. That frustrates me. This is a vehicle to help people. All right. So now again, let's recap it. So we came in here on that day and look at what happened. And I'm going by discipline. I will be out here. Let me be out. I'll be out here and add more. But that's not I did. I went just like you're going to do it, right? Another spike. Magic line is trending. And I waited up to here when the damn spike came in and got out somewhere here. And look at here. I got out here on this date and the total profit was 25.64. That doesn't mean every time it will be like that. I'm just doing as a stimulated hypothetical performance, right? CFTC want us to put all this thing on every slide. And I got news for you, copyright, because I had a discussion with Metastock. We prohibit people to copyright and we exercise those rights. And that's why lawyers want us to put copyright every slide. Copyright, right? Patents are there, all these things, including all these things are either trademark, service mark, all these things, we have everything in, even pipeline, more of them coming. I invested 15 plus years of my lifetime for this software. You may not understand the advantage yet because this is a brand new technology, so you can't find anything on a Google. I understand that, but I have patience. So Jeff is also getting shocking here. Certain things I never discussed with him. Is it true, Jeff? All right. So we came in here at $8.11 for the call premium going long, and we got out here. You don't need to be scientists to figure out, and this is the outcome. Go ahead, Jeff.
Oh, sorry. I didn't realize my mic was open. Sorry.
What I said that you're also getting some of the things first time you're hearing, right?
Yeah, I've definitely, yes, definitely.
I like to keep secrets because that's the all pattern holders are designed to do it mentally. But once this pattern is clear and all these things, then I talk about it, right? But there's a lot of things in a pipeline. Jeff will be programming for the rest of his life for me. Jeff, be prepared. I'm way beyond what you see here. I love it. I wake up at 12, 1 o'clock every day, including today. And my passion is to invent. And I have a lot of responsibility. All right, so this is the call option. If you want to look at it and go and think or swim, what was the price, and go on and do the soul searching. This is the actual printout from the think or swim, right? So this was the call options. I put it in, right? And this is the outcome, right? And I took my profit right here, exactly somewhere here. It says sold call options on that, and there is a time also there. So you could do all the investigation yourself. You have this slide. All right, so this is the screenshot from the different things I'm trading at that time. So this is the outcome which all want to know about. The trade language will tell you from spike to spike. I stayed in 25 days. Do you think I did it because I wanted to go on a record to show you actual trade, right? So I did what I need to do. So just in case you get trained of spike to spike. So I did not add, subtract, just believe the magic trader. And what happens? Average return per day, 12.64%. When I was telling people in Forex, because I was also managing money, right? 15% per day is a joke. But that doesn't mean nothing. You could lose 15% too. I got to always balance according to regulators. But you could see in front of your eyes. And this goes much better. If I start adding when I know those risks are low, this could go much and much higher. And I could make a mistake and lose too, but I keep my losses very, very small. And I learned to be patient for the entry. People in my room knows, very disciplined. I fight for $1 damn. I will fight it out, not to greedy side. I will not enter until that risk is situated in my favor. And most time, that's why I don't have much drawdown. But I could teach you all. It's nothing impossible with Magic Trader. You could do all these things. Now, A to B. So we started this journey at A. That's how Thinkorswim does, right? Unless I cut it off and put, but this is the actual tape, right? A to B, right? And we entered here on a SPY and got out here. So I did SPY because institution does that. So you got a little taste of institutional, how they're making so much money, right? And you could see here, this was the entry and this was the exit, right in black and white, what I show you on a chart. And you could read all these things, risk and rewards and all happy stuff, right? As long as you are positive trader, I'm happy. But I want to tell you, I'm very big in delta expansion, delta contraction, right? And Magic Trader has a lot of ways to see, and it reflects into, this was the delta expansion from 50 cents. So almost I took the profit at 100%. So it is like a dollar to dollar. This is a dream in a Wall Street, right? That doesn't mean it cannot be achieved by other people. They have different ways to do it. But with Magic Trader, you could do very well. Every day I trade and I document. Right now we're going to go on the opposite direction. We were bearish to bullish or whatever, right? Or bullish to bearish in this case. So let's go. So this is the scanner. I use it. You will have a screenshot. You could analyze, right? If you get subscribed, then you could go and check all these things yourself. Jeff will tell you how to do that. I'm not a sales guy. Okay, so now what we're doing here, we're going from bearish to bullish, right? So I entered a trade on this date. Where did it? Yeah, 10/18/23, right? I didn't have the time. I already have a lot of documentation, but this takes so much time, right? And I have too much responsibility. I'll get to that. I got about 3 dozen trades I could show like this. But right now, I got to focus on a lot of other things. Chap is bugging me for something we're working together. So put options, we bought it. Other one was call option. This is a put option. So regulator wants us to show both sides of the story, right? Everything I do, I have a, somebody on top of me watching me. I don't have much time. I spoke to Reuters 4.5 years ago, and I got audited, and the one pulls out the event, and she had a recording, so I can't deny it. She said, pull out the record, your record. We want to see something. And then she was laughing. I said, what makes you laugh, miss? She was a federal regulator, came to audit me, CFTC side, on NFA side. She said, we were expecting to give you violation. I said, what I did wrong? He said, you did everything right. So I was laughing that we couldn't catch you. They came for indefinite audit, and they were left in less than 2 days. Next day, in lunch, they said, we're going home. I said, what makes you going home? You told me it's going to take minimum 3 months. He said, you're doing better than most company in compliance. So Jeff, you know what? I could not believe they had that event, Reuters I spoke in California. I could not believe. And she said, pull it out and we have to self-certify it, right? Or somebody compliance. So in my company, I self-certify. And if I didn't have that signature, here we go, minimum $10,000 to $20,000 violation. This is what I'm living. Okay, so we bought a put option here at this price and we get the hell out of here, right? I could have gone in here, right? And that's what I did it because counter cycles, right? And -5, I'm taking my profit. I could have got out here also, but spike was forming and I took a shot and get out here. And let's see the results now. So this is the Thinkorswim I documented, right? So people who are trading with that. So this is the time I went in there. So this was the chain I took it on a put side, right? And this is the delta expansion on a bearish side. And one day I'll teach all you guys, hopefully for free. If Jeff allows me to, don't say that. Okay, so we bought a put option and this is what we're following, right? Put to bullish side. we're going to take the profit when it turns to bullish. That's exactly I did it, counter cycles. So now I put it nicely here so people who are a little bit knowledgeable can see here. 13th day we had this profit from day one. We entered here, right? The price was here and price was here, right? So basically, let's do the math here. So here also, what was the outcome? We bought the put option at 447 and we got out at 20, 5 times. So people talk about 1x, 2x, and whatever x they're doing. A simple thing, $4.40, 47 cents I paid and made 20.75. And take this and divide by 4.47, and that tells you, and times 100, that's your x. So we don't need to brag about a 5x and 3x. It's simple thing. I put $447 and it becomes $20 and what do you got, 2070, whatever, right? So $447 become $2,075. In how many days? 13 days. Which bank gives you? That doesn't mean you go to consistently making. This happened to be right timing. Now, what I did for some people to get an idea what else I do it. Look here. This is the same tape. I only separated these two, A and B, for demonstration purpose, but they also came from here. But you could see here, I am doing scalping in between, I'm doing a swing trading in between trades because I get bored. What I'm supposed to do? I'm waiting for get out, right? So what I do, I created myself a trouble. Look, I traded here, what, QQQ, my hands, scalping. So here, 4.47, what do you get, 4.44 become 4.74, right? In how many minutes you go and figure out later? I do scalping. I do swing trading for other things too, like swinged, right? What I swing with, CRSP. How many days you go and figure out here? And here is the outcome, $1.53 premium, 6,000. So what are you kidding? You divide by 5 times, 500%. But that doesn't mean you're going to do in every trade. I don't know until I go in there, right? Magic zone lines tells me, look at here, gain per trading day, 38%. If I tell you all these things, you tell me I'm lying. Here is the proof. This is the advantage of Magic Trader. You got to put up with learning curve, right? This is because it's overwhelming. Because like which fish I should eat? Is it tilapia or whatever the fish? Salmon I got to feed. All these fishes are in front of me. Which one I should eat? Eat one fish at a time. You pick up one fish to produce such a good result, or even to make 10% of $3, 3.8% a day, which is better than a damn bank. This is what Magic Trader does. That's what he does is magic. For skeptics or whoever it is, look at how I went on a spree, right? First time that if I do scalping on a spread trading, right? Not a big thing, just simple vertical spread, either put or side. I did not hundreds, not few hundred, a lot. And I had a losses, 8 losses, some of them my own mistakes, right? Because I have a habit living the last trade, because if I got opportunity in scalping, I will go, right? And then direction change, risk change, and I use the same one. And minute I realize I take the loss, right? And one was SMCI. I took $75 just on that loss. Minute I realized I put up, they wiped me out in a way. They took my $75 losses, but that's a mistake. You got to take a loss. Not ego is coming back. Nothing comes back. I'll pay more commission. It's better come back. So you get an idea. You could do things like that. Meanwhile, you could do some swing trading too. So that's why it's a scalp swing. I could turn into swing because my family believe I got to abstract the money for my risk just in case market crash like today. I have some money that comes from my scalping because that's our in and out in a day, a couple of minutes sometime. So I love, we trademark these things and I teach that strategy. Here is something about me. I don't want to talk too much, but I right now have Series 3 and 34. I have Series 7, 60, or then I have other licenses in different areas, which I don't talk about it. So I am more restricted than you think. So my behavior will be always, don't do this, don't do that. Don't talk about, one guy telling me yesterday, why you cannot tell me to buy and sell? I said, I don't. The regulators will come on my throat and put me in a jail because I don't want to do things because you're not my client. Even if you are a client, I am not managing. I took the exception for a while until I take this thing off the ground, right? Because I can't do both. It's very intensive managing people's money. And minute I made a commitment with Metastock, I'm not taking any more money. And I told even the regulators, I'm not managing anymore. I will come back. I have a license, right? Oh, you could do up to 8 people. No, I do not, because I cannot put the time for them. And my daughter, who played a big role, and this girl has gone through so much learning. Every businesses we have it. She participated in there from 9 years old kid, and I'm proud of my children, right? And this girl sacrificed her young life for me, but she wound up with a very good position, all right, just like I wound up in a World Bank, right? And I did not help. I have a lot of friends there, right, in a big company, but I did not help her at all. I did not even tell them she's working for you guys. Let them figure it out. All right, so this is the last slide, and then Jeff can take it over. All right, this is another example. In this case, per day, 21.2, right? So unfortunately, I didn't have a time for those losses. $100. I'll pull it out. Those, I got to do all these things. It's too much work. But I had losses, right? 7 losses during my journey, in recent journey, and I'm preparing myself. I have to do for eye surgery. I have retina hanging by thread, right? So any given time I had to go. So I'm holding up a lot of stuff. I got a lot of problems. I was a victim of wrong medicine. Somebody gave it to me, and 4 or 5 years destroyed a lot of my organs, right? So luckily I'm alive. Okay, that's about it. Jeff, take it over, please.
All right, thanks, Peter. Okay, let's talk a little bit about the VRTrader Elite. The normal price on this is $199 per month. And he's talked about it. It's a very, very big add-on. It's got 58 different indicators, 47 explorations, 2 expert advisors, templates, a manual, shows all the symbols and highlights. It's a very, very immersive application. There's a lot of stuff in it. So in addition to that, Peter does an education room where he talks a lot of different educational room topics. And here's kind of a list of all of the topics that you can see. I obviously don't have time to read all of these out loud, but he definitely covers a lot. And one thing that's actually impressive to me is how many people really, really, really like his room. When they try it out, as soon as they go into they always make sure their payments are current. They really, really enjoy the room. They want to be in there. And we get a lot of room satisfaction out of the room. So what we're going to do today, he also has a Facebook group and a magictrader.com website. What we're going to do is normally MagicTrader Elite, 3 months of it would cost $597. With the educational alert room, that would normally be $897. So the total value there would be $1494. The special that we're going to run today for it is if you buy 1 month, we'll give you a second and a third month for free. So instead of paying for all 3 months, you'll just pay, or instead of paying $1494, you'll pay $448, and that'll give you access to the whole program for 3 months. Not only is it going to give you access to the MagicTrader Elite add-on, it'll also give you access to the alert room. And so to do that, you can give us a phone call. We're available at 800-882-3040. You can go to metastock.com/saleschat, or you can also go to metastock.com/conf-promo. So with that being said, thank you, Peter, for coming. We really appreciate you. As we wrap up today, what I'd like to do is I'd like to thank all of our sponsors. Holy cow, I just turned on I just realized camera was off. I turned it on and I went bam. So I do want to say thank you to Stocks and Commodities Magazine for sponsoring the events. They've been such a great sponsor of ours over the years. I hope you've learned something. I hope today has been helpful for you. If you want to find out more about stocks and commodities, go to www.traders.com. In addition to that, I want to say thank you to the CMT Association, a very huge, well-respected organization. You can find out more about them at cmtassociation.org. You can call them at 646-652-3300. And I also want to say thank you to TechnoTrader. TechnoTrader is a very, very well-respected company. They've been doing, Martha has been working with us for years. She does a lot of really good education. We appreciate her sponsoring the event this time. And if you want to get some free courses from her, you can go to right here, copy. Let me go ahead and grab this link for you. You can get some free mini courses, and they cover a broader array of topics. I'd recommend you do it. It's free. If you like it, you can kind of look at some of the more education that they offer. As for us, of course, with Metastock, thanks for being here. I hope you enjoyed today. I hope you enjoyed the presentations. Again, with Metastock, it's going to help you scan the markets. I not just love Metastock. I love being able to scan through the markets, find those opportunities, go after them, helps you test trading ideas, helps you forecast probable price movements and get real-time commentary and signals. I also love the look and feel of the new version. Just absolutely love the kind of all of the new technology that they put in there, the new container, all that kind of stuff. If you haven't done the upgrade, you should. I would. It's my favorite upgrade. I say that on every upgrade, but this one is incredible. It really is, and so is the last one. And I'm very, very biased, but I think if you get into 19, you're really, really going to like it. So you can go to metastock.com/conf promo. You can go to metastock.com/sales chat. You can give us a call, 800-882-3040. So we got one more day. Tomorrow's a little bit of a shorter day to kick off our Memorial Day weekend. We're going to kick off with a good friend of mine, Adrian Mance. Then we're going to go straight into Rick Sadler, Bobby Hiller, Zahir Anwari, Anne-Marie Bain, Jacqueline Monroe, and AJ Brown. So kind of and some other really good speakers lined up for tomorrow. I hope you're able to join us. I hope you've been enjoying the event. Thanks for coming. We'll see you tomorrow.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.